stranded inside the Gulf. Today, we've heard from Iraq, Kuwait, and even the UAE, which have all started curbing some output now because storage capacity is becoming a real issue. And the market reaction has been fast. Remember, only weeks ago, many forecasters were pointing to a global surplus next year. Now, traders rapidly pricing in a potential deficit. Goldman Sachs also warning that if the strait remains disrupted, oil prices could push towards 150 US dollars a barrel. Europe also now watching this very closely. G7 finance ministers now reportedly even weighing a coordinated response to the oil shock by releasing strategic reserves. It is the most significant threat to global supply since Russia's invasion of Ukraine, and if it drags on, it could very quickly change the color for the global growth and inflation outlook through the course of this year as well. Andrew?
So one of the things that there seems to be even an additional fear on top of this about is how this is affecting China. And thus far, obviously, China has remained uninvolved in this scenario, but there seems to be chatter about if things continue apace this way, whether they could somehow decide at some point to get involved.
It's a key question at this point, of course. China and Iran have been very close associates, not just politically, but also economically. China is the primary buyer of Iranian crude, and while that supply is being curtailed, it is pretty clear that policymakers in Beijing have been suggesting that they will not hold back on their relationship with Iran. So whether or not we see additional support, be it militarily, financially, or otherwise, is a big question mark in these markets at the moment as well. What's also interesting is what's happening inside Iran as well. We've just seen this really significant transition in Tehran that also suggests perhaps the road ahead here is going to be very long as well. No doubt you've seen Mojtaba Khamenei, the son of the late Ayatollah, has been revealed as the new supreme leader. It's a move that essentially signals one thing to the markets, and that is hardline continuity as well. No change with the relationship with China, and no change in the stance towards the United States as well. Back to you.
And then in terms of just containers, obviously the biggest issue is where do you put all of this supply, to the extent that there's going to be a separate issue at some point. Where is that conversation going?
Well, the constraints around supply are really concerning at the moment, and indeed the storage conversation is a growing risk too. What we're seeing is these major producers in the Gulf being forced to shut production in because the reality of the situation is you can pump the oil out of the ground, but if you have nowhere to export it, then it has to be put into storage. At the moment, the estimate is we have about 25 days worth of storage remaining. That is 25 days until the storage capacity of the region is full. So of course, we are seeing producers already scaling back some production. But of course, how long they're willing to hold production off and how long the Strait of Hormuz is going to remain closed is a key question mark at this point as well. A lot of analysts that I've been talking to saying the biggest unknown at this point for anyone exposed to these markets and for global energy trading right now is the duration risk. We still haven't got any signals of a potential off-ramp, either militarily or diplomatically, and that's obviously a key concern right now as well. Part of the reason we also saw this enormous spike in the price of oil, and of course risk assets also in the crosshairs here, not just in Asia, but in Europe and likely in the United States today as well.
Okay, Dan, thank you. Appreciate it.
Thanks for your,
No.
as opposed to the known unknown. The Goldman, you guys remember the super spike? There's been a couple of super spikes. So the Goldman follows zero much. Well, I looked at it, there was one, the 350 was 2022 Ukraine, but back in 2008, the last time there was
That's
a big
what the one I remember, yeah.
How do we remember 17 years ago? It's still.
This was shocking at the time.
It was.
What was the number?
That was only 200 back in 2000 commodity super cycle. But Goldman's got a history.
That they were making.
I remember.
Yeah.
But I thought so too. 2022 was much too recent. This seemed long, and they got some flack at the time for it. But I think they were talking worst case scenarios or best case. Really. Energy Secretary Chris Wright says the U.S. wants to get oil, gas, and other products moving through the Strait of Hormuz. Wright made the comments in an interview yesterday morning before the price of oil had spiked in the evening.
The plan is to get oil and natural gas and fertilizer and all the products from the Gulf flowing through the straits before too long. And I may break a little news here, but one large tanker has already gone through the straits with no issues at all. So as the general just described, we're massively attriting their ability to strike with missiles and drones, and that rate of attrition will increase in the coming days. So we'll be cautious, we'll be careful, but energy will flow soon.
And Wright said he believed energy prices would return to their previous level within weeks.
That's the big question, how long this drags on, and we will continue to have to hear more on that as well. Reports say that the United States, in the meantime, is considering an operation that could see special forces deployed to Iran to secure the country's supply of highly enriched uranium, pivotal in making nuclear bombs. It's unclear whether an operation would involve U.S. or Israeli troops, or both. Speaking on Air Force One over the weekend, President Trump said seizing Iran's uranium is, in his words, something we can do later on. The president also said the United States could send ground troops into Iran, but only for a very good reason.
We've got a lot more coming up as we try to assess what this all means and what comes next. What investors need to know this morning as oil prices surge and volatility spikes, and the latest Wall Street fallout now from the Iran war. But first, before we do that, check out some trading in Asia overnight. South Korea's Kospi index falling more than 8% at one point, triggering a 20-minute halt in trading. We've got a lot more coming up on Squawk. Don't go anywhere.
Welcome back, everybody. Investors looking for high-quality stocks among the new round of market volatility. Joining us now with some picks is Stephanie Lee. She is Hightower's chief investment strategist. Stephanie, these are some weird numbers we're watching this morning. There was a lot of activity over the weekend, and my guess is the first thing people are thinking this morning is, what do I do? Do I expect that more declines are coming? Do we think these higher oil prices are going to mean more turmoil for the markets? How are you playing or thinking about any of this?
Sure. Every once in a while, we do get an opportunity like this to actually think long term and to try to find blue chip quality companies that are on sale that get thrown out with everything else. Remember, it wasn't too long ago that we had Liberation Day in April of last year, and the market is up 36% since then. And that's even including all of the volatility today and the last couple of weeks. So we have kind of this, pun intended, tug of war going on, right? You have higher oil prices, and the velocity of the move is what's so startling, and the inflationary impact, obviously, that it's going to result in. We also have higher yields, which is kind of surprising to me. On the flip side, we did get, other than the non-farm payroll number last week, we did get some pretty good data. Retail sales, core up 4%. We had weekly jobless claims still quite low. ISM manufacturing, we've now had 2 back-to-back readings north of 50. We haven't seen that in 3 years. And productivity is also on the rise. So you kind of like have all these moving parts. I'm trying to find some companies that are just getting thrown out and that look attractive to me and where I can see long-term upside.
The only thing I will add to that is I hear your point about what happened with tariffs last year, how the markets dropped, and that was the exact wrong thing to do, was to be selling into that. But at this point, the S&P 500, at least as of Friday's close, was down by, not even 4%, 3.75%
Right.
maybe. You're talking about stocks that are still pretty near all-time highs. Is that a different equation? Do you wait to see any more of a pullback, or you think that it doesn't matter as long as you're buying the right names?
Well, I think there's always uncertainty in the marketplaces, right? And this is kind of, right now, we're at maximum uncertainty. We really just don't know. We just don't know the timeline in terms of what's going to be happening. But if I wait for certainty, Becky, I'm going to miss some stocks, and I don't want to miss some stocks. I'm trying to buy low and sell high, and I know people say that, but they don't. Most people buy high and sell low. So I'm not sure I'm not going to pick the absolute bottom, but I can nibble along the way, and where I see there's some really strong fundamentals. And I would say all the data that I cited earlier about the economic environment, it is leading to better earnings, double-digit earnings. So let's just haircut it a little bit. Even if it's 8 to 10% earnings growth, that's still above trend. Trend is 5. So, and not only are you seeing better revenues, you're seeing operating margin expansion. And so you are seeing operating leverage. And so as these stocks come in, pick your favorite names and you just buy a little bit on the way down. I know it's really hard to do. Trust me, it's really hard to do. But if you believe in like #1 blue chip companies out there that are getting hit, I think that's your opportunity for the long term.
Let's talk through some of the names that you've been buying. You have never owned Netflix in the past, but now you do. That stock down, I think,
Yes.
about 26%. What is it that you like, other than maybe that deal? It's not going to be saddled with a pretty expensive deal.
Yeah, no one really liked the deal. We were all wondering why they did the deal to begin with. So it's now a simpler story. They're going to grow earnings 20%, revenues 12 to 14%, operating margin expansion. They just resumed their buyback, which is about 2% of the float, which is about $5.7 billion. And it's not cheap, for sure. It's at 30 times estimates, but the historical average is 34 times. And so this is one that I'm going to just start. I've started kind of just a nibble, and if it does pull back, I mean, it has nothing to do with what's going on.
Got it a little
with
bit
the
too
war.
late,
So
didn't you,
I
baby?
think that this is an opportunity. Blue chip, best in class, great balance sheet. So I think it's an opportunity.
I do too.
Target
20
is
bucks ago.
a stock that you've owned shares of for a very long time. What makes you think that now is finally the time that things are turning? Because we've thought that before.
We did,
low below.
and I have owned a very small position, but I have owned it, you're right, for a very long time. But I do think this new CEO
You
is doing a
weirdo.
better than expected job, at least in my view. And what was encouraging to me, they're focusing on not only product and assortment, and that's store experience. They need to improve store experience. We all know that. If you go into any Target, it's not a great experience. So they're working on that. They have a huge investment plan to do that. But what was encouraging to me is within the quarter that they just reported, the numbers, the same store sales got better each month. And in February, they were actually positive. We haven't seen positive comps at Target since 2024. And so I think this company also has an opportunity to see margin expansion. They're running at about 4.5% operating margins. They have been seeing 6.6% on average from 2010 to 2019.
You're having a hard time, ain't you,
If they
baby?
can get back there, I think they can do well more than $8 a share in earnings, which is what they're guiding for this year. 15 times earnings and almost a 4%
Do
dividend.
we got this on recording?
Okay, Steph, thank you. Great to see you this morning.
Thank you.
But coming up with much more on the spike in oil prices and the
She's
possible
losing it.
response from the White House, and then at 8:10 Eastern, we're going to speak with House Majority Whip, Minnesota Congressman Tom Emmer. At 8:40, former White House senior advisor Amos Hochstein joins us. Stay with us. Start by. The Labor Department on Friday said 92,000 jobs were lost. That raised the overall unemployment rate to 4.4%. Women faced a challenging month, and the jobs data highlights a widening split in the K-shaped economy, not only by income, but also by gender. Sharon Everson joins us now for Sharon, good morning.
Good morning, Joe. The unemployment rate for women held steady for the first 2 months of 2026, according to the latest data from the Bureau of Labor Statistics, at 4.1% in February. But that figure masked the sharp rise in Latina and Black women who are out of work, and the pay disparity in the type of jobs that women hold. Women joined the labor market at nearly 3 times the rate of men last year, reversing a trend from the past 3 years, driven by an increase in jobs in education and healthcare, where women hold more than 3/4 of those jobs. Yet these gains have not translated into greater pay. With fewer open roles, wage increases for men and women have fallen. The so-called job change premium, that extra pay, that boost that workers typically get when they switch jobs, has declined. Women's pay raises are less than half of what they were in 2019, according to the Bank of America Institute. They analyzed 70 million consumer and business accounts and found that women's spending has also slowed. Affordability pressures and the pay squeeze have resulted in women being more selective in shopping for clothes and choosing value for groceries, dining out, and travel too. The more ways to stretch the dollar, sign up for my Money 101 newsletter using the QR code there, or go to cbc.com/money101.
Who owes more money? Is there a divide when it comes to debt in the?
Well, overall, men usually have higher debt loads than women, but women often have a much greater student loan debt that they have to pay, and then
Yours.
paying that back. That's a lot.
Mine is yours. No, mine, not you. Yeah.
You thought it was gonna be you.
No, not really. No, not really. I figured didn't know what to think. That was a suggested question. I didn't think anything.
They're also, though, more likely to go to seek credit counseling to help pay down that debt and come up with a plan. And I think that's part of what the financial advisors and the credit counselors that we've talked to have said. There needs to be a plan not only for paying down that debt, but for negotiating from the start for salary at a higher salary rate, and also for increases along the way. Knowing what the going rate is, paying attention to the pay transparency that is available now, and making sure that you're advocating for that higher pay from the beginning to help pay those rising expenses, including debt.
Yeah, blah, blah, blah.
I have not shopped in a while, and I kind of had a price shock incident that
What was that?
if you go to like a needless, Neiman Marcus.
Neiman Marcus.
Yeah, needless markup, which was bankrupt tax. I mean, how they could be bankrupt. I don't know what the margins are. Do you know what a pair of shoes costs, Andrew? I thought.
Men's shoes.
Yeah.
Depending on the kind of shoes
Well, I
you're
thought a
getting.
pair of shoes was like, if I was really gonna splurge, 150 a piece. 300.
shoe?
That's like,
Yeah, 150 per.
that's like Edmund,
Alan Edmonds.
Allen, maybe.
300,
maybe, on the
300.
cheap end.
That's what, I know that now.
But
Yeah.
see, now you're doing what women are doing. More women are seeking value now. They're not, men are usually the ones who are looking like,
You know what
wanting to
they-
pay the
you know what they
premium.
cost her?
How much?
You know. They
Shoes?
Yeah, they start at $1,000 for
For a pair of fancy shoes these days for men, you could be
Well, I
paying
mean-
$700-800.
no, or more.
But the fact
If
that
it's
you would
like,
even go somewhere where you
Ferragamo.
look
Yeah.
for $1,000 shoes
I was walking
is
out.
different than what we would do.
Right.
We wouldn't
I was
even
walking
do
out
that.
and I looked at some flip-flops.
Yeah,
You know,
For $1,000?
No,
You're at
800,
Neiman Marcus.
850.
You're at Neiman Marcus.
I know, but
It's
I'm
just
still
like buying-
who's in there buying these
It's
things?
just like buying, have you tried to buy organic eggs recently? You know,
They're not $1,000.
I don't even know what.
but they're
basically
I
it's
don't
a
even.
dollar an egg these.
I don't even know
Yes.
what. I don't even know what that is. How are they different than? I mean, there's a shell on them. What difference does it make? What?
Well, you could get cheap
The
eggs.
chickens are
You-
fed organic.
Oh,
You are just underscoring what Bank of America Institute has
Affordability.
found. It's about
Affordability.
how women seek value and men are looking for premium prices.
I mean, it really was shocking to me because I'm kind of coddled by. I haven't shopped.
Right.
I haven't shopped. I have someone that.
You have someone doing that, okay.
Right.
Name was
Yeah,
Penelope.
the staff.
Right.
And people, we are clothed to some. We couldn't look. Well, he could, but I wouldn't look. This is as good as I look, which is not that great. Is not. It's because of our people. People that watch every hair.
Just do this.
Yeah. See.
Tie, just a little bit up. A little bit up. You want? There you go. Bingo. It's looking good.
Usually that's what I do for you. most
Yeah,
of the
everyone's gotta help.
days, right?
Takes a village.
We help each
Takes
other.
a village,
That's
but-
part of the whole charm of this. Sharon,
Always a pleasure.
Only like once a week for you.
Always a pleasure.
You look forward to it?
Always,
Okay.
always.
All right, before we head to break, let's take a look at the VIX this morning. I just want to take a quick look because it is now trading, I believe, at its highest level since April of 2025 or earlier today. It hit a high of 35.30. It's come back down from that. It's still up by about 9% from where we were, 32.12. Remember, last April was when Liberation Day was announced with tariffs, and that's when we saw a lot of volatility in the market too. Today, it looks like we are back near those levels.
Okay, coming up, we've got some chaos at the airport. The partial government shutdown leading to hours-long lines as TSA agents go without pay. We're going to bring you that story right after the break.
Travelers at airports in Houston and New Orleans faced hours-long wait times yesterday amid staffing shortages at the TSA. Airport security workers are going without pay for the second time in 6 months because of the partial shutdown of the federal government. The Houston airport system urged passengers to arrive 4 to 5 hours before their flights yesterday. I believe New Orleans was telling people to get there 3 hours early. We heard from people who were at Newark Airport who said that they were dealing with the longest lines that they've seen. Again, you start to see lines like this and you start to wonder what the pushback will be, but those TSA employees going without pay again for the second time in 6 months.
All right, coming up, we're going to get into the ongoing fight between the Pentagon and Anthropic and the AI race between the U.S. and China with Goldman Sachs President of Global Affairs. And a reminder, get the best of Squawk Box in our daily podcast. Follow Squawk Pod on your favorite podcast app and listen anytime. We'll be right back.
Welcome back to Squawk Box. Joining us right now is Jared Cohen. He is the president of global affairs at Goldman Sachs, co-head of Goldman Sachs' Global Institute. He's also a former CEO of Google's Jigsaw, and he's somebody who knows a lot about Iran. And so we wanted to talk to him this morning and try to understand what is about to happen here and what you're thinking. I mean, we're watching the price of WTI sort of through the roof here, and I think there's increasingly worries about sort of how China may react to all of this.
So first, I mean, I think if you look at the current state of affairs, Iran.
By the way, give everybody your background, because you know about Iran more than most in a sort of unusual way.
So I lived in Iran for part of 2004 and 2005 before they kicked me out of the country. I was doing research back then on underground youth movements and opposition groups. Followed the country very closely since then. One of the advantages back then is 67% of the country was under the age of 30, and I too back then was under the age of 30, so it was a nice research advantage.
So you're in touch with a lot of people, though?
I'm in touch with a fair amount of people, yeah.
And so what do you think is about to happen here?
So if you look at what's coming out of Iran right now, what it looks like is a reverse fireworks display where they began with the finale. And I think part of what's confusing to people is, on the one hand, you have sort of a centralized leadership in Iran that can't communicate with each other, can't congregate. The assembly of experts that chose the new supreme leader did a virtual meeting for the first time in history. But what's really going on behind the scenes, what I hear from a lot of my contacts, is that there's an assumption that the now sort of deceased leadership of the regime set in place a decentralized war machine that is effectively running on autopilot. So people keep assuming that this will play out the way it played out in the past, which is the U.S. continues surging military activities with Israel, decides it's done at some point. The Iranian regime translates that as capitulation to its own people, and everybody gets on with it. This time around, there's no leader in Iran that has the authority, the information, and the access to that decentralized machine to guarantee cessation of hostilities. And so it's not clear to me what the off-ramp looks like until that autopilot effectively runs out of batteries.
And you think it runs out of batteries in how long?
So
this idea of the fireworks show, you said that was the finale first. So you think they've spent all of their fireworks?
Well, so I think the question is, why do a reverse fireworks show at the beginning? I think that this became increasingly clear at the beginning of last week, which is one, if part of that finale is a significant amount of ballistic missile capability, you need to get a lot of that out the door before the launchers get preemptively attacked. So you've seen that undertaken. But the Iranian regime, which has been very active in the war between Russia and Ukraine, understands how drone warfare has changed the battlefield. And they've actually watched firsthand as both Russia and Ukraine have built the multi-layered defense systems against drones. Those multi-layered defense systems didn't exist in the Middle East, where the defenses were largely architected for the occasional drone or the occasional ballistic missile coming from the Houthis or somewhere else. And so the reason to start with the finale is to overwhelm the interception capability, where the cost ratio is 200 to 1. The good news is we are likely pretty close to through that potentially catastrophic first phase, where you have missile math problems, where the barrage of missiles overwhelms the interception capability to the point where they can't replenish. We're not completely through it yet, but the number of drone attacks are down 90%. The number of ballistic missile attacks are down more than 80%. So we now go to kind of phase 2 of this. Phase 2 of this, I would argue, is less potentially catastrophic, but maybe more emotional, because you start to get into the asymmetric shadow war. And so if you want to think about what this kind of, quote, autopilot and this decentralized...
What does that mean?
So it's a function of what are Iran's domestic, regional, and global capabilities. So we've already seen them, venture into some areas. They hit data centers for 2 of the hyperscalers in the UAE, which kind of gets right at the core of the big hypothesis and the manifestation of that country's ambitions. You saw them hit a desalination plant in Bahrain. This is a huge, huge issue in both the UAE and Saudi Arabia, but also Qatar and Kuwait. Other things that they could do, they could cut some of the undersea cables in the Red Sea. The Houthis have been very quiet, haven't done anything in the Red Sea. A lot of my contacts in the Horn of Africa have been very confused about this and very worried about it. Of the 17 undersea cables that go through the Red Sea, that carries more than 90% of the Europe to Asia internet traffic.
In terms of the Strait of Hormuz, which seems to be the central point here, of contention right now. How long do you think it can remain closed, and how safe would it be to open it?
Yeah. Well, first of all, a point of history here. I wrote my dissertation on the Iran-Iraq War. That was the closest until now that the Strait of Hormuz ever came to shutting down, completely. And at that time, the U.S. sunk half the Navy and shot a civilian aircraft down, and it still didn't close. So the problem you have here: 45% of Iran's oil comes through the Strait of Hormuz. 20% of total oil consumption worldwide. By the way, you also have a third of the world's fertilizer that comes through there. Saudi Arabia is not just the Saudi Arabia of oil; they're also the Saudi Arabia of fertilizer. And until drones and missiles stop flying in the air, even as a one-off, no matter how much you offer to subsidize the insurance costs of ships or escort the ships at enormous cost, you're just not going to see LNG reactivated through the strait. You're not going to see large quantities of oil reactivated through the strait. And so that, to me, is where it connects back to the autopilot piece of this, because nobody really knows what comes next in this decentralized war machine, because it's not being centrally managed.
Okay, so now I want to add China to your story.
Yeah.
What do you think China is thinking as all of this is playing out?
Well, doing sort of armchair psychology of Beijing is always difficult, but if we just look at the facts, it was already the case that they took a hit from Venezuela in terms of access to their energy resources. I would argue Iran is much more important from an energy perspective. 80% of all of Iran's seaborne exports in terms of crude go to China. That's roughly 1.35 to 1.45 million barrels a day. That's somewhere between 13 to 16% of China's total seaborne crude imports. So it matters. That being said, you've seen China be very quiet, not just in terms of actions, but in terms of rhetoric. But look, if you think about geopolitics and markets, things don't really happen in isolation anymore. I think the market, when it gets microdosed with geopolitics, tends to build a degree of immunity to it, and the market tends to ignore how one geopolitical event over the course of many months and years impacts another geopolitical event. And of course, you're thinking about the Taiwan Strait, the South China Sea, the East China Sea.
So Jared, is there any way we can degrade the ability for Iran to put down internal protests? And the people you talk to, don't they want to get back out on the streets at this point? But the guns are still pointed at them, aren't they?
Look, the Iranian people have been protesting as long as I've been, going all the way back to when I traveled there. The problem is every generation forgets the massacre against the previous generation. You had the Green Revolution, you had the protests in 1999, you had the Green Revolution in 2009, you had another significant protest a decade later, and they just killed 32,000 people. The people are reluctant to go to the street in the face of a regime fighting for its survival that just killed at least 32,000 of them. Now, one of the things that I would just sort of...
More than that, the existing regime has been saying that we are going to make sure we take anybody down.
And it's not worth it to them, right? I mean, they've seen this play before. And the problem that Iran has had, and this is the problem it had when I was there in 2004 and 2005, the population overwhelmingly dislikes the regime. It's actually a pretty secular place. Only 3% of Iranians go to Friday prayer. They can all tell you what they don't want. I've never met a significant number of Iranians who can tell you who in the country they want to lead and who they want to follow. And in a world of social media and a world filled with young people who are very agitated, it's very easy to start a revolution. It's very hard to finish one. And if you don't have new leaders with new last names who can take a country forward, who can inspire the people, it's very, very difficult. And they're never going to accept, a member of the diaspora from outside, regardless of what their last name is. And so the regime understands that in the dictator's playbook, without an opposition figure, which they've effectively gutted, it's going to be very difficult. And then you contrast that with Venezuela, where the security institutions in Venezuela are very similar to what they are in Iran, right? A conventional military, paramilitary, and vigilante groups. Venezuela's had multiple very popular, very elected opposition figures. They had Enrique Capriles, they had Juan Guaido, Maria Machado wasn't the one elected because she was disqualified. And even with credible opposition leaders there, they've not been able to translate it. So it's even more difficult in Iran where they don't have opposition.
So does it morally make sense that the United States said no more of these 32,000 slaughter of its own people, or do we? I'm trying to figure out how long you let that go, and then maybe throw in the nuclear threat down the road preemptively?
Well, I think they're not letting it go, right? I mean, I think that this is,
Is that good? Is it good that this happened? Because it looks, we could get bogged down again, and you know that there's no appetite among the American people.
We could get bogged down, although you see a lot of analogies being made to Iraq. I actually don't think that's a correct, the Iraq analogy is a correct one. I think it's a dangerous one. Iraq is a very sectarian country, very non-secular country. I spent a lot of time there as well. Iran is 90+% Shia, as I mentioned.
But only 3% go to prayer.
Only 3% go to prayer, so pretty secular. It's ethnically diverse, right? 60% Persian, roughly 16% Azeri, and then a sprinkling of Kurds, Baluchis, Lurs, and Turkmen and others. But there's not a recent history of modern ethnic violence in the country, and so I don't have the same fears in Iran that I have in Iraq. I do have a fear that if the people do come out in large numbers, the regime is capable of slaughtering way more than 32,000 people, per what Becky was saying.
I'm just trying to
I
understand.
just can't believe you went there and were like hanging out. I mean, what were you thinking?
Well, it was interesting when I was there. It was kind of before
In your 20s, I'm going to Iran.
I had convinced the Iranian embassy to give me a visa based on my desire to study the glory of Persepolis. I told them I was an archaeology student at Oxford, and I think maybe they just weren't using the internet a lot, and they didn't really fact check it.
Weren't you looking behind yourself? Did you sleep well?
I did sleep well, yeah. It was.
Can I just go back to one question?
Yeah.
Because I imagine all of the clients at Goldman Sachs are calling you over the weekend or last week saying, what about the price of oil? How long does this stay elevated? Does this actually come down? The president said that this is all going to end quickly and then the price will come down quickly. Maybe that's true, maybe it's not. What do you think?
Well, I go back to this shadow asymmetric phase that we're now in, and not to keep repeating myself, but we don't know how much battery life is left in the autopilot. I listed some of the things that could happen. They have sleeper cells in West Africa. They have sleeper cells in the tri-border area. They could hit an embassy, a cultural center, or a consulate in any one of the 11 countries they've attacked. They did it in Argentina in the early 90s. They tried to kill Adel al-Jaber when he was the Saudi ambassador to the U.S. at Cafe Milano in Georgetown, of all places. If they were willing to do it then, why wouldn't they try to do it now? And so you have to imagine that anything they've been capable of or said they would do in the past, they're capable of now. And the question you have is it a matter of sequence, or has even the decentralized war machine?
But given what you're saying, then the suggestion is this is not over in 4 or 5 weeks, that this is over in years or months or some kind of very long, protracted period. Because not only are you talking about some sleeper cell doing something terrible, you're then, I imagine, thinking that the United States is going to exact some form of retribution again, and then we're into this, right?
Yeah, I mean, look, nobody knows that those things will happen. I'm just saying it has to be on the table. And what I'm told, until you have 48 to 72 hours of nothing new happening in terms of a new type of escalation, it's hard to be optimistic that there's an off-ramp on the table. When you get that 48 to 72 hour window where there's no new escalation, you can conclude that the autopilot's battery is sort of faint, but it's sort of like the FARC still fighting in Colombia in the jungle. It doesn't really matter anymore. So we just haven't reached that point yet. This could last a week, it could last months. I think if it doesn't end this week, it's much more likely to drag out significantly further.
Okay, Jared, thank you for coming in this morning. Appreciate it. Thanks, especially on this morning.
All right, when we come back, the Trump administration reportedly looking at pushing for an economic deal with Cuba. We have that story next. But first, the AccuWeather forecast from meteorologist Bernie Rayno.
For much of the country, it feels like April and early May. Your exclusive AccuWeather forecast: 85 in Dallas, 71 with sunshine in Chicago, New York City in at 70. A little cooler, but nice in Boston. Watch for the thunderstorm Jackson, New Orleans, and Houston. We'll keep it cool and wet in the Northwest. Maybe even a shower in San Diego. If you're doing any traveling, your AccuWeather travel forecast, only some fog will cause some problems for a time this morning in Atlanta. To help you make the best decisions and be more in the know, download the AccuWeather app today.
Trump administration is reportedly working on an economic deal with Cuba. In a report in USA Today, it says that an agreement may be announced soon and could include easing restrictions on Americans' ability to travel to the island. Also under discussion, potential relaxation of U.S. sanctions, deals on ports and energy, and what the paper describes as an off-ramp for Cuba's president. There have been talks, President Trump himself saying that Cuba could be next as recently as last week.
I don't know what next means, but
Right.
yeah.
Coming up, much more on the price in oil this morning, the spike taking place, including factors that could drive them even higher. We're going to talk about it. Or potentially bring them down even in the near term. We'll debate both sides of that when Spark Box returns. Just before 7 a.m. on the East Coast, you're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Joe Kernan and Becky Quick. A lot going on this morning. Crude prices surged overnight. WTI briefly topping $119 per barrel before pulling back. Reports saying that the G7 countries, including the U.S., plan to discuss a coordinated release of crude from their strategic reserves. And Energy Secretary Chris Wright saying the U.S. wants to get oil, gas, and other products moving through the Strait of Hormuz. He said he believed that energy prices would return to their previous levels within weeks. Travelers at airports in Houston and New Orleans facing hours-long wait times yesterday amid staffing shortages at the TSA. Airport security workers going without pay for the second time in 6 months because of the partial shutdown of the federal government. The Houston airport system urging passengers to arrive 4 to 5 hours before their flight yesterday.
Talk about oil and the spike in oil prices. Joining us now is Kevin Book, Clearview Energy Partners Managing Director. Kevin, it's good to see you. We were, a couple of weeks ago, we were pretty well supplied. the world, was it not? Is that not the case anymore? And I guess I'm getting to the difference between spot and futures, and whether there is a premium or a fear premium built into what could happen versus what's actually happening.
Good to see you, Joe. The difference, I think, is also maybe the one between stocks and flows. So right now, the flows are interrupted. That's obvious. The question is what's going on with stockpiles. We had an enormous build in 2025, but now we're drawing down stocks as production starts to shut in. Eventually that catches up. So when you hear talk, as Andrew mentioned, about a coordinated action, you may not be able to close that flowing supply gap right now with government strategic reserves. But what you can do is you can shore up those lost inventories. And one of the strongest statistical relationships in oil analysis is the inverse correlation between price and inventories.
Right. So you have a better idea than we have how long this lasts and ultimately what the peak in oil is? And will we be at 85 in 2 weeks?
Well, it depends on what happens on the ground or really in the water. I guess that has to do with questions outside of what we cover directly, but let's ask, are we getting more assets moved to the region? Is either side planning to say, all right, we give up? It doesn't look like it right now that the latter is true, and the former looks like it might be true. So maybe we're going on longer. At some point, you have to ask, what are we going to get on the U.S. side, right? Markets price scarcity, democracies reward popularity, and scarcity isn't popular, so something's got to give. And also there's a question of what it would mean to escort ships through the strait past anti-ship missiles. How much do we have in the way of interceptors? What does that look like in the end? If this goes on weeks, then I think we start to get to the point where supply balances demand on price. And until supply shows back up, price is going to destroy demand.
So we know Iraq, for example, oil production, a third of the normal rate. What does all this mean for our friends in Russia and China?
Well, it means that Russia's barrels, which previously were discounted because they were sanctions distressed, are now able to command much more of a premium than they would previously. It means that China, which was already buying barrels closer to full market price from some of its previous providers as the buyer of last resort for those providers, is going to have to pay more. But it also means that China, in 2022, Joe, we had a situation where former President Biden asked China to draw down their strategic reserves, and they didn't. This time around, they have an incentive maybe to do so.
Where's our SPR right now? And have we been trying to, has the Trump administration been trying to build it back up?
This may be one of the most catastrophic mispricings of risk that's come out of the U.S. Congress in a long time. At the start of the Trump administration, you may recall, in President Trump's second inaugural address, he talked about filling the SPR to the top. Energy Secretary Chris Wright said, let's get $20 billion and fill the SPR. It would have been a time-consuming process, but underway. Instead, Congress gave $171 million. So far, they've done 1 million barrels of fill. Again, you wouldn't have a full SPR right now. We're at about 415 million barrels. That is an extremely considerable resource. I don't want to diminish it, but the time to buy insurance is when you don't need it.
Hey, Kevin, let's think about this from an inflationary perspective. And if these price hikes last, I've seen lots of different rules of thumb. One I saw yesterday was that a 10% increase in Brent translates to about 2 to 3% increase in food prices. What other rules of thumb do you have, and how long do you have to see those price hikes before they actually start to kick into some other inflationary places, whether that's airline prices, prices at the pump, food, and the rest of that?
Well, so there's the economic question and the political one. The economic question requires a little bit of a duration, and a transient spike over sort of long-term averages shouldn't really change inflationary pictures very much. Political story actually might be quite different because people remember those price spikes a lot longer than maybe politicians might like. On the other hand, the other rule of thumb I think you hear a lot is a 10% increase in oil prices is 0.4 of a percentage point increase in inflation. And it's because what we're looking at right now, particularly these barrels, these medium sour barrels from the Gulf, The middle distillates, the things that move our freight, that move our planes, that make our economy go. Those barrels are the ones that we're looking at missing. We're looking at products rising, becoming expensive, and staying that way until those inventories replenish. This is where that strategic action has some value, even if it can't close the flowing barrel gap. The idea to try to take the edge off prices further out the forward curve.
You're not obviously a military guy, Kevin, but if a week from now you heard the Straits open, for whatever reason, everything's been degraded, the ability to stop ships, whatever, would that be a surprise to you? Is that possible?
Well, I mean, we originally modeled a 1 week straight closure scenario when we were looking ahead at this for the last several years, and we're past that now. So yeah, of course it's possible. It was sort of our baseline expectation. We thought maybe mines would get laid down and then get cleaned up. We're not even looking at that right now, though. And the question is, what is stopping the ships? It's not just insurance; it's actual risk. It's assurance to the safety of the crews and physical cargoes. And it's not obvious, as long as the conflict persists, how that would change. Now, the conflict could end. There's a lot of mechanisms at work that could provide safety, more warships escorting tankers. But 1 week is starting to look a little optimistic right now.
All right, Kevin, thanks.
Thanks for having me.
Nobody knows, obviously. We're asking you to do things none of us can do. Checking the futures this morning, 500 points now, downward pressure on the Dow. Let's get to Dom Chu with a look at this morning's pre-market movers. Hey, Dom.
All right, so good morning, guys. We're going to start with a look at airlines on the back of what's happening with Iran. Broadly lower as that conflict in the Middle East continues and oil spike raises jet fuel prices overall. Analysts at Morgan Stanley are attaching some estimates, noting that jet fuel has become an early pressure point as operations stall out in the Strait of Hormuz. Jet fuel prices have surged 58%, and more than 25,000 flights have already been canceled since the conflict began. So airline stocks overall down roughly 2.5% to 3.5% in the early pre-market trade. Moving over to the media and a look at Paramount, Skydance, and Netflix, both lower this morning after analysts at Wells Fargo resumed ratings for both of those companies. Analysts there rate Paramount, Skydance at underweight, saying that the Warner Brothers Discovery deal was a win, but that the debt that comes along with it is riskier when compared to other companies out there. Meanwhile, Netflix is resumed at equal weight. Those analysts expect the company to rebound from the Warner Brothers lost bidding and move back to plan A, which they say is investing more in content. So Paramount down 2.5%, Netflix down 1.33%. And finally, shares of Adobe are lower this morning after getting price target cuts from Wells Fargo and Citigroup. Wells Fargo is cutting its target to $405. It was $420. That's an implied upside of 43% from Friday's close. Analysts there are worried that AI will continue to disrupt the software company, but hopes that Adobe's AI adoption aid will growth in 2026. Analysts at Citi cut their target price to $315 from $387. That's an implied upside of 11% from Friday's close. They also hope AI adoption will help the company, but remain neutral as they want to see if those results down the quarter show this week later on show signs of growth. So keep an eye on Adobe down about 1%. For more on those and other analyst calls of the day, just head over to cnbc.com/pro, where subscribers get all the context and detail around those notable upgrades and downgrades each day. Joe, I'll send things back over to you guys.
Okay, Dom. Thanks. We'll see you later.
You got it.
Okay, coming up, shares of BlackRock tumbling 7% on Friday. This after the firm limited withdrawals from a flagship debt fund. We're going to dig into the problems in private credit and contagion risk. We'll do that right after this. Welcome back to Squawk Box. So redemption requests have been jumping among semi-liquid private credit vehicles. This is something we've been talking about and worrying about for quite some time. Joining us right now is Simon Johnson. He's the former chief economist at the IMF, a professor at MIT, and co-chair of the CFA Institute Systemic Risk Council. Is also the co-host of a new podcast with Gary Gensler. It's called Power and Consequences. There are two views of this, Simon. The industry would say these semi-liquid instruments are working just the way they're supposed to, which is if too many people rush to the exits, they put up the gates, and that allows them not to have to sell assets at fire sale prices. And this is a feature, not a bug of the product. The other side says this is a real problem, that people don't understand what they've actually bought, and that this is the canary in the coal mine. Which is it?
I think, honestly, Andrew, it's a bit of both. I think retail investors, as you know, have been brought into private credit funds relatively recently. They thought they were getting something different, something more liquid than what it is. But I agree, there are gates. If you read the terms and conditions carefully, you shouldn't expect to have full liquidity under all circumstances. So, to some extent, this is a reasonable repricing.
The broader question, I think, about private credit right now is how much of it represents, if it does at all, a genuine systemic risk to the system.
Well, I think that's the problem, Andrew. We don't really know. The opacity of this sector has become a problem, and I think more disclosure, at least to the authorities and probably publicly, would be healthy for everyone. I don't think the industry necessarily has anything to hide, but the lack of obviously market pricing to real market valuations, that does give you some concern. And then what exactly is the exposure of the banking system, Andrew? As you know more than anyone, it's always about the banks, the core banks. How exposed are they? How hedged are they with regard to the most problematic players in this space?
And how connected do you think they are?
My guess, Andrew, is they're quite connected, and probably more connected than we would be comfortable with, just because it's a hot sector, and private credit's been grabbing a lot of exposure to the AI and data centers and so on and so forth. So the banks often plow into this kind of exposure, but not all banks, I'm sure, and so more data, more transparency would be helpful to us.
If I was Mark Rowan, who runs Apollo, or Harvey Schwartz, who runs Carlyle, or John Gray, who runs Blackstone, and we were having this conversation, I think they would say a couple things. I think they'd say, first, it's a small piece of the total economy. Depending on your math, it could be $2 trillion, could be maybe $3 trillion. I don't know if you think it's $4 trillion. So in terms of just the total pie, how big is it? And how much does that unto itself portend a problem?
So it's probably 2 to 3 trillion, Andrew, so no more than 10% of total credit in the US. It's relatively small. It's grown very fast. And of course, financial issues often arise when you have this kind of fast growth. Could it be the tail that wags the dog? Yes, absolutely. But I hope not. And I think if we get some more transparency and if there's more disclosure from those distinguished people who run the industry, that would really help assuage the fears.
Talking about disclosure, who do you think should be providing that? Should this be a self-regulated scenario, or should there actually be genuine regulations that provide requirements for such disclosure?
Well, Andrew, as you know, we've had this discussion, 1,000 times the last 100 years in the US. I think self-regulation is great when you can get it and if you can make it work. Some light regulation, I don't think we're talking about anything like bank regulation at all for this industry, but some light regulation requirements on the disclosure to the SEC, for example. But that, as you know, has been discussed in the past. The industry doesn't like it, they don't want it. But I think this kind of pressure that we're seeing recently may bring them around.
When you look at the list of folks who are in the private credit space, and on our screen, which you probably can't see right now, we have Apollo on the list, we have BlackRock, we have Blackstone, and then we have Blue Owl Capital. Blue Owl Capital is down the most right now, down about 2.2% just this morning. How do you think about them, and do you think about them as an outlier, or again, are they sort of a proxy for other trouble to come?
Well, that's always the question at this stage of the credit cycle, Andrew, again, as you know very well. So we always get some outliers. So you always have some people who've taken on a bit more risk, had a bit more exposure to the risky activities, whatever you think that is, data centers or software services, I guess, for the case of Blue Owl. And then the question is how much trouble are they in? How far are they as an outlier? You've got to calibrate everything relative to that. That's the key question of the week, well, apart from oil prices. But we don't know. And what's the data on which you would base that assessment? Hard to say. And therefore, it's understandable that certain kinds of investors who value liquidity highly would rather exit right now.
Do you look at it? I mean, I know you're not giving investment advice, but given how much some of these stocks have come down, this is not the funds, this is the companies themselves. But on the back of some of this, is there any party that says maybe it's oversold?
Well, look, I think some of these are very well-run companies, Andrew, with deep pockets and some very wealthy people behind them, including wealthy people who've tapped into their own personal funds to handle their redemptions. So reputation matters a lot, Andrew, and I think reputation is made and broken at a time like this. It's unfortunate that the global pressures are also converging on us and on the U.S. economy and perhaps even on this sector at the same moment. But as Warren Buffett likes to say, this is when you find out who's been swimming with and without their clothes on.
Can I just throw one final question at you? We've been talking all morning about what's happening in Iran and these sort of global cross currents around us. Price of oil obviously spiking, stocks falling. Questions about what's going to happen to the Chinese economy and how they're looking at this. How do you see this all playing out?
Well, this is big trouble, Andrew. I mean, I think the U.S. can withstand it. We have, our strategic petroleum reserve. We produce a lot of energy. We export a lot of energy. But the world is in trouble. I mean, a lot of important economies with whom we trade a great deal are massive oil importers, and a lot of them get their oil at this moment through the Strait of Hormuz, which is substantially closed. So there's a problem for Europe. It's a problem for manufacturing powerhouses in Asia. That's our export markets. So I think that the global economy has got a major problem here, Andrew.
Okay. Simon, thank you. Thank you for joining us this morning.
Still to come this morning, the impact of the Iran war, surging oil prices, and the ongoing partial government shutdown on the markets. You can see this morning the Dow futures are now off by about 600 points. S&P futures down by about 80. NASDAQ futures down by 308. It comes after a down week for the markets last week. Squawk Box will be right back. Right now, for a look at the latest news on Capitol Hill and the impact on the markets, we want to bring in Libby Cantrell. She is PIMCO's head of U.S. public policy. And Libby, I think people are maybe a little surprised at this point. This looks like it's going to be a more prolonged action than most had been anticipating and maybe than we've gotten used to recently.
I think that's right. I mean, you even hear members of Congress saying the word war when they were, I think, choosing their words more carefully just as a week ago. I think that the real question for members of Congress is, will they have to now vote on a big supplemental, which is something, of course, that I think a lot of them would want to avoid. They voted on this War Powers resolution. They voted that down, sort of green-lighting the president's ability to continue with the Iran strikes without congressional authorization. They'll have another bite at the apple, though, in terms of the supplemental, and that might be a harder vote for at least some members of Congress heading into the midterms.
And the way you start to think about this from what it will all mean for the markets, quick surgical strikes are very different than something that carries out, than something that causes elevated energy prices for starters. It's something that we see higher prices here at the pump, but nothing like what people are facing in Europe and Asia at this point.
No, I think that's right. I mean, obviously, war is a little bit easier to start than it is to finish, obviously, not to be glib about this, obviously. And so I think that just, politically speaking, this is something that I think everyone wants to avoid on Capitol Hill. From a market's perspective, obviously, higher prices of oil, more government spending, that could lead to higher deficits. You could also see the bond market react to that, which is obviously our specialty at PIMCO. But generally, I think that the issue with war here is that it becomes harder to control. The end game may not be something within the administration's control.
What happens from the political perspective? You mentioned that this is, $2 billion a day that we're spending at this point. Congress is not going to want to reauthorize or re-up that, but you also have midterms that are coming this year.
Yeah, so I think if you go back to 2022 and you go back to spring of 2022, everyone was talking about sort of a Republican wave, and that's because there was a lot of enthusiasm among the Republican Party. Gas prices were very elevated. President Biden's approval ratings were sort of sub 40%. And so there was sort of this sort of optimism, both in the market, but also I think on Capitol Hill, that there'd be a Republican wave. That failed to actually manifest. So I think that our message to clients is there's a long way between here and there. So while the metrics look positive for Democrats in terms of taking back the House, and of course history is on their side. The party out of power, on average, picks up 26 seats in the House. The generic ballot, the enthusiasm gap, president's approval rating, all of those things are pointing to gains among Democrats. But I guess it's just too early to sort of say conclusively. So while the betting markets all have Democrats winning the House, the Senate, so it seems like it's they say is a coin flip. I think we would put the chances lower. It's just too early to sort of say what the political read-through here is.
What do you tell more broadly at PIMCO people to do as they try and contemplate whether this is going to stretch out or not?
Well, for us as sort of active managers, it's a great opportunity for us to sort of take advantage of dislocations. I think there's some things that we can sort of fade, some of the things that sort of sell off that we think have good value, highly collateralized or what have you.
I keep hearing people saying, okay, it's a great opportunity. We haven't seen a sell-off yet. For the broad markets in particular. You've seen oil prices go up, but really, the Dow futures down by 600 points, S&P futures down by 75. I don't even think that puts the S&P 500 down 5% from the all-time high.
No.
So are you advising people to wait? Do you think there will be a bigger pullback before you can be opportunistic, or you think this is it?
Well, in the fixed income market, credit, kind of came in sort of priced to perfection.
Sure.
So our view had been an underweight to sort of credit just generally, and we thought there was more value in securitized products, agency MBS, for instance, sort of similar spreads, but also the implicit guarantee of the U.S. government. So I think that we do believe that there's probably some more room to fall in terms of sort of the credit space.
You're right. Just
but again,
for the yields on the 10-year, let's say, we're only at the highest level since February 9th. This is not a massive dislocation of anything that you've seen here.
No, you're starting to see the curve move a little bit more. So again, we look at sort of the shape of the yield curve relative just to where the the 10-year is trading, and we think there's sort of opportunity in terms of that. But there's probably, again, in some of the sort of panic buying, we think there's a good opportunity for those who do have their kept their powder dry. We went into this again pretty underweight to credit, and maybe there is more room to go at this point, but some good opportunities as well.
Libby, thank you.
Coming up, entertainment ticket giant Live Nation reportedly reaching a deal with the DOJ to settle its antitrust case. We're going to bring the details about that in just a moment. And then, U.S. Attorney for the Southern District of New York, Jay Clayton. He's going to be with us this morning in just a little bit. Don't go anywhere. Squawk Box returns on what is turning out to be a volatile Monday morning.
Good morning, everybody. Welcome back to Squawk Box. If you're just waking up, let's take a look at where the markets stand. Stock futures are pointing to a sell-off on Wall Street. The Dow is now indicated off by about 650 points, obviously off the worst levels that we had seen in the overnight session, where the Dow was down by almost 1,000. S&P futures down by about 80 points. NASDAQ futures off by 307. Check out Treasury yields. The 10-year has picked up, as has the rest of the complex. The 10-year now sitting at 417.5. It's at its highest level since February 9th. It did touch as high as 421.6 earlier in the session, or in the pre-market. The 2-year is sitting right now at 3.6%. Been watching the dollar as well, and the dollar index overnight as high as 99.69. It's now sitting at 99.29, but that 99.69 was the highest level since November of last year. Been watching the VIX as well, and the VIX is pretty elevated. It's up by about 10% this morning over the course of the last year, up by 38%. Right now it's sitting at 32.40, but earlier it had been as high as 35.30, and that's the highest level since April of last year when we saw the tariffs that were put in place for Liberation Day.
Meantime, Live Nation now reportedly reaching a settlement with the DOJ over its antitrust case. A Political report saying the entertainment company is going to pay $200 million in damages and open parts of its platform to rival ticket companies like SeatGeek. The deal avoids the sale of Ticketmaster, which the company acquired in 2010. It's going to be interesting to see what happens to the price of tickets in America.
And shares of Hims and Hers Health are soaring. Reports say Novo Nordisk will end its public feud with the company and plans to announce a new partnership to sell its weight loss drugs on the Hims platform. Bloomberg says an announcement could come as soon as today. Novo scrapped the partnership last year after Hims refused to stop marketing and selling copycat drugs. Novo filed a lawsuit against Hims in February over a copycat version of its new Wegovy weight loss pill. And coming up, Jay Clayton is going to join us. He is the U.S. Attorney for the Southern District of New York. I want to ask him about that violence at a protest outside the New York mayor's residence over the weekend. Squawk Box coming right back. Violence erupting outside the New York City mayor's residence at Gracie Mansion in Manhattan during a protest and a counter-protest. This video shows the NYPD tackling a man who allegedly threw a suspected explosive device. Joining us now is Jay Clayton, U.S. Attorney for the Southern District of New York, former SEC Chair. You up to speed on all this, I guess, right, Mr. Southern District?
We are indeed looking at this with our partners at the FBI and with the NYPD. With that video, Joe, every New Yorker should be proud of the way the New York Police Department, the cops on the beat, reacted to that situation. And anybody can tell that, like, you know, we're looking at, anybody can tell that this is something that's highly dangerous in a crowded situation. And the New York cops, they don't run away. They run at the danger. And based on what I'm seeing there, whatever the charges are, if there are charges, we'll go through the process. But this is remarkable police work, remarkable bravery. I think as New Yorkers, we should all be proud of the way they handled this.
And what do we know about the device itself? It wasn't like some, you know, jury-rigged pipe bomb. This was an ISIS type IED.
The reports are that it contained ATP, triacetone, triperoxide, which is a volatile explosive.
How hard is that to figure out how to do?
Unfortunately, and let's talk about this, the ability with the internet, with social media, to radicalize and to instruct people has become a great danger. You know, we all, let me make this point. We as New Yorkers, we as Americans should recognize that the ability of foreign actors to use communications channels, whether it's whatever your favorite platform is, you know, X, TikTok, to influence people, to foment discontent, is much greater than we anticipate, than we know. It is something that we are seeing every day. You know, these protests that you're seeing, they're not organic. Many of them are the result of foreign activity designed to divide us.
So in New York City, so we have an anti-Islamic rally outside the mayor's house, and then that's countered with ISIS-inspired
well, just think about this.
Anti-protesters.
Let's not talk, I want to be careful not to talk about what we just saw, but let's talk about protesting like that generally. You take a fact that there's going to be a protest that happened.
One way or another.
One way or another. Think about how easy it is for foreign actors to use social media to amp up both, to throw gasoline on the fire on both sides. And that is happening. It's not theoretical, it's happening.
And I guess it's something you need to be concerned with. So then, you know, we're in a war with Iran now, and the whole city's on alert, I guess. Sleeper cells. Any update you can give us on any type of info? Would we hopefully hear about some type of activity, or are we just totally blind to how many Iranians got in the last 4 years under Biden? 900, something like 900, 750 were released or something.
I do think everybody should recognize that the ability of malign actors to enter the United States was much greater over that 4-year period than it has been in my lifetime. And we heard Chris Wray, you know, when he was FBI director, you hear Kash Patel when he's FBI director, tell the American people, yes, because we had an effectively open border, the risk from foreign malign actors is much higher than it was. That's just a truism. And when I do my job, I have to accept that that's the way the world is right now.
You watched last week, we might have touched on Anthropic a couple of times, something Andrew is very interested in. Did you have a take on that? You want to get Jay involved? He's a lawyer. Go for it.
What do you ask me?
Well, no, I think the big question in this instance is not so much does the Department of War have the permission to do whatever it wants. Of course, it's designating a company supply chain risk in this context. Other departments in the government effectively banning the company effectively as retribution for not participating in the deal with the Department of War. You saw that it seemed like that's what the Treasury was doing. How, and in a capitalistic system where hopefully you have free markets and the like, having politicians out there effectively sort of suggesting don't do business with these people.
Let's take politics out of this. Let's take some of the companies just for the moment.
The reason, can I just say, the reason why I think politics is part of this is you had OpenAI ultimately reach a deal with the government which is very similar to what Anthropic had been seeking.
Sure. Well, I'll put the politics back in.
Okay.
Take it out. Large company.
Yep.
Has a contract with a supplier.
Yep.
Like pick some of the companies, CEOs come on all the time. They do not like the way the supplier is behaving.
Yep.
Fire the supplier.
Yep.
Terms of the contract, whatever they are, they can fire the supplier. They can go to their competitor.
Mm-hmm.
I see no reason why the Department of War can't say, you know what, the deal we struck, we don't think you're following it. We can, fire you. You know what? We're going to fire you from all of our subsidiaries and all of that.
100%.
So that's.
And do you think the government's a different type of supplier?
Do it.
In this, or a different,
I do. I think it's a
different type of buyer, rather.
I actually do it by law. The government is a different type of buyer. The government has more powers to say that contract's no longer working for these reasons than most commercial people do.
Interesting.
And there's things like debarment and the like. Like if you misbehave as a government supplier, you can be
I think the
debarred.
question is, did they misbehave?
Well, but I'm just saying.
Okay. But I think there's a big question as to did they misbehave and whether this will ultimately go to court and a judge will decide they did not misbehave.
Just like in a commercial situation. But know that the government has additional abilities in most situations. I'm speaking generally here. Most situations to terminate contracts, to bar contractors
Right.
from participating.
Do you think
in
it's a
government
slam dunk that that Anthropic wins? That's another thing that we talked about.
I don't know.
I think he's raising those questions is because he probably thinks not, if the government's got more extensive powers. Jay, can I ask you how the case is going against Maduro and put it in the context of wire reports last week suggesting that the DOJ may be building a case against Raul Castro in Cuba to potentially go and arrest him the same way that Maduro was arrested?
I can't speak to those types of operations. What I can tell you is we in the Southern District and other places in the Department of Justice, and this is a whole of government approach, narco trafficking and combating narco trafficking has gone way up the priority list. We are looking at people who, I would say, engaged in activity just like the type that the Maduro indictment, the conspiracy indictment charges throughout Central and South America.
As in Mexico?
Well, I think it is no secret that Sinaloa and other places in Mexico have huge narco trafficking problems.
We had Sean Maloney on last week. He represents some of the prediction market sets. I guess we have a deal with Kalshi too, but did you guys get the impression in talking to him was almost like the old, broken glass in a bag as a gift for kids for Christmas? It's like, oh, Dan Aykroyd, remember? Yeah. This is the greatest thing. Of course it's, what do you mean? Well, why would you think it's not safe for kids to be playing with broken glass in a bag? Do you have any concerns about prediction markets if you just no holds barred for what you can bet on at this point? Someone's going to get killed.
Let's recognize what futures markets, swaps markets have been used for over the past 100 years. And they're risk transfer markets, mostly utilized by sophisticated players, by
right,
like airlines.
You're contrasting from prediction markets.
Yeah, well, but it's the same structure, and so what you're doing is bringing that type of structure to much more narrow issues on a retail basis. Now, there is law in place. There's I applaud the CFTC chairman for getting out there and saying, we have jurisdiction here. We, the criminal authorities, have jurisdiction for criminal behavior. But let's all recognize that we're not talking about what I would say is investment banks, end users, and sophisticated liquidity providers facing off against each other. We're talking about people who are retail players, and we ought to recognize that we regulate retail markets different from institutional markets, and that is the question right now. How do we deal with this retail participation in these types of markets?
And it's also rife for
the thinner the market, the thinner the market,
but you can,
the more opportunity for manipulation.
It seems like you can game the outcome and use a lot of different methods to make it not a fair.
And my prosecutors are busy looking at what laws we can use that are like insider trading laws. So prediction markets on a security, we can use the securities insider trading laws, wire fraud, mail fraud. Fraud is fraud. You know,
It's not bad. You don't think it's like gambling?
pardon me?
Not gambling? Prediction market?
I think that it's a spectrum. Yes,
But it sounds,
I think
it sounds
there's
like if you're
clear.
saying, I think you just broke some news. If you're saying your prosecutors are looking at ways to prosecute these types of cases,
Absolutely.
and what kinds of laws would you then use if I don't have a fiduciary duty necessarily to, you know, if you know, I don't know, Steck is over here. He works on the show. Sorry to do this to you. He knows what the first segment of our show is going to be every morning.
Mm-hmm.
Okay?
There's a case on that. The Heard on the Street Wall Street Journal case.
He's
Yeah,
driving,
except
he's
it's
driving a new,
Steck's
he's driving a new
ability.
Porsche.
It's not, but it's not Steck's
right,
requirement to
Steck?
not tell anybody about that. This
Corvette?
is
I don't know.
not, this is not
Does Steck
legally.
have an employment agreement here, or
Well,
terms
but-
of
Sure, but
terms
that's
of-
a civil case. That's not a
that's-
criminal case.
Why are they different?
Wait,
Well, because-
why is it his responsibility to not tell anybody? He may not be allowed to bet on it or gamble on it himself, but why should he not, why should he be precluded from telling anybody about who's coming on now?
Let's just talk this through because it's important. If he works at, pick your favorite investment bank, maybe somebody right across the street here.
But he doesn't.
No, but if he does, and he sees information on a desk about a merger that's going to be announced
Yeah,
tomorrow.
But now we're
That's
talking
on-
about what's on the playlist for Bad Bunny at the
Yeah,
Super Bowl.
yeah, yeah, no,
Should everybody who knows what his playlist is be held to those
These
same
are-
standards as somebody who works in an investment bank
That's
and
where
sees
it-
proprietary information?
That's the question.
That's crazy. I mean, that's kind of
I'm not telling you where we're going to come down to that, but you can see scenarios where, let's say somebody works at a biotech company, and they hear that a drug is going to be approved.
Yeah, a publicly traded biotech company, sure, I get that. But
Mm-hmm.
we're talking about stupid stuff that people bet on. Like, is Ben Affleck going to show up at the Super Bowl?
I agree. And
should his son be precluded from telling my son's friend that, no, my dad's here sitting on the couch with me, and that kid made a bet on it and made $1,000?
Should I divert my resources from that terrible thing on the Upper East Side to worry about
chase
Bad
down
Bunny?
stupid stuff like
I
this.
probably should.
Yeah. But just back to the idea that these people have fiduciary responsibilities for existing.
Mm-hmm.
I mean, that's very different than somebody who works at an investment.
Well, it'll be interesting what the platforms do. Will the platforms say, you know, in order, our terms of service, in order to participate,
Yeah.
you have to certify that you don't have, you know, inside information.
So then you go after the 14-year-old who called up Ben Affleck's son to find that out and say,
I've got.
I mean, these are.
I've got.
I have better things to do with my time for the most part.
yeah.
Okay, this is not something you're going to prosecute, but I'm curious at your view of it because you now work with the city of New York, and I want to ask you a question about the mayor, and actually the mayor's wife in this case, and actually spouses, because you spend a lot of time thinking about what a spouse does versus what, right?
My spouse retired when I went to the SEC.
Your spouse retired when they exactly. So here's my question for you: the mayor's wife apparently was liking, meaning pressing the heart button on posts on Instagram, I believe, right after October 7th, effectively supporting, it appears, the attack on what I think were arguably innocent Israelis at that time. This is long before there was a retaliatory effort by Israel. What do you make of that? By the way, the mayor did come out and acknowledged it to some degree, but did not seem to get into any details about it.
Look, I think as public figures, we have to address questions like this. I expect he'll be asked about it again. Whether he has that belief, what he
Right, but
does.
here's the complicated part in this instance. The complicated part is there are people on his team who he has fired for liking certain things on social media and posting certain things on social media. This is his wife.
Look, I think I'm not going to give the mayor specific advice, but I will give most public figures, their spouses, usually step out of public debate because avoiding things just like this.
It's unbelievable. Anyway, Jay Clayton, thank you.
Yeah, good to see you.
You gotta allocate your time to, you got priorities.
There are things that are more important than Bad Bunny.
All right.
Okay, coming up, NASDAQ embracing the tokenization of equities. Should talk to you about that right after this.
NASDAQ launching a program to facilitate the tokenization of equities and give companies more control over their shares in tokenized form. It will partner with crypto exchange Kraken to launch a new framework plan for early 2027. If approved by the SEC, investors would be able to trade high volume stocks either as traditional shares or as tokens on the blockchain.
All right, when we come back, WTI briefly topping $119 a barrel overnight as G7 nations consider tapping emergency reserves. It was that news about the G7 nations potentially doing a coordinated release of SPR that actually brought prices back down. You're now looking at WTI trading at $102.41 a barrel, down substantially from the highs overnight, but still up 12% from where we closed on Friday. Brian Sullivan will join us with the latest next. And later this morning, we'll be joined by Amos Hochstein. He served as White House Special Advisor during the Biden administration. We'll get his take on what's happening in the Middle East and how that's going to impact oil policy here in the United States. Squawk Box will be right back. Welcome back, everybody. Crude prices topping $119 a barrel overnight before pulling back. As we mentioned, we're now looking at crude at $102.60 a barrel. Let's get over to Brian Sullivan with the latest. And Brian, this has been a very big move very quickly. Last week alone, I think the WTI was up by about 35%.
A lot of the move, Becky, is options related. I'm not minimizing what's happening at all in the Gulf and where the situation is now and where it might go. Amos Hochstein is the perfect guest to have on. Love to hear what he has to say about the condition of Saudi oil fields, by the way. But that aside, there was a huge short options position in oil. I know that sounds counterintuitive, but there was so many people, I was one of them, by the way, wrong, that assumed that the Gulf nations might help out a little bit more, that Iran would go a little bit more centrist. but obviously the appointment of Khamenei's son as the new supreme leader indicates a very hardline tack will continue. I think that has surprised many people. We saw an attack on a Bahraini oil field as well. And so you get this combination of a lot of bad news in the last 24 to 36 hours that sent oil up. And then you sort of lit the fuse of all the short positions in options. That was a forced cover. And that's why you saw that arguably the single greatest spike, percentage-wise anyway, in the price of oil in one night ever. That's what we had last night. We have a little bit of that still going on today. We're up right now. We're still over $100 a barrel. That means likely gasoline is going to go up to $4.50, maybe $5 in some places. Diesel fuel is the real worry, though. Diesel fuel, trucking, shipping, trains, Becky, as you guys know, that's going to go up in price as well. That's sort of the blood of the American economy. A lot of these stocks continue to also rise. Exxon, Chevron, Schlumberger, Halliburton as well. Just one quick note, many of them are now at or above their average analyst price target. So just keep that in the back of your mind. And then we got some breaking news in about a half an hour. The International Energy Agency and the G7 expected to hold a joint call to talk about releasing, as you guys just noted, some of the global oil stockpiles, maybe a couple of 100 million barrels a day. But I would add this, you can release the oil, but if it's not where it needs to be, the impact is going to be limited. And that's why we're seeing $102 and change oil right now.
Yeah, it's really weird. So many things happening with that. Obviously, a coordinated move with G7 nations is enough to take some of the headline risk out of what we've seen here. Brian, it was my understanding that WTI was net short positions that were there, but Brent was not. That Brent did not have the same sort of potential for short squeeze as WTI. Have you heard that too?
Yes, and that's why the spread, you can see on the screen there, the spread is, what is that, $1.40? I'm kind of doing the quick math in my head while also trying to look at the camera. So there you go, $1.40. In fact, we could have, normally Brent is a $4 to $5 premium to WTI. Brent is, of course, the overseas traded crude, and normally it's about $4 to $5 to $6 above where we are in dollar terms for West Texas Intermediate, WTI. But your point is noted, because that short position in WTI you could see a situation where WTI briefly goes, it may have overnight, I have no idea, above Brent crude, because you've got to cover all those shorts. I think that IEA G7 talk about the global release has sent prices down, but also the covering has sent prices down as well. I think regardless of the positioning, Becky, the reality is that there were a lot of people, okay, and I was one of them, by the way, that believed we might see Iran take a softer tone, and there were a lot of bets put in the oil market. I know you were just talking to Jay about predictions markets and all that. A lot of bets were placed that maybe Iran would be a little more centrist, calm things down. The Gulf nations, Saudi Arabia, UAE, Kuwait, they would kind of help out, get involved. But guess what? Not the case. And the appointment of Khamenei's son indicates the hardline tack will continue. The Wall Street Journal had a story, kind of the fight to the end mentality. And I think now traders, investors, our viewers and listeners are digging in for what may be a longer conflict, although I would not be surprised, and I talked to some people last night, off the record mostly, that we might see some more involvement of the U.S. military. And keep an eye on Karg Island, 90% of oil exports from Iran. We wouldn't want to disable it, but we might want to take it.
Yeah, we are going to be speaking with Michelle Caruso Cabrera about that coming up in just a little bit. She's
been
actually been to Karg Island, and she's going to talk us through a lot of the potential implications for what that would mean. Brian, thank you. It's great to see you this morning. All right, it is just after 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories, a busy week of economic data headed our way. We're going to be getting CPI, PCE, GDP, durable goods, and housing numbers, all of it this week. Also on the earnings front, we're expecting results from Oracle, Adobe, HPE, Campbell's, and more. OpenAI's hardware chief, Caitlin Kalinowski, has resigned, citing concerns over the company's recent Pentagon agreement. Posting on X, she warned about potential surveillance of Americans without judicial oversight and lethal autonomous systems operating without human authorization. And we have some new names coming to the S&P 500, the index announcing that Lumentum Holdings, Coherent, Vertiv, and EchoStar will all be joining effective March 23rd. EchoStar shares up by about 2.75%, Vertiv up by about 2.5%, and Lumentum up by 3.5%. Coherent hasn't gotten the message yet, apparently. That stock is down slightly.
Talking about stocks that are down, all of them right now, at least the index is down off about 526 points right now. NASDAQ down about 251 points. The S&P 500 falling as well. Looks like it would open down about 67 points on the back of the increased escalating news in Iran. Questions about the price of oil and what's going to happen next. You can look at the 10-year note at 4.1, the 2-year at 3.6. Want to get straight over to Dom Chu. He's got a look at this morning's pre-market movers. Dom.
Hey, good morning, Andrew, Becky, Joe. We're going to start off with a look at shares of Hims and Hers in the pre-market right now, which are soaring to the tune of 44%. After reports that Novo Nordisk has ended its public feud with the company and plans to announce a new partnership to sell its weight loss drugs on the Hims platform. Novo Nordisk filed a lawsuit against Hims last month over a copycat version of its Wegovy weight loss pill. So Hims and Hers soaring to the tune of 45%. Next up, you've got shares of Starbucks right now lower by just about 2.25% after Wolf Research downgraded the coffee company to appear perform from a prior outperform. Those analysts there are keeping an eye on their turnaround efforts, but want to see evidence of sustained execution. Meanwhile, growing competition continues to put pressure on that turnaround effort for Starbucks, so that downgrade partly causing that decline of 2+%. And finally, shares of Apple are moving slightly lower. This is just for the maybe 0.75% at this point. After Citi trimmed its second half 2026 estimates for the company, analysts there anticipate memory price hikes will hit profit margins, but believe that Apple is in a good position in the smartphone market to navigate some of those cost pressures. Analysts at JP Morgan see Apple's recent product launches like the cheaper MacBooks and the iPhone 17s as a focus on growth in different consumer demographics. So keep an eye on Apple shares. For more on those and other top analyst calls of the day, just head over to cnbc.com/pro, where subscribers get the context and detail around those notable analyst upgrades and downgrades each day, Andrew. I'll send things back over to you guys.
What a morning, Dom. Thank you, sir.
You got it.
You bet.
All right, up next, Republicans meeting in Florida to chart their legislative agenda ahead of midterms. House Majority Whip Tom Emmer is going to join us next. And then later, former senior advisor to President Biden, Amos Hochstein, on the Iran war, oil prices, and America's endgame. Spark Boss goes right back. Republicans are meeting in Miami this week for their annual retreat. Topics will range from the war in Iran to the midterms. Join us now with a preview. House Majority Whip Congressman Tom Emmer. Congressman, it's good to see you. Thanks for joining us this morning.
Good to see you, Joe.
So much to talk about leading up to the midterms, but the events of the past 8 days, or I guess now it's longer than that. It's 10 days. That must be taking center stage with everything you're talking about down there with your colleagues.
I have no doubt, Joe, that will be one of the main topics of conversation. But this retreat that's being held here in Florida at Doral, the president will address the group tonight, so I'm sure there'll be discussions. But it's about the agenda going forward, and it's about understanding and agreeing what we're going to be doing over the next few months as we head into the midterms to enact the America First agenda that the president ran on, and come out of this thing unified.
I just hesitate to use the walking and chewing gum because it's such a weighty, serious issue that we're having, but it just seems like talking about reconciliation, another bill, or legislation with the elephant in the room with the war in Iran. We don't know how the war in Iran is going to play out. What do you need to make assumptions about that? How will it be mixed in or factored into all your discussions about what to do before the midterm?
Look, it is a pretty weighty topic, obviously. And our members have been talking about it not since it began, but as the assets were being moved. So this has been something that everybody's been paying attention to and been involved in. Joe, look, this is the #1 sponsor of terrorism in the world. Operation Epic Fury is in limited scope, to stop them from ever having any offensive ability to attack the United States of America and/or U.S. assets in the area. I believe it is already being extremely successful, and I believe it'll be over in short order.
That would be obviously the best case scenario, over in short order, because if the GOP had a problem, or if it was trying to address affordability, and the president addressing that with oil over $100, that suddenly it becomes, the war in Iran, as well as what happens domestically with prices.
Yeah, yesterday I think a barrel of oil was at $105. So your point's well taken. But as the president has said, this is a short-term experience. This is a short-term cost to literally deal with the chief sponsor of terrorism. No other terrorist organization in the world, Joe, has killed more Americans than this regime in Iran. So, as the president says, this is a very focused approach to eliminate their offensive capabilities. Yes, there are going to be some temporary effects on our domestic economy, but as soon as this is taken care of, those prices will tumble, and people will recognize that this was a short-term cost to pay for a major long-term gain in the terms of peace and security, not only at home, Joe, but around the globe.
Congressman, 2 questions. Do you think if the Iranian regime, had a nuclear weapon, they would use it right now? And second, how do you propose, or what do you propose we do about the enriched uranium that's there?
Well, they should never have a nuclear weapon, Becky. I mean, that has been the point. And people can argue all they want, but the administration has said that they were 2 weeks away. We know that they have an ample amount of enriched uranium in order to do this, and they could have produced very quickly. So if that's not an imminent threat, I don't know what you define as an imminent threat. President Trump took decisive
But does that
and
mean we
bold
need to
action.
go to the ground to get a hold of the enriched uranium stockpiles that are there?
Well, Becky, let's not speculate on what the next step is. Our incredible military men and women, the operation that they're conducting right now, very focused and being very successful. There is no Navy. There is really no air. We control the air over Tehran. They're flying helicopters over Tehran. If you can't shoot down a helicopter from 500 feet, clearly have lost you're losing your offensive abilities and your defensive abilities. So Let's see once this gets done, whether there's a change in the regime. I tend to think there will be. The Iranian people have had enough, just like the rest of the world, and thank God President Trump is willing to make these decisions.
Majority Whip, there's some speculation that if this continues and continues for a long stretch of time, it could have a real impact on the economic ability of China and whether they would try in some way to intervene. How do you assess that risk?
Well, Andrew, that's the whole point. Let's not speculate. What we should be talking about is the fact that at a time when we've never been more at risk, our homeland has never been more at risk, we have Democrats in this country that refuse to fund the Department of Homeland Security. And they claim it's because they want reforms with immigrations and customs enforcement when that is funded through 2029. In fact, they're harming the Coast Guard. We have Coast Guard kids that are serving in our Coast Guard are stationed in the Middle East, and they're not going to get a paycheck. This is outrageous. It's TSA. You had 5-hour waits in Dallas and New Orleans yesterday. This is not acceptable. That's where we should be focused. It's time when we're in periods like this, where the president is trying to take care of a 50-year problem and a threat to this country's homeland. It's time that we all recognize that this is about the American people, not about our politics. We should be talking about that.
Will there be talk about a legislation for a second reconciliation? Bill, do you feel like trying to whip those votes up again, Congressman?
Well, it's so easy, Joe. I guess I'm not going to get ahead of Mike Johnson, our speaker. This is part of the discussion over the next couple of days. What the agenda is, what is the art of possible when it comes to reconciliation. It's something that our speaker is very interested in pursuing. And I'm sure that's going to be part of the discussion. Once we know what the answer is from the entire membership, then we'll get to work.
Congressman Majority Whip Emmer, thank you. Hey, give our best to the speaker. We haven't seen him in a while. I'd love to have him on to talk about these things. I don't know, has he got a personal trainer in the morning now or something? You'll see him down there, right? We put in a good word for us.
Yes.
You're here. All right.
Joe, we'll always put in a good word for Squad Boss. Yes.
Okay. Thank you. Thank you, Congressman. See you later.
Okay, coming up next, a strategic island just 16 miles off the coast of Iran could play a crucial role in the war. We're going to explain why it matters. You don't want to miss this next. And later, former White House senior advisor to President Biden, Amos Hochstein, is going to join us to talk about everything that's going on in the Middle East and what it means for the price of oil and for the global economy.
Reports over the weekend say White House officials have considered taking Karg Island. It's a small island off the coast of Iran. About 90% of Iran's oil exports go through Karg. CNBC contributor Michelle Cruz-Cabrera was there 10 years ago. She was perhaps the only Western journalist allowed on that island. She joins us this morning live to explain the significance and what we should be watching. Michelle, it's kind of amazing that you were actually there. They allowed you there. You thought you were going to be there overnight. What happened?
Yeah, so this is back when Iran had just signed the nuclear deal with the rest of the world, and so they were very eager to begin exporting even more oil because they had been heavily sanctioned, and they were eager to do more business with the world. So CNBC was given rare access to Iran. We went there for a week, and one of the places we got to go to was Karg Island. And to your point, Becky, it's extremely important to them because without Karg Island, there is pure fiscal collapse for Iran because 90% of their exports, oil exports, leave from this island, and that's what provides them foreign currencies and dollars. It's a deep water port, that's important. The shoreline of Iran is not deep enough, so you have to have this island off the coast where very large tankers can come in. It's what you would expect from an export terminal. They've got lots of jetties, several jetties where tankers can pull up. There are many, many oil tanks. They've got 28 million barrels worth of storage capacity on this island. We were supposed to spend the night there when we went. However, we were escorted away earlier because when we were there, we were speaking to the top guy in charge, and he had a piece of paper in front of him that showed when the ships were coming in to unload or to get oil. And I looked over his shoulder because I wanted to see the schedule, just how many more ships were coming. He got very upset, and they made us leave early. So we didn't get to see the whole island, but they did show us just the incredible capacity that they have there. Were very up to par facilities, despite the fact that a lot of their equipment was from the 80s because of sanctions. For example, this machine you see there in green in that video was from 1984. It was an American product, but they couldn't get replacement parts. So they had to come up with replacement parts on their own that they engineered themselves. And they were looking forward to, at that point, having more access to the world. As we know, that never did actually happen.
This is a small island. What is it, 5 miles long, 2 miles wide? And I guess the question is, it's been floated in media reports that we are considering trying to take Karg Island, we being the United States.
Yes.
What do you think of the potential for that, what it would mean, what it would take? I know you're not a military expert, but having been there and having seen the layout for it.
Yeah, so Axios is reporting that the administration is considering it. I can tell you that within the oil community and the foreign policy community, there were talks for weeks about, if you really wanted to hobble Iran, you would take Karg Island. That would be a huge, huge escalation at this point. You would also require boots on the ground. It would, if it were to happen, give the administration a lot of leverage, a la what we're seeing in Venezuela. If you want dollars, if you want foreign exchange, this is your only way. And if the U.S. were to control Karg Island, they could have that leverage. Now, that is very high level of escalation, and the worry is that then Iran retaliates even more. However, as several guests have highlighted this morning on your show, their capacity to retaliate seems to be dropping by the day as the number of missile attacks, the number of drone attacks drops very, very markedly. I think Jared Cohen was on earlier and said, they led with the finale on the first day, and it's diminished greatly since then as the U.S. and Israel have been very, very aggressive.
It's hard to think of escalating things beyond taking out the Ayatollah and 40 to 50 other leaders at that point. I guess the question might be, what would the reaction be from other Gulf states if we were to do this?
If we were to take Karg Island, so you start to play out different possibilities here. First of all, you don't want to bomb Karg Island because if the administration believes that there's still a chance that there's some future leadership that will be friendly to the United States, You want the island, you want the country to have the capacity to bring in revenue and not cause a fiscal collapse. If you were to bomb Kharg Island, then you've lost the capacity to distribute oil from Iran. That hurts the global economy, and it also hurts any potentially future-friendly leadership
Which
in
gets you
Iran.
to the question of, if the United States takes it, does Iran stand by, or do they go ahead and bomb the island themselves?
Exactly.
And then the question becomes, what does that mean for oil prices that, you know, the Energy Secretary was saying yesterday they think will come down pretty rapidly. If Kharg Island is affected, does that change that scenario?
Sure. So I think that you highlight the question. You highlight the strategic decision that the United States has to make. Every single time we've been in this place historically, we have chosen not to touch Kharg Island. The question is, will now be different. Now, what's also interesting is that the international markets seem to think that we're not going to have disruption for a long time. If you look at the screen right now, we've been showing, CNBC has been showing all morning the front month contract. In other words, if you wanted crude delivered in April, it will cost you $100 per barrel. However, if you want it delivered in June, it's only $89 per barrel. And if you want it delivered in December, it's only $71 per barrel. That's telling you that international markets believe that the disruption in the Strait of Hormuz is not permanent.
Right.
Because if it were, you'd see those numbers higher for longer.
Right. Excellent point, and great use of that. Michelle, thank you very much, especially for showing us that footage that I don't think anybody else has of Kharg Island. Michelle Carissa-Cabrera, thank you.
A pleasure to join you.
All right, coming up next, Mohamed El-Arian on the markets, inflation fears, the Fed, and more. But first, as we head to break, here's a look at the pre-market laggard in the S&P and the NASDAQ. We'll be right back. Let's take a look quickly at the futures this morning before we get to Mohammed. Meanwhile, as you can see, we have come back a little. We were down much more than that, and then down about 500, and now I think less than 500 points. Meanwhile, a story we told you about earlier, Novo Nordisk announcing it's reached an agreement with him and hers that will take effect later this month. Novo will sell its weight loss drug on the Hims platform as part of the agreement. Hims and hers will no longer advertise compounded GLP-1 offerings on its platform. You may remember Novo Nordisk scrapped a partnership last year after Hims refused to stop marketing and selling copycat drugs. Novo filed a lawsuit against Hims in February over a copycat version of its new Wegovy weight loss pill. As part of the deal, it will drop that lawsuit.
Take a look at futures, folks, because we do have some red on the screen this morning. The Dow looks like it would open down close to 500 points. NASDAQ off about 250 points. And the S&P 500 looking to open off about 61 points right now. Joining us is Mohammed Al-Arian at the table, the Rowan Kern Professor of Practice at the University of Pennsylvania's Wharton School of Business, also Chief Economic Advisor at Allianz. Good morning to you. We're all trying to make sense of what's going on in Iran, the price of oil, what it ultimately means to the economy, and what it ultimately means to the price of stocks. What do you think?
So start with what the market thinks. The market thinks that this will be a temporary and reversible shock, because after all, we threw everything at the US economy last year, and the economy proved incredibly resilient. So this will be the play once again.
Okay.
However, this time around, this is coming on top of a few things that are adding up. An uncertain labor market, affordability concerns. You have three distinct sources of financial fragility, and you have inflation that was already heading up, which limits policy flexibility. So I see the sort of central scenario that's an 80% probability in markets, about 50%. The bigger question,
again, you see an 80% scenario in markets at 50%.
No, that's the baseline right now in markets of a temporary and reversible
You think it's at
shock
80%?
Is at 80%.
But you're saying you think it's actually at 50%?
Correct. And there's a bigger question that we see, which is we've got to understand that this global economy is subject to more violent and more frequent shocks. And there's a really good reason for that. We've lost the unifying themes. So we just have to be ready for a lot of volatility this year.
And so when you think about this 80%, you think the market's at 80% in terms of this being resolved in 2 or 3 weeks from now in a good place?
Correct.
And your 50% basis is based upon what?
It's based simply that while the market nets things out, the economy compounds them. So if you put one shock after another, you lose financial resilience, you lose human resilience, and your ability to bounce back is less. And we have thrown a lot at this economy in the last 12 months. And right now, between the labor market, between the inflation dynamics, and between what's happening in the financial markets, there's reasons to be less.
Do you think there's any chance that things get worse, meaningfully worse in the Middle East? Meaning, China looks at this and says, oh my goodness, we can't have this anymore. And somehow they try to intervene or get involved in some way that we haven't even thought about yet.
So you had Jared on earlier today, and I was listening carefully to him because I have a lot of respect for how he thinks about these issues. I think the point he made about asymmetrical wars have an unpredictable element to them that you have to take seriously. And that is why the left tail is so big here. Because there is this element of unpredictability.
Okay, but let me throw in a different a domestic political issue, which is this president has been very cognizant, to his credit, of what's going on in our economy here. And so there's part of me that wonders whether he could look at what's happening and say, you know what, I wanted to do this for 2 or 3 weeks or 4 weeks. There's still stuff I want to do on the ground. But you know what, I can't have it this way. And politically, it's going to be bad for me. It's going to be bad for Republicans. We're going to the midterms. I can't have oil prices at these numbers. And then he steps away. What do you think the chances are that that happens?
That's certainly possible. But he also needs to convince 2 other parties to step away, Israel and Iran. And they have different agendas at this point. So that's point number 1. Second, he's already aware of this because he said over the weekend, the higher oil price is a price that's worth paying. However, it compounds the affordability issues. So he's going to keep an eye on that. The one thing I would stress is we've got to stop thinking that oil supplies and supply chains are like an on-off switch. You can't turn it back on. If the UAE, Kuwait, and Qatar stop production, it will take weeks to resume production.
Part of the reason they're stopping production is they're filled to the brim. They have nowhere else to store this.
They've reduced production. They haven't stopped it yet.
Right, but it would be, look, if you can get the ships moving again, you can start kind of quickly unloading some of that stuff that's been building up in the meantime.
If you can get the ships moving again, if you can get new ships coming in,
The point is, what's the time frame for when this is like, oh boy, this is...
It is weeks and months. It's not days. I mean, there's this assumption in the market, it is days.
Yeah.
And we seem to have forgotten the lesson of COVID, is when you impose a sudden stop on supply chains, things are in the wrong place when you want to start them again.
The end for COVID, when we had these problems, was that economies cratered. Do you expect that to be the case this time around? Are you expecting an economic downturn to the point of recession based on what we've seen happen?
No, I'm expecting that GDP growth will be about 0.5% lower than would have been otherwise.
Okay.
I'm expecting inflation will be 1% higher. And I'm expecting those central banks in Europe that have a single mandate are going to be hiking rates. And that's what the market also expects right now.
What do you think the U.S. Federal Reserve is going to do as a result?
I think they will just stay unchanged and wait and see. No one wants to repeat the mistake of the 2021 transitory inflation call. No one wants to repeat that mistake.
Well, a percentage point higher in inflation?
Than it would have been otherwise, yes.
That's over 3. That's like...
Yeah, 3 to 3.5%.
3.5%. For how long? Transitory?
I don't like that word because that word encourages all sorts of bad behaviors. I think that if you look at the average for the year, we will be about 3% for the year.
So you were thinking we might be at 2%.
I thought we would be between 2.5 and 3 before.
Well, that would be 3 to 3.5 if it's
Correct.
1% higher then. Right?
Yes,
That's way off the Fed's target. They shouldn't be cutting it all then. Or would they say, well, it's because of the war?
So, first of all, we've entered the 6th year in which we are above the inflation target.
Right.
They will have 2 reasons to cut if they cut, and hopefully it won't happen. The labor market and financial instability. Those are the 2 things to keep an eye on. You have 3 distinct sources of financial instability. Neither is big enough to be systemic, but if they come together, they can be systemic.
What do you make of the whole Russia side of this situation, and whether that can spiral into something that we should worry about?
I mean, if you really want to worry, and
I don't want to worry. I just want to know. I know you worry for a living.
If you really want to, you bring Russia and China into this. Okay, and their incentives right now are very different from our incentives, but they haven't so far.
Right.
Okay, China in particular has been incredibly quiet.
Well, this is good for Russia in its own way because they can charge more for their oil.
It's good. Yeah, I mean, obviously it's good for Russia. It's also good that a lot of the weapons are being depleted.
Right.
And not being depleted in Ukraine, but being depleted in the Middle East. But China is the interesting one because it lost Venezuela as a source of cheap oil. It's now losing Iran as a source of cheap oil. Already it has revised down its growth to the lowest since 1991. So China is hurting. Asia is hurting in this a lot because of energy issues.
Can I throw one last thing into the mix?
Of course.
We were talking to Simon Johnson earlier this morning about private credit and some of these semi-liquid instruments the gates are going up on them. How much should we be concerned about that? Is that a canary in the coal mine, or is that just a blip along the way?
So that's one of the 3 areas I worry about. Small, isolated issues are becoming more of a liquidity issue because investors are getting spooked and pulling money out. We have valuation issues, we have underwriting issues. I want to stress, it's not in all private credit in advanced countries, but it's in some private credit. But add to that the bond market. Look at what's happened to UK yields. Look at what's happened to Japanese yields. Remember, in the last few years, the bond vigilantes took on 3 of the G7 countries, Japan, the UK, and France. And then, of course, there's the issue of AI and the rational bubble of AI. So if these things come together, then financial instability becomes a concern.
Okay. Mohammed, it's great to see you. Thank you for coming in.
Thank you.
Are you looking forward to wars?
I am. I think you're going to see reforms to the Fed that are really needed. And I think you're going to see someone who understands that we need a theory of balance sheet management. We can't simply move the balance sheet from below 1 trillion to 9 trillion back to 6 trillion without having an understanding of what the neutral level of the balance sheet is. So yeah, I'm looking forward to him coming to the Fed.
Excellent.
Thank you.
Up next, former senior advisor to President Biden, Amos Hochstein, will join us to talk energy prices and Iran. Squawk Box will be right back. All right, welcome back, everybody. Joining us right now for the latest on surging energy prices and what's happening. Take a look right now. You see WTI up by about 12.7% to $102.45 a barrel. TWG global managing partner Amos Hochstein, who also served as White House senior advisor in the Biden administration. And Amos, thank you for being with us this morning. We've been talking all morning about the jump in oil prices, what's happening in the Middle East. Iran's resolve over the weekend caught a lot of people off guard. What do you think about where oil prices are and more importantly, where they may head from here?
Good morning, Becky. Look, I actually think no surprises have happened. Everything that we're seeing in the market was, I think, broadcast since last Monday. So the war started on Saturday with a shock and awe taking out the supreme leader and a lot of military leaders, with a lot of headlines that the command and control of Iran would be gone by Tuesday, Wednesday. That obviously didn't happen. When you shut down the Strait of Hormuz, whether by closure de facto or de jure, right? The baseline is that ships are not crossing except for very, very few. And you have a disruption somewhere in the 10 million barrel of oil plus jet fuel and diesel and other refined products, then oil prices are priced today, I think still even maybe a little bit complacently. This is the biggest shortage and energy crisis we've had in global history. So I think these prices now start compounding. In other words, we'll close at around, let's say today will be somewhere at around $100. But I think with the conditions on the ground, without a change, this gets worse and worse because of that compounding effect of loss of both transport of crude, the production of crude starts slowing, and the refined products.
Almost, let me ask you, we have not done something like this in decades and decades. We have allowed Iran to get more and more belligerent, known that they were working on this enriched uranium, known that their potential for a nuclear weapon was there. Is what you're watching right now the reason that we've never taken more action, that we've been worried about what it would do to global oil prices, what it would do to Asia, Europe, our allies around the world that rely on this oil even more than we do?
No, I think it's more complicated than that. I think for a long time it was about containment. Remember that if the nuclear issue is the most important, then there was a deal done during the Obama years to try to neutralize that threat. The problem with it was that it had sunsets and it was supposed to expire at some point. President Trump in his first term got out of that deal, and eventually the Iranians started enriching again. But in June, the strikes that the United States took, which as you recall, I was on your show and supported them, the president said we obliterated the nuclear program. That was 6 months ago. The Israelis said that we neutralized it. They used a little bit softer. In the run-up of this crisis, it was not about the nuclear weapons. Remember, it first started out based on the protests, right? Help is on the way. And the Israelis said that it was all about the missiles, the ballistic missiles, not the nuclear. They still believe today that the nuclear issue was not of vital concern because of the June strikes. But there's no doubt that when you consider war, you have to consider all the implications, and one of them is the energy markets. But I think nuclear threat was always something that we were going to address. But this war is not about nuclear. We are attacking a far greater part of Iran than just the nuclear sites or where the enriched uranium is. This is about much more about attacking the regime itself and taking away its capabilities to restore itself.
Let's start with where we are now. What's already taken place over the last week and a half, or 10 days? What do you see as being the way out of this? The way what objectives can and should be met? What is the off-ramp, if there is one? How do you see this playing out?
Look, I think right now, over the next few days, you're going to see intensifying strikes against Iran by both Israel and the United States. Although at the beginning of the war, the first several days, the U.S. was the lead as far as the number of strikes. Today, that has flipped, and Israel is doing far greater percentage of the strikes than the United States. Where do I think it goes? Look, Iran has been disrupted. Their missile manufacturing is disrupted. Their economy is degraded. Their nuclear weapons are further degraded from obliterated from 6 months ago. I think there's an ability to declare victory here, and for the president in a few days to say, look, I achieved all these things. They don't have an air force anymore. They don't have a navy. We've disrupted them. And because we have air superiority, we'll stay in the region, and if they go back to bad behavior, I'll attack them again and end that war. I know that Mohammed Al-Arian and your previous guest had said that you still have two other parties. The Israelis will do whatever Donald Trump says. If he says we're stopping the war, they will stop the war. And I think the Iranians will as well. So that is a scenario. However, the White House for that has to not want to see regime change, because the Iranians were able to select a new supreme leader. Just the fact that they were able to select one and announce one and go through the process means that the regime is still very much intact. So I think at some point, if you're talking about 3 to 4 more weeks, the cumulative economic damage is going to be globally, not just the United States, but mostly in Asia and Europe. I think that we have to start looking at what that off-ramp, and I think this is a credible off-ramp. It's not a taco, quote unquote, that people are saying, because it actually is a victory for the president if he can make that declaration.
Yeah, the taco acronym might be tough at this time. Listening to you, Amos, and I know you've got a lot of different concerns and reasons to either support or not support it. When I listen to people go over the 4 possible reasons why Trump would have done this, sometimes I think you just add them all together for one overriding reason. Could this end up, in your view, having been worth it, Amos?
Look, Yes, I think there's a scenario where you do. There's no doubt in my mind Iran is a horrific regime with so much blood on its hands of Americans and others, but also by creating a network of proxies and terror groups in the region and around the world. So if you're able to degrade them and take away their missile capacity, take away their ability to support Hezbollah and the Houthis and the Shia militia groups in Iraq and so on, I think there's a lot of good that could have been done here. But if the longer it goes, the more mission creep, the more you start thinking, I need to get just a few more things. If I just use some ground troops, to me, that's where the danger signs, Joe, are. Yeah. And I think if you start paying this, I think the market is still very complacent about what it means to take 9 million barrels or 10 million barrels off the market on a day-by-day situation where it keeps, compounding. The cut to production is only going to increase where you shut these things in. The LNG plant in Qatar could take 2 months to break back. The oil fields that you shut in, the longer they're shut in, the longer it takes to bring them back, the longer it takes empty tankers to come and collect what's in storage, et cetera, et cetera. So I think at some point time starts running against you, not for you. But degrading Iran, that's not something I think is a bad thing for American national security.
As for rationale, people talk about a couple of levels of chess. I mean, you add Venezuela and this together with China. If they want to go after Taiwan anytime soon, they better have some. They have an SPR. I mean, what are they going to use? Their ability to. Yeah,
they do have an SPR, Joe. They have a very large one.
They're going to need it, right?
Look, my view has always been that China's not looking for a kinetic war with the United States to take Taiwan by force. I think they're trying to take Taiwan without firing a shot. I think they are taking over the business class. They are taking over interests inside Taiwan so that they can have a gradual takeover of the Taiwanese economy and eventually take over Taiwan with a lot less than is required. We only think about it in terms of war. I think they're thinking about it in other ways as well. But I'm not sure that, I think China sees this war as an indication of strength vis-a-vis Asia. I think that what we're doing in Iran today is a lot harder to do in Asia, so far away from our bases and so far away from any other allies that may join or not. So I'm not sure that I would draw that analysis. I think we should first focus on completing this mission and the depletion of munitions that is also happening both to the United States and to Israel.
Wow. Amos, what pressure do you think President Trump is most susceptible to? Pressure from the idea of China getting upset and doing something, ideas of our allies getting upset and doing something, or just American voters getting frustrated with higher prices at the pump, higher prices that work their way into other inflationary measures?
Look, I've worked in multiple administrations. I don't think that President Trump is concerned about China or concerned about other allies around the world. I think what he's really concerned about is what's happening here in the United States, like all presidents. Look how much time he dedicated to gasoline prices and oil in the State of the Union. Today, we're barreling towards $3.50 on gasoline. We're probably going to go to $4 in the coming week. Diesel is even higher, and remember, our food prices have enormous amount of connectivity to diesel prices.
Does that mean that you think he potentially steps away from this more quickly as a result? We've seen scenarios where he's pushed it to a certain place and then decides, I'm going to pull it back because I think it's going too far.
Yes, I do think, Andrew, and I think that if you look at a number of examples over the last year, Greenland being one of them, when markets start to really react, I think there's a reassessment. I also think that while he's saying total surrender, he has his staff explaining that total surrender doesn't mean total and doesn't mean surrender. It means when they're too weak to respond anymore. Well, I think the scenario that I built for you earlier, where he can declare that he has degraded their military, their nuclear, their missile, and their economy, and maintain air superiority, I think he can say, look, I've achieved my goals. And I think these kind of market conditions, if they last for several days and get worse, I think that he's going to have to reconsider. And I think you can see in the rhetoric that he's already doing that.
We can survive at 350 a gallon. That's what we averaged during your Biden administration, almost, right? That's a pretty good price.
350. It doesn't stop at 350. We were at 280 a week ago, Joe. We're now at 350.
It was nice that it came down. It was nice that it came down, but we have been at 350 before. I just looked up the average for.
We sure have, because Joe, we went to $5 a gallon during that height. We had to take it down to 350.
I remember.
Thank you for being with us today. We appreciate it. Right now it's time for Squawk on the Street.
Really?
Coming up.
Monday morning, welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Faber has the morning off. Oil is the story as the Iran war moves into its second week. Crude tops $119 last night as the Journal calls this the most severe energy crisis since the 70s. Futures sharply negative ahead of a busy week of inflation data. VIX tops 35, the 10-year around 417. We will begin with triple-digit oil and the slump in stocks around the globe in reaction to the Mideast conflict. Gulf states cutting some production as the Strait of Hormuz is effectively shut, resulting in some supply disruptions, Jim. And we're tracking the traffic there as best we can. Everybody is.
Yeah, I mean, it sounds like that there could be just a gigantic amount of oil off the table. Because even though the Straits of Hormuz, that's 20%. But Hormuz also matters in terms of just the idea that none of these countries have enough storage room. So you're getting Kuwait, UAE, Saudi Arabia down, but Bahrain. Now, I would point out that there's been no instance where you have an increase almost like we've had, if you take the overnight, where we haven't had a bear market. And it's pretty daunting because I can't figure out an off-ramp yet.
Yeah. People are starting to put some numbers on things. Airlines are a good example. Melius over the weekend, they point out it took 12 days for oil to peak after the Ukraine war began. It took 148 days for it to retrace those gains.
Yeah, I think that that's emblematic. I think that when you even look at some of these things like a China surge in 08, of course, then that was also with the Great Recession. Yeah, first you had it goes up 120%, then the market goes down 50%. First Gulf War up 100%, then S&P goes down -20. Second Gulf War up 80%, S&P goes down 40. Pandemic surge 2022 goes up 139, market goes down 19. There's no instance of what we had last night where the market doesn't go down 20%, and I think that we were down 2.5% last night before this talk of Europe and their SPR. I don't think the market should have snapped back. I don't get that. I think we'll see that today.
We are looking for more clarity, possibility of G7 finance ministers getting together, talk about an emergency release. It's a discussion in Japan.
Yeah.
India, for now, says they're not going to have any emergency release. We'll see if that changes.
Well, I mean, you've got these, what's hurt worse. Thank you to Michael Semblis. Greece, from JP Morgan, Greece, 56% of energy from the Strait. South Korea, 33% of the energy from the Strait. Thailand, 27. Taiwan, 27. Singapore, 26. Pakistan, 25. India is 13. U.S. is 1, but it doesn't matter because it's a global market.
Right. So people are starting to draw some lines between countries that are big energy importers in Asia, who also have tech-heavy equity markets. We saw what happened to the Kospi overnight. Trading was suspended at one point when they were down 8. Nikkei down 5, worst since April. And people are thinking about chip production, Jim. You need sulfuric acid to make chipsets. That's another...
No, there are a lot of things that are wrong. I mean, I think that we're kind of too bullish. The S&P down this little is too bullish. And I say that because there's so many different moving parts. Just last night, I mean, we saw these gigantic declines in Samsung, in SK Hynix. I mean, these are companies that are equivalent of Micron, equivalent of Western Digital, SanDisk. But of course, they produce the biggest amount of the chips that will be on display at the GTC next week with NVIDIA.
Right.
Because that's who makes them.
So are you in a position now where you're looking for spots to sell?
Yeah, I think that, look, I just think you have to be a little more opportunistic in terms of where we were last night versus now. Because when I look at things, I just don't see whether, short of a declaration, Adam Hochstein was talking about this, or where the president can say, okay, listen, we won, and Israel, of course, doesn't do anything because we won, and then hopefully the Strait opens, and if the Strait opens, then I think we'll be okay. Not great, because there's a lot of, when a shut-in occurs, and we're having some of these countries do some shut-in, you can't just turn them back over.
Right.
It takes a little while.
Right. Journal made this point last week. We've mentioned a couple of times. Turning off an oil well is not like turning off a faucet.
No.
There's big engineering risk. It's hard to undo. And so some of these moves out of Bahrain, as you point out, Kuwait as well, that's a big deal.
Yeah.
And then Aramco, too, if these reports are true.
Deal. It is. Now, I think that people have to realize how, while SK Hynix down 10%, Samsung down 8%, you've got a lot of different countries that are really impacted. And yet, what do we do in our country? Well, we had 550 rigs go to 551. I mean, now think about that. Everyone says that we have all this oil and all this natural gas, but if your rig count is going from 550 to 551, I mean, it means nothing. And we do have a great LNG situation that matters tremendously. But at the same time, I mean, look, I just think we're not protected.
Right.
West Texas Intermediate is a little bit of a, it's like $5-6. But when you think about what happened in 2022, I mean, we went from 90 for oil to 139, and then we had 19% decline, and that was much more artificial. That was Russia, maybe 7 mil. So I just think don't want to be too complacent here.
Right. And there's the impact on the consumer and retail gas. We've set some records on weekly gains.
Yeah.
We got a retail average now, 347. We're probably talking 4 in maybe 20 states in the next week or two.
Right. I mean, again, I know someone can say, well, wait a second, have you seen Europe? Have you seen South Korea? Have you seen Japan? But this is going to cut into consumer spend. It always does. I don't see why this time would be different. I think that Wall Street, I thought I came in today and I thought I would see a bunch of downgrades or at least price target declines, and I didn't see anything. I mean, it's like it's not happening. I mean, it literally is. It's like, okay, nothing there. It's signaling a little bit better on the preliminary. That's good. And well, let's buy some, core weave here. I mean, look, I read these. I put out this memo every morning, and it was like, wow, things must be pretty good. I mean, oh yeah, well, there's 15 million barrels trapped every day. Oh, I guess that's okay. There's a Saudi pipe that takes all that does 5 mil, and they can dust that off. What are they talking about, these guys? I mean, this is a major issue.
At Morgan Stanley this morning makes the point that even if the straits reopen, right? You're going to get more security delays, rerouting. You don't need closure to get a material or a net effect on tightening of supply.
Yeah, I think that's true. And also, can we take off the table the destroyers that are going to protect the tankers and
the Navy escorts?
Yeah, because unless you have the tankers run by the Navy, I mean, you can't protect. There's a lot of things that the Iranians can do. They can have small submarines, they
mines,
can have swift boats, they can have mines, and I just don't think that it's an attractive proposition. It is a free economy. You can't order it.
Right. Couple of things pointed out by Barron's today. The two worst names since the war began on the S&P: Carnival and Norwegian.
Well, there you go.
Down 20.
Norwegian with an activist. Yeah, I mean, the cruises, anything that's totally related to travel, the airlines. Look, I think that when you see the price of jet fuel going up, I think your ticket's going to go up. Doesn't help that you have 3-hour lines in a lot of places this weekend. Houston, New Orleans. There's just a lot of things that make me feel that people are too bullish. Let it come down.
By how much? You mentioned bear market. You think we get a 20% drawdown?
Well, no, I'm just saying that every time we've had a spike, we've had a 20%. This one could be different because we have a fickle president. And do you really want to sell a lot and then the president says mission accomplished? We're good. We have a back channel. This guy turns out to be not a hardliner, and next thing you know, he's like, "Wow, I sold everything," and then the president decided, you know what, we won. I mean, that's the problem. I mean, for the bears,
right?
It's a problem because the president has usually sided with the bulls.
Yes, he usually has. I mean, we're coming up on the anniversary of Liberation Day, where we were worried about 14 multiples.
Right, and we have a midterm election coming, and I think that the presidency, look, the big breakdown of why everything went bad was that Israel attacked desalination after they attacked desalination from Iran, and then Israel attacked oil infrastructure, and so now you think, okay, are they going to attack, is Iran going to attack the oil infrastructure of UAE, Kuwait, Saudi Arabia? That's the escalation that everybody's really worried about, not just the Strait.
Yeah.
And I think that's a reasonable thing. I think that when you attack when Israel attacks their oil infrastructure, why won't they go after the oil infrastructure of our allies like Saudi Arabia, and Kuwait, and UAE?
Right. Well, and then maybe the Saudis respond by letting us use airspace, and there's a few other ways.
Look, if it escalates, I mean, I think people don't realize how bad that Bahrain desalination plant attack was, because these countries don't have water, and so you're going after the lifeblood. It had not been going after. I mean, there had almost kind of been an unwritten rule: don't attack the water, don't attack the oil infrastructure. You go after anything else. Military's fair game. And that went by the wayside. I don't know why Israel attacked the oil facility, because I think that people could say that just is the green light for Iran to attack everybody's oil facility. I think that was ill-advised.
Yeah, and Axios says that it's one of the first disagreements between the Israeli coordinators and the Americans.
Absolutely, and I think that it's one of those things where it's very difficult to turn back if we have a war against Saudis, where the Saudi Arabia is so integral to the oil market.
All right. Let's get Damon Javers this morning, has more from the White House today and the Iran conflict as we get this market week underway. Good morning, Damon.
Yeah, good morning, Carl, to you. President Trump said over the weekend that the United States is winning the war in Iran by a lot. He said he's committed to doing whatever it takes in Iran. And he was also asked about the prospect of ground troops in Iran. He was on Air Force One talking to reporters, and here's what he had to say.
I don't think
so decimated that they wouldn't be able to fight at the ground level.
So a little difficult to hear there with the airplane noise, but what the president said is, could there be ground troops in Iran? Possibly. There'd have to be a very good reason. Then he was asked explicitly about the idea of sending in U.S. troops to go seize enriched uranium from Iran. The president said he didn't want to talk about that. He said not necessarily now, but it would be a good thing if it did happen. So the president's sort of keeping his options open there on the idea of ground troops in Iran or special forces missions to seize uranium and the like. So we'll see where we go with that during the course of the week. And then last night we saw this social media post from the president. Came in right after the oil markets opened up and the entire financial market got a look at $100 oil. The president said short-term oil prices, which will drop rapidly when the destruction of the Iran nuclear threat is over, is a very small price to pay for USA and world safety and peace. Only fools would think differently. That from the president of the United States. So this is a president who's signaling right now that he is committed to his course of action in Iran. He is at least openly considering ground troops in that country, although he says he doesn't want to talk about the specifics of that yet and whether it would be necessary, and committed to riding out this spike in oil prices that you guys have been talking about. Back over to you.
All right, so Eamon, is there any possibility of some sort of off-ramp? I can't think of one. I can't think of one where the president just says, you know what, we've had a chat, things are better than we thought, we're really in charge there. Without an off-ramp, you don't want this to be like DNB and Foo, when the French lose, then we come in and start with ground troops. I mean, I don't know. The president must be aware that we've done this before.
Yeah, I mean, the question I think that's in my mind this morning, Jim, is this idea of how does this end, and does the president have full control over when this ends, right? I mean, there's the prospect out there that you hear market participants talk about, well, if oil goes too high or the stock market is rattled too much, the president will simply stop and declare victory and end this. But the Iranian government gets a vote in ending this at some point as well. And the Straits of Hormuz, are extraordinarily vulnerable to Iranian attacks and Iranian proxy attacks. And the question is now, what will this hardline Iranian government do? You've got a new leader whose father was just killed by military action ordered by President Trump. Is that leader likely to allow President Trump to simply withdraw and restart traffic in the Straits of Hormuz, or will he want to inflict some significant pain on the president and his administration and the economy globally? I think you got to start to think in those kinds of terms. Not only what does the president want in order to end this, but what does the Iranian government want in order to end this, and what price are they prepared to extract from the U.S. government and the world economy for doing
Right,
it?
and as we were just saying, Eamon, there's also the added question of whether the president and Netanyahu agree on an off-ramp.
Yeah, I mean, one of the questions here is how much is this strategy behind the scenes being coordinated between the United States and Israel? You've seen some statements from the U.S. side that seem to indicate, they're not either totally aware of what the Israelis are doing or not entirely on board with it. So, some questions now from Washington certainly about, what is the Israeli perspective here? What are they trying to do something slightly different than what the United States is trying to do?
Eamon, thanks. We'll talk in a bit. Eamon Javers this morning. Take a look at the pre-market here. It's going to be a busy week of data. We'll get some inflation numbers through the course of the week, some labor data with jolts, revised GDP. We'll talk some private credit. Got some calls this morning on Adobe, Netflix, Jeffries, Starbucks in a moment. Wasn't that long ago, 10-year was sub 4, just prior to the conflict in the Middle East. Today we get almost to 4.2, backing off a little bit here, but obviously big implications for mortgages and everything that's rate sensitive today. We'll get Kramer's Mad Dash and countdown to the opening bell, which is happening in about 10 minutes. Time for Kramer's Mad Dash as we count down to the bell.
People are looking for a way to play this problem. Now, the big issue is this is bad for almost everybody. The only company that is being upgraded over and over again, it should be either the fertilizer companies, is Dow. Dow Inc. Why? Polyethylene going up. The competition is being taken offline. They've got this fantastic restructuring going on. Finnerling had decided, decided right around here, look, I can't keep doing these gigantic projects. I got to scale back. The balance sheet's getting a little better. They did have to cut the dividend, but the dividend's still big because it's down a lot. But you see this, you say, okay, it's already at 44%. But if the longer they're offline, in Hormuz, the more this is going to go higher, because it used to be a very big stock and a lot of people wanted to own it. And by the way, it's fine. It's better than it's been because it's got really great pricing for the first time in years. And Finnerly's kind of been waiting for this moment, and he's ready for it.
Remember in COVID, where supply chains were so challenged that we would say, how much pricing power do they have? Because you don't want to kill your clients.
No, it's very easy to say that because in this particular case, it's a worldwide product. So if you're in China, you have no choice. You have to pay the posted price. And Dow's going to be, I think, a big force in China. I mean, it's just up every day a little bit, but now it's about to break out.
Right. Does this extend to CF or LyondellBasell?
Lyondell, absolutely. You can buy Lyondell until the cows come home. That's a real good one. By the way, these are good companies. It's just that they're in a commodity business. And when you take offline a gigantic commodity maker like like Kuwait, where they produce a lot of that natural gas.
Right.
Well, this is Dow's chance, and Dow's going to take it. Good for them. They've just suffered through many, many years of a downturn. It's their time.
It's an amazing year-to-date game
Yeah.
so far, Jim. We'll watch that. Get the opening bell here in a moment. Don't forget, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
Tried to tell them they're all in a hurry. Oh God, 3 minutes. No, you can't. No, 3 minutes. Okay.
SoftBank potentially showing the latest cracks in credit as their
SoftBank
swaps widen following
What's so soft
concerns
about it?
surrounding the Stargate project. Shares of SoftBank are down sharply, Jim. This has gotten some attention the last few days.
It's got my attention.
Look, these are all linchpin.
Why is it so soft?
Projects in. SoftBank's always in. I mean, I remember. Look, they're in on OpenAI. They're in on everything. They can't have unlimited capital. Obviously, the market's saying you don't have unlimited capital to the debt market.
My name's James Kramer.
Is watching out for, and as we all freak out about mean for
Sammy.
This is actually a good problem for China, and that is because, Nicole, they have been facing deflationary pressures for a number of years
Oh, shit.
now. The big question is whether what we've seen overnight as far
Deflation
as
rate
that
issues?
printing is going to continue, because we want to see sustainability
This
in
is
some
not
of
gonna
those
be
numbers,
good.
given that, of course, it is capturing the Lunar New Year holiday when we do typically start to see a bit of a pickup in that demand. So a good story for inflation overnight in China, particularly when you look at the producer prices
Oh, it is
as
a good
well.
story?
Deflationary pressures coming off when you you look at wholesale as to what is charged at the factory gate. So it's been an interesting story for Chinese ADRs. If you take a look at the K-Web, for instance, this morning, outperforming once again. This has been a little bit of a bright spot in what has otherwise been a down market. We saw those ADRs performing well on Friday.
The 200 SMA, buddy.
Of the Asian session overnight, but we'll continue to keep tabs on things as well and out in Europe, because the big story has been those yields, Nicole. I mean, you take a look at the 2, the 5, the 10-year gilt, all up in double digits. I think the 2-year gilt was up at 37 basis points. I mean, this is obviously short-term borrowing costs, so keep an eye on that. People have been talking about how this is a central banker's nightmare, with obviously what we're dealing with, the jobs being obviously something to keep an eye on, like we got on Friday. Now the inflationary pressures coming through, are we staring down the barrel of potentially stagflation?
Yeah, and so we think about the big picture here. We're looking here at home, we're looking internationally. I know you're doing some of the coverage here, what's going in and out of the S&P 500, but the international story, and I was talking about the spread between Brent and West Texas, like we don't necessarily see that. Some of your final thoughts.
Obviously, Brent is more exposed to the shipping channels as well. The big story for here as to why we're seeing the dollar up at 99.16 right now, Nicole, while we have triple-digit oil, is the fact that the U.S. is seen as relatively insulated from a lot of what we're seeing. I mean, China is another example of that out in Asia. It is the currencies and the countries that are way more exposed to, obviously, the energy shock that is the big question right now, and particularly markets that have acted as a big diversifier and has been outperforming. We are very much seeing some fragility in some of those outperformers that we've seen throughout the course of the year.
Thank you. Here is the opening bell.
Their ding-a-ling went off.
We are off right now. You're 500 at 66.81, losing 58 points here. That's 0.9%. Obviously, these numbers are much worse overnight, and we've at least come up off the bottom in the last 24 hours. We could say
I'm not worried.
The NASDAQ here, the tech-heavy NASDAQ is one to watch. The Dow is down 1%, and the Russell, the small cap's down 1.4%. The NASDAQ's losing 210 points here, losing 0.8% to 24,430. You know, we were also looking at some of the upgrades and downgrades today. We had GE Vernova, Zion, Verizon, Brinker, Dow Chemical. Those were some of the names that had upgrades.
Hims is up 41%.
We saw Starbucks, also price target cut on Apple today. But you did have James Demmer here a short time ago who says he's fully invested, 40% in international, 60% here in the USA, and still saying that markets are pretty much oversold, but got to wait to see what happens with the Strait of Hormuz and oil and such. There could be short-term pain, and that the playbook would be that it ends and then you get to the summer and midterm elections. So we will see if that in fact happens. In the meantime, joining me right now, Diane King Hall is here. This as the Dow Jones Industrial Average is down 422 points. Looking at GE Vernova, I mentioned that it's one of the upgrades. You have the details.
It is a double upgrade here this morning, so serious conviction around this one. This is from Rothschild & Co. on Redbird, who is upgrading it to a buy. They're raising their price target by a large amount, raising it to 1,100. That's about double what their price target was previously. Their previous price target was 560 for this one. And GE Vernova, now look, the shares are not necessarily responding at the moment, but you have to take into account the kind of day that we're having with all the volatility in the market and the downdraft overall for risk appetite. And GE Vernova has already had a massive run so far this year. Here's the thing for Rothschild Redburn. They say surging demand for electricity tied to AI data centers is the tailwind for here, driving a stronger outlook for gas turbines, one of GE Vernova's core businesses here. And they're expecting that global gas turbine market to top 100 gigawatts in both this year
670
and
strikes,
which is above prior forecasts for this sector. The firm also lifting its 2028 profit outlook sharply. They say margins in the power segment could exceed 30%. And keep in mind, shares have rallied again big so far this year into today. Again, today the response in the market is lukewarm. Actually, it's turned positive. It started out under a little bit of pressure, but now up a little bit more than 0.5% right now. AI again driving the surging power demand here, and the gas turbine market growing faster than expected, Nicole.
All right, thank you for that. And look what's been going on in all things energy. In the meantime, I think it's worth noting that oil has now come down below $100 a barrel. Overnight, it was above $119 for West Texas. It has since come down. Part of that was some short covering, I believe, on some trades where people thought it was going down and it was going up, and they got caught on the wrong side of the trade. In the meantime, we'll get to Oracle. Huge news this week for Oracle and some price target moves.
Yes, that's right. We've got Barclays, who is out with an adjustment to its price target on Oracle. They've trimmed it. They've trimmed it to 230 from 310.
Go, baby.
They warned that the company's
Blink it.
accelerating push into AI could weigh on margins in the near term. So this is a near-term margin pressure story here. They say that AI-driven revenue growth should pick up meaningfully in the current quarter as cloud capacity comes online, with revenue coming in potentially ahead of expectations. We've got earnings in front of us for Oracle. So it's a price target cut, but it's not a downgrade right here. They're still maintaining an overweight rating on
Maintaining an overweight rating.
on this, but they're adjusting where they see the price and where they think it needs to be. There is some pressure on Oracle as a result. That stock is down more than 3% at the moment, but they do expect AI-driven growth to accelerate. But again, part of this is a timing issue, and if there is a trade-off here, that you can expect to see margin pressure because of that ramp-up in focus there, Nicole.
Yeah, so we'll have Oracle on Tuesday, Adobe on Thursday, and many others.
Adobe.
And Micron in your sights.
Yeah, Micron's got some analyst activity
MU.
around this. A couple analysts moves around Micron. Shares are under some pressure, but it has a big price target boost here. Susquehanna raising
on, baby.
its price target on
Look out.
Micron's at 525 from 345. So they're kind of playing catch-up.
I'm trying to scalp this 670 strike on the SPY at 147. And I don't know. It's got to do it now or never. I mean, or later. Oracle's down $5. Tesla's down 7. PLTR down 114. I gotta hold this right here. It's 200 or I'm in trouble. I'll get out. 0.25. A lot of red out there. Damn it. Okay. Three black crows. Okay. Amazon down 323. TSM down 530 something. Lulu down 584. Target down 330. JP Morgan down 384. Meta down 1357. I think that's below my support. I gotta figure my way out of this one. SPX are still going down. Slash ES on the 5-minute with a triple bottom. SPY's about to hit my support level at 664.40, whatever that was. They attacked it first thing this morning. Baba, they said Baba. China. Yeah, Baba was up, PDD under $100. Still more drama. Slash ES is about to the VWAP. Walmart 23. Firm must have had some news or something. They're just market trend. General Motors still way overbought. CrowdStrike. Man, AMD. God. What a sucker punch on AMD here. That was good. Well, says he's not off to a good start right yet, but he will be. PLTR was up this morning, up about $10 from last night, from Friday. Falls below 100. Crude falls below 100. Netflix. Oh man, Netflix hit 96. Okay. What a bond, please. You can do it. Oops. SPY at a resistance here to 21 at 85 cents, the 670s. Push it slash ES. Had a snake. And I think we just broke out and pulled back to make a head and shoulders down here. See if 664 holds right here. A little bit lower, but not much. There, right there. Right there. Stop. Stop. We have an inverse head and shoulders on the SPX. Prepare ye in the name of the Lord. I need some money, man. I need to make some money. 0.70 cents. Licky. Inverse head and shoulders on the SPX. Oh no, don't. No shoulders on the SPX. Puts. Lunch lady. We have a megaphone pattern down at the bottom of the snake. Megaphone pattern at the bottom of the snake. Megaphone pattern at the bottom of the snake. Oh my gosh. Jake. Damn, you look hot today, Jenny. Smoochy. No! Okay. She left right when I was going to magnify her. Nicole has a glamorous look about her today, which is okay with me. Oh, damn, Jenny don't look happy. Come on. This is going to be a bad day for Jenny. I need a breakout. We got a Netflix here. It hit my $96 support, but I couldn't trade it. Now, come on, man. Come on, SPX. We all really like you a lot. We're at the VWAP on the /ES. We're at the VWAP on the /ES. We're at the VWAP on the /ES. We're at the VWAP on the /ES, please. They're at the VWAP on the /ES. They're at the VWAP. The /ES. Oh yeah, they're at the VWAP. /ES. Let's go get it. Get it. New low on SPX. Damn it. Looks to me like we're going to get the bottom of the megaphone. And that's going to be real soon. And then I'm going to take SPX. Are you serious? Yep. Almost right to it. With a possibility of getting it up a little bit higher. Come on. Right there. 66, 63, 63, 63, 63, 63. 66, oh, 666, 363, 66. Ooh, that's a powerful number. Damn. 66, 63, 63. 4 6s and 2 3s. 3 6s in a row. Damn, Jim. I'm here to win it. AMD is at the 200. I don't know if it's ready or not. Keep trading this until I get even. The SPY. Hi, this big goofy candle just now on the SP. Oh, that was a SPY. Oh, yes. Let's go. Rivian. All right, there I go. I need a little bit more, baby. Complete the megaphone pattern. We're at the 21 right now on the 1 minute. What's going on here? Interesting. This chart's different than that one. The price is the same, but the moving averages are different. One of them tells me we're bullish, and the other one tells me we're squeezing. One's decisive, one's halfway decisive. It's gonna make a decision. So you got the 9 between the 21, which is a squeeze. And then you got the 9 crossing the 21. Same freaking time frame, but something here has been changed. So I question what's going on around here. Appreciate this trickery. You know who I am? That's what I thought. NVIDIA, AMD bounced off the 200 that Jim mentioned with 3 white soldiers. Oh yeah, I mentioned it. Hello YouTube. Who wants to see my pretty face? Oh, YouTubers. Figaro, it's never been there. It's a crazy day today. Might take a couple days to consolidate, but I think we'll hold this 200. We'll find out on the daily. I'm getting ready to squeeze any second. And I'm not sure which way. This is 6 red dots. I need a breakout. Boom, baby. Ha ha. Now we just hit the 200, so you got an exit idea. You can exit the trade right here or expect a breakout. I'm figuring we're going to get some noise about the oil. We might have a bigger breakout later on, but I don't know about now. But I would definitely position myself here at 84 cents profit. You're definitely at the 200 for an exit idea. Rosen needs. We're at 8.90 cents. $6.70s. Now we did break it, but we still have the chance to pull back. We have 3 white soldiers. And I want you to be very smart and educated on this trade here. You scale out, because I'm up. I either scale out of my position, or if I respect the 200, I stay in it. Or I scale out and hold some. If I stay above the 200, I stay. If not, I sell them all. And we're at the 200 right now. Hello? Yes, James Howard there. We have your mail order bride ready, straight from Ukraine. Price tag of $250,000. Oh, look at that knife. Golly. See what Jim says, scale out? When something's abrasive and thunderistic, may I say? Now watch this. Oh, yeah. Didn't take 55, man. I wanted it 55 cents real bad. These are the 670s. I have an order in for 55 cents. Okay, prepare ye in the name of the Lord. The crowd's going wild here at the sports arena. Mm. $57 cents right here. $57. Rodney. I'm taking another shit trade here. 57 cents. Boom, 670. 500 contracts. Oh. 5,000 contracts. Oh no. 55 cents, please. Needs to hold here. A snake breakout pullback. High or low. $1.55. Oh. Okay, I got that done. I have to get it. Snake breakout pullback. We got a head and shoulders to break right here. 664.
S&P 500 are notable, particularly those participating in the AI frenzy right now. Alex, great summary. Thank you so much for breaking down some of the price action in these markets for us this morning. A very busy day here. Coming up, we will dive into the impact of the Iran conflict on central banks across the world. What's next for rates and more. Morning Trade Live is back after this.
More market drama. Dow down 834 points. So always remember, when you come across 3 white soldiers, you got to make a decision. I got stuck with one, but I sold.
I'm Nicole Pedalides at the New York Stock Exchange.
Sold most all of them.
Interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
This could be a response of what happened with me, getting stuck, and then having to break out and wanting to get out of that trade while I'm green, and holding one just in case we broke the 200, which we didn't do. We broke it, but we didn't break it. In my case of breaking, you got to have a whole body candle before it to become bullish above the 200. So I need like a whole body. Even if it just barely touched it, I'd still count it good. Come on. What's a fudge? Jeez. But it has to have a whole body above there to be bullish. So I'm still skeptical as long as I don't have that whole body of a candle above that 200 on the 1 minute. Now I'm wanting to get back in these, but they're kind of far out of the money. I'd move them up. 666. Play with the devil here. $666. So we had the triple top on the SPX, the megaphone, then it pulled back. Now we're at a double bottom lower low. SPY, come on, baby. I would rather trade the SPY. Jimmy jumped in the SPY down here at 131, past a can of beer. Now we're about to hit the 21 EMA. Will it hold the 9 EMA? Let's go. I'm even. Steven. Come on, break out, baby. The 666 strikes. Whoa, right here. Oh, come on. Break out. And after this, I'm going to go make hangers. Here we go. Boom. Break. So 131 to 149. Boom. Right there. 152, 56. Hit the 21. That it does it. He does it again. 151. 153. Come on. Holy. They're now at 149. I sold some at 152. I should have got 156. I'll be right back. Oak. I'm gonna have to start taking care of myself. I'm getting old.
Employment at the same time. What we can tell from the empirical evidence historically is that higher oil prices cause both. They cause inflation, but they also cause unemployment and a slowdown in growth. If you're asking me what the current cohort of central banks is going to do in this context, I suspect very strongly that it's going to be tilting more towards the hawkish side of the spectrum than the dovish side. I think the experience from the inflation of 2022 and 2023 teaches us that these general global inflationary surges are usually started with commodity price increases. And of course, central banks were late to some extent in raising interest rates at that time. I think those are two important lessons that have been learned from the recent history, and taking those lessons to heart means that these central banks are going to be more inclined to either hold off on cutting interest rates or prospectively raise rates in this context, should it persist.
Look at the Australians. They've already hiked and now talking about every meeting being live going forward. Terry, we have to wrap it up there, but really appreciate your thoughts this morning.
My pleasure.
Terry Wiseman, Global FX and Rates Strategist over at Macquarie. Coming up, we will get a closer look at the big picture with the team over at Charles Schwab. Morning Trade Live will be right back.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
How's it going?
First day, so sometimes, you know.
Next.
Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
We're back on Morning Trade Live. Verizon is lower this morning despite an upgrade to outperform from sector perform over at Scotiabank. The firm raised its price target to $54.50 from $50.25, citing the company's momentum on both subscriber loading and cost improvement. Verizon shares are up 25% year to date, but are down 1.2% right now. Let's take a look at some of the other telecom stocks. We are lower across the board. Suffice to say, Verizon performing a little bit better than the others, but still lower by 1.2. AT&T down almost 4%. T-Mobile is down around 2.5% right now. So we are tracking telecom stocks today off the back of that. Welcome back to Morning Trade Live. It's time now for the big picture. Let's welcome in Michelle Gibley, Director of International Equity Research and Strategy, Schwab Center for Financial Research. Very good morning to you, Michelle. Look, obviously we are tracking this G7 meeting on the oil release. I've seen a couple of lines coming through, but nothing really confirmed at this stage. How are you thinking about things this morning?
Yeah, certainly all eyes are on the supply of energy. And right now, the spike in oil prices overnight really suggests that markets believe this conflict could last longer than initially expected. And there are plenty of reasons for that over the weekend in terms of escalatory rhetoric by the U.S., continued strikes by Iran and other Gulf countries. And we still have this restriction on the movement of oil and gas to the Strait of Hormuz. And we're seeing an increasing number of countries in the region cutting output production, and that's really important. If the war ends quickly, output is shut in or well capped, could really have a slow ramp back up in output, and that could mean the impact of higher energy prices lasts longer. And the reason is that we have this kind of non-linear impact due to engineering reasons. On the LNG side, could have a really slow process to avoid thermal shock to sub-zero cryogenic equipment. And if they start it back up too fast, it could damage or rupture that equipment. And there are other reasons for that. So producers are slowing down production to avoid stopping it completely, but storage is filling up. And certainly if we saw an increase in SPRs by G7, that would help, but it can't completely offset the disruption that we're having at the moment.
Yeah, obviously we have very much shifted from last week to this week, thinking about, the storage pressure building across the Gulf, and no doubt, obviously, we've watched the
Saudis and their moves this morning off the back of some of those reports. I'm just wondering, I was talking to Terry Wiseman over at Macquarie about this a little bit earlier, the insulated versus the more vulnerable. Which countries are you paying the most attention to as to, those big energy-dependent import type countries, which could be the most exposed to this energy shock?
Yeah, the U.S., excuse me, the U.S. is less exposed due to domestic production, but Europe and Asia are more exposed, particularly some of the emerging countries. We've seen South Korea, India, for instance. Those countries are very exposed to imports from the Gulf. In terms of China, they are exposed because they do buy a lot of oil from Iran, but they have a really big SPR. We don't know how big it is, that they don't disclose that, but it's expected that it could be as much as 8 months of supply. So we've seen that China's stock market not get hit as hard as some of the others in the region.
Yeah, and we actually saw some record southbound buying mainland into Hong Kong overnight. So this market is actually performing a lot better than the Asian counterparts. We'll talk about that a bit later, but I'm just wondering how we should be thinking about global markets right now in this context, Michelle, because we've obviously seen the fragility of what has been really seen and acting as a diversifier in the portfolio. But no doubt a lot of these countries and these markets, like the South Korean coffee, for instance, which has been doing very well, now hit with this headline risk and starting to unravel. How should we be thinking about some of these markets when they had been outperforming largely their U.S. counterparts?
Yeah, it all comes back to how long do we have this disruption to energy supply. If it's short term, less than 3 months, I think you could see markets snap back up. I mean, we could get some kind of declaration of ceasefire, potentially this week, who knows? And in that case, we could get a big rebound in stocks. If we look back to February, manufacturing was actually improving globally, and it suggested that earnings could rise. If we go back to that, we could have international stocks outperform again. We could see the dollar erase some of the gains that it's had in recent days. But the longer that it lasts, the bigger the impact on international stocks in particular, emerging markets at the most. So really, it's all a matter of the duration of energy supply disruption.
Okay, and just getting back to obviously what you were talking about with respect to some of the storage pressure and, obviously if this does take a hit to some of the production, if some of these key oil producers are going to be reducing some of their output or at least shifting some of it, as we've heard reportedly out of the Saudis and Aramco this morning. Just give us a sense of the short to medium term impact of that, because my understanding is that it then takes quite a number of months or quite a while at least to get that production back up to full capacity once again. Can you give us a sense of some timelines here?
Yeah, last week we had the Qatar energy minister saying that it could take weeks or months to get back online. They've shut down production there at the moment. And I think the question for investors is, do stock prices rebound sooner than oil prices fall?
Yes.
So, we're seeing the spot prices in oil
Depends
rise, but if you go further out, they, prices are still lower across the curve in the future. The question is, can stocks go up as long as we continue to get oil flowing if it returns? And I think you could see stocks looking out farther than what oil prices are. And so then you could see stocks rebound if we get a ceasefire.
Okay, obviously that would be best case scenario here. Michelle, really appreciate your thoughts this morning. Thanks so much for joining us. Michelle Gidley there, Director of International Equity Research and Strategy, Schwab Head of Financial Research. All right, well, coming up, it's time for the morning trade. We will take a closer look at Hims and Hers, which is rallying in early trade on partnership with a GLP-1 drug maker. Morning Trade Live will be right back.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time,
174.
live at the NYSE, right when it counts.
We're back on Morning Trade Live. Let's focus.
Ladies and gentlemen, 181 to 666. Boom. Marley. Hims and hers. Hims is coming back. The SPY wants to break bad. Things all on down news. Headline: Iran surrenders. I think I made too many hamburgers. I made 2 and only needed 1. Would anybody like a slider? $1.86, $1.89, $1.91. We're at the 63 on the SPX. We bounced off the 200 on the /ES. I just stuck my my finger in some mustard. $1.83. Come on, break it. Jim needs to break the 200 here on the SPY. Better get out of the trade. Make a business decision. $131 to $189. See you later, Mama. Oh! Okay, calm down. Calm down. Calm down. Calm down, Ruth. Calm down. Calm down. God, what's it? Ladies and gentlemen, the only thing that calms me down is a good song. When I was 16, 17, I used to take the girls to the pond, play this song. Come on, baby, sit down next to me. I got some romance I want to be telling you. Remember the first day I laid my eyes on you. And it breaks out without me. It's at 2:45. That would have been $1,500 in your pocket. But just sold for a measly $300. Triple top on AMD. We have a triple top ascending triangle on AMD. I don't care whatever anybody ever tells you. Washboardjim makes the best damn sliders in this country. Do you understand? Oh. No. I'm having an orgasm over a slider, Randy. You act like that when you eat food? Your wife's telling you, I'm never going to take you out to dinner again. The sounds you make at the dinner table are disgusting. As I take the last bite of my hamburger, promise me one day that you'll appreciate the slider as much as I do. We're at the 100 EMA. And we do have a resistance at the 200 EMA. Hey, guys, got a nice house. It's trying to break it. Okay, well, I've got that out of the way. Now I've just got one more thing to do, and I'm back to trading. Asian markets are red. Oh. Boy. Boom. Boom. Jimmy nailed it. Now this is called a megaphone pattern. And you're nearing up to my resistance. Yes, the 200 EMA. We broke the 100. I knew it was going to do that. Oh, now that was a good one. With an encore.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching at Molly Carolyn, still the apple of his eye.
Burp it up, Jim.
Let it fly,
Let it roar.
stocks tend to rise. Narcissistic Jim doesn't
Let's get it on, baby. Woo!
He'll burp and fart out loud until his room stinks. Candles on his screen bounce like titties in the night. Burps get so loud the neighbors say that
boy, right.
Bull or bear, calls or puts, doesn't matter one bit. Jimmy's face can't wait for Nancy to come and sit. Fart for a dip, ass making noise. Burp for a rip, cheers from his boys. Jimmy is grinding away on his washboard toy. Burp it up, Jim. Let it fly, let it roar. Let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his own washboard till that closing bell rings. Narcissistic Jim. Narcissistic Jim. Narcissistic
I
Jim.
thought that was a real good one. Okay, well, it was like the burp didn't meet the judge's requirements. I would have gave it a 9, maybe a 9.2. Meta had a double bottom down there. Called it out this morning. snake breakout, pull back, double bottom, higher low, boom. I'm telling you, I think we're looking good. Let's wait for PLTR to pull back again. NVIDIA had a new high of day, along with AMD, and so did Apple. We're closing in on the 200 SMA on the SPX. Did I not call it? Huh? Yes or no? Yes or no? Someone say yes. Say it, Magnificent. Say yes. Can't get no oh, I got some cooperation. I called the EMA. That's right. That is right. For that, Magnificent gets an F minus. Oh yeah. Hurts, don't it? F low minus. That's flat. Magnificent gets an F flat. Taxes are due pretty soon. I'm going to have to call them up because they ain't heard nothing from them yet. I'm going to do that right now. Oh God, I hate the taxes. Yeah, this is Jim with Always Clean. I was wanting to see if Chevy's in or if he knew anything about my taxes being done yet. Yeah. Yeah, that'll be fine. Yep. Yeah.
Okay, so it looks like we actually tried to call you on February 20th to let you know that these were done.
Oh, okay. Well, I didn't know that. Okay. Well, I'll be up there in a day or two.
Okay, perfect.
Okay, so thank you very much.
You're very welcome.
Bye-bye. Always clean this, Jim. The 20th. Oh, yes. We're at the 21. As long as we hold the 21, we're still bullish. That or we buy puts. Run it to the 666. As long as we hold the 21, we're still bullish on the SPY. That's the white line right here. Better do it again. Ooh, nice. Damn. 666s are now at 362. Ding-ling. 6,700 to the penny, or close to it.
conflict itself, drives this. But, beyond that, it is a logistics issue. The reason that all these ships are caught inside of the Strait of Hormuz and can't go past right now isn't just because of the hot, military consequences here. It's because all the reinsurers, the primary reinsurers of these vessels, have completely pulled out because they just can't take the mathematical risk. And so, of course, we saw, what the U.S. has tried to do here. Trump has said, hey, we'll see that the Navy can, essentially chauffeur some of these vessels through the Strait of Hormuz. They said, okay, well, we'll look at, being an insurer ourselves with $20 billion up on that. But it's just not enough, and it's not happening yet. And so until we can get those insurers back into the marketplace, my concern is that that bottleneck is going to persist.
And Ted, as we're still dealing with these geopolitical shocks and keeping our eyes on these oil prices and the uncertainty around this conflict in Iran, we also got some very important data last week. Employment up to 4.4%. We had that surprising loss of jobs in the month of February. Some noise in the report, but even with the noise, still would have been a surprising loss here. As you look at that data, how should investors interpret that, particularly with the uncertain background that we have behind it right now?
When it comes to the jobs data, the consumer is getting it on both sides. They're worried about inflation again, and now, hey, we saw some highlights in January on the jobs side, and then, to your point, a surprise 4.4% unemployment reading. I think that what's driving this concern really is, of course, the whole discussion about AI. Is it coming for every single white-collar job here in the next 18 months? Is robotics coming for every blue-collar job shortly behind that? We've seen in the last couple of weeks, I think 2 or 3 different think pieces now that have been widely dispersed. Really, I think with a really doomer narrative as this, whole AI jobs discussion happens. And then to boot, we saw Jack Dorsey, the CEO of Block Technologies, of course, his tech firm laid off 40%. Of their employees due to AI. So I think that is really the fear, if you will, discussion around the jobs market right now.
Certainly a lot of fear discussion around a lot of different topics I could throw at you right now. But as we live in this sort of caution and fear-driven environment, I know you always have some picks for us about where you see some potential opportunity. Where are some opportunities in the market right now?
Marley, there is a lot of ways to take this question. The sectors, you can always follow the money, right? Where are the, tailwinds in different sectors right now? Of course, materials, consumer staples has performed really well year to date. But, I might take this question a different angle. There's been such a discussion around the valuations of these mega cap companies the last year and a half, not being accessible to everyday consumers. And a quote comes to my mind from the late, great Charlie Munger. He said, if you just bought amazing companies on the 200-week moving average, you would drastically outperform the S&P 500. The problem is most people don't have that kind of discipline. And if you look at where Microsoft is right now, it's at $400 a share. It's sitting just off of that 200-week moving average. And so when I was looking at that this morning, it did come to my mind what Charlie always said, and I think that may present an opportunity for investors if you're looking at some of those mega cap names.
Ted, it's always such a pleasure to have you on the show. Thanks for bringing that macro look to us and also for some potential opportunities in the marketplace right now. We appreciate it. Ted Thatcher, the president at Bright Lake Wealth Management. And we've got a lot more for you on Trading 360 today. Next, of course, the big 3 is coming your way. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the technicals. Scott Bauer will be here to take us through the trades for Taiwan Semi, the gold ETF, and Goldman Sachs. That's next on Trading 360 on Schwab Network.
From the most iconic trading floor in the world, this is Opening Bell with Nicole Petalides. Live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute-by-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Aw, she's got your smile. Carl. Yep, your #1 broker's here to welcome your new little dependent.
Actually, we invest with Schwab now. We have everything we need all in one place.
I can set up for college fund.
I've been learning about trading strategies.
Schwab helps me generate retirement income. All this Schwab has everything you need is making me cranky.
Does somebody need a nap?
Schwab!
Invest your way with Schwab.
Welcome back to Trading 360. I'm Marley Caden. It's time for the big three.
Woo!
Three stocks, three
Where's the
charts,
next
and
one?
three trades for you today.
200.
Rick Ducat, of course, will take us through the charts, and here to take us through the trades today, Scott Bauer, the CEO
Yay!
of Prosper Trading Academy. Scott, great to have you with us. A bit of a wild day. We are off of session lows, but still, firmly trading down in the red here. A lot of concerns about oil prices. We're right about 100. I think we're dipping under 100 now, but still very close to that level. What are your thoughts
She wearing
on
that dress?
off the action this week?
No, she wearing a different
we
one.
don't know what is next.
But that looked good on her.
frankly. And what's really unreal is that in the same
We're at the
day,
200.
it's possible that we're going to see the biggest spike in oil prices and the biggest decline within the same day.
Whoa.
So, the market is trading on every last bit of news, every latest news that comes out, especially in relation to what's going on with the Strait and oil and tankers getting through. So I think, people trading in this market, it's fantastic for day trading.
Yeah.
Traders, love this volatility.
We do.
If you're looking for a little bit longer timeline on whether it's an option play or just, looking into some stocks or whatever, pick where, you want an entry to be and then just start kind of piecemealing your way in.
All right, so speaking of picking an entry and where you want to be, your first pick today is Taiwan Semi. On the year, doing very well, but over the last month, it has been dragged down sort of more broadly with the market trading lower. Does that come into why this is our first pick today?
Yes, and I think it's way oversold. It is down to some really major support, and there's so much of what goes into a decision, and is the overriding geopolitical issue, is that going to de-escalate a little bit? Is it going to escalate a little bit? But as a longtime trader here, I'm looking at technicals, I'm looking at fundamentals. I love Taiwan Semi. The reason that I am putting on an iron condor is because option premium, implied volatility, is so expensive. So this is a position that is bullish. I am looking for somewhat of a range, but it is bullish, but I'm able to collect a lot of premium. So I'm selling this week's pretty much at the money put spread, 335, 330 put spread. I'm also selling to collect more premium, the upside 360, 365 call spread, collecting $2.60 on that. My risk is $2.40. I love this position.
All right, Rick, so as we take a look at the technicals here on Taiwan Semi, on TSMC here, we've seen that they had this really nice uptick. They are higher on the year, but a little battered over the last month.
Yeah, it kind of reminds me of the expression, the bull climbs the stairs, the bear jumps out the window, because we have this more gradual ascent and then a very sharp, swift decline. That's often the case in trading. Be prepared if you start to see things start to roll over at a notable high point here. But now we have a very narrow, very tight, downward sloping channel type shape in blue here, starting with those highs near 390. So we're still in the midst of this here. One gap level that stands out right about here near 364. We haven't quite filled that gap yet, so that stands out as a potential upside resistance area. To the downside, side, we had a double bottom type of pattern here near 318. Just below that 312, a repeated ceiling here. So that was also where we had a low point after our gap up. So that means that this area here stands out as a potential supportive area. Also, it would be pretty close to this longer term trend line as well. Those things would all kind of come together right around that same area. When we look at our moving averages that we follow here, we can see that we are right now trading near our gold quarterly 63-day EMA, coming in right around 336. So this is a notable longer term EMA. It'll be interesting to see if price hangs on and can stabilize at this important moving average here that traders would often use as a support during uptrends, resistance during downtrends here.
What is it?
Moving lower, we are breaking our downward slope, or excuse me, upward sloping green trend line here. We have our downward sloping red trend line still in play. We are below the 50 midline here. So despite that, we're not too terribly low on the RSI. We're not oversold or anything yet here. So despite our decline, it kind of seemed like it was holding up a little bit better than you might expect to me at this time. Now, when we also look at our volume profile study, we are within the boundaries of this node here from
So I got back at 200.
340, so you can see that we have this spike in trading activity. Things start to pick up again here near 355, but the major important area on this chart here, between about 284 to 305, our point of control is included in that area near 294, the heaviest volume area of all. That's the real standout area from this perspective.
All right, and right now as we look at TSMC, they are trading at 336.81, just down slightly today, but on a down day in the markets. Let's move to your second pick here, Scott. You've got the Spider Gold ETF here, ticker GLD. Take us through this one.
Rinse, repeat. It's really the
Rinse,
same
repeat.
explanation is what I'm seeing in Taiwan Semi. So because of the just inflated implied volatility option premium, I want to sell another iron condor that expires this week. This also has a bullish tilt to it. So I'm selling this week's 465, 460 put spread. On the upside, the 480, 485 call spread. This one I collect $3. So the ultimate risk on this, if GLD made a big blowout move one direction or the other, is only $2. So again, a lot of option premium here, a big credit to collect.
All right, so potential for a big credit here, but as we look at the technical setup, Rick, what's it showing us about where we might see some movement?
Well, the picture's a little bit muddled right now, I would say, because we did have this very sharp rally to the upside here, culminating with these highs just shy of 510. But from there, we had an equally sharp decline that took us back to this gap level here. From there, we formed an upward sloping pattern here, a rising wedge type shape here, where we have our two trend lines converging toward each other, but the lower one is more steep, the top one is more shallow, suggesting that we see increasingly anxious buyers and relatively more consistent sellers here. So typically this would be more of a downward bias type of shape here. We topped out here near 490. For now, it's looking like we are bouncing around near 468 or so. A couple of notable lows, 446 and 441 here match up with some extreme low price points here. So those could be supportive areas, especially because they do line up with our longer term blue trend line that was pointing up as well. When we look at our moving averages next, in this case, we can see that we are kind of stuck between our two shorter term ones, our dark blue weekly 5-day EMA, our teal monthly 21-day EMA. Those come in at about 471 and 467 respectively here. So very short-term boundaries
Correct.
you can consider in your trading here. Meanwhile, our quarterly
Now we broke out of the
here
resistance level.
440. RSI,
And
kind of a
at
triangular
SPX,
shape here, but
we do
are
have a
above
body.
the 50 midline, and we are above our green trend line still.
We do have a body above the 200. We're starting to break out.
consolidation, support and resistance. So we have our peak here between 450 to 470. So this is kind of a bigger range to consider. We're near the upper end of that part. But you can see pretty obviously there was a notable spike here near about 425 to the downside. So that could be a possible foothold. Notice as well, extremely heavy volume that we saw during this push to the upside. Look for things to pick up again in volume activity if we start breaking above once more.
All right now we're at 467, trading down close to 1 1/3% today for the Spider Gold ETF. A similar move in gold this morning as well, trading down about 1.2% for gold, right about 5,100. Now your last pick, Scott, Goldman Sachs here. They've gotten sort of caught up on some of the beat down on financials, sort of this credit conversation that's been going on and cockroach mumblings here and there. What's your take here, and is your trade a long-term play or a short-term play?
It's another short-term play, looking to take advantage of both major support with 200-day moving average just below kind of where we're trading right now. And again, just like the other positions, take advantage of really extreme implied volatility option premium. I love Goldman Sachs. I love JP Morgan. I think, two of the best in class in the financials. But in Goldman, what I'm looking to do is sell next week. So it's not this week, it is next week's March 20th expiration, selling the downside 790, 780 put spread, $10 wide, looking to collect about $4.50 for that. That is also a very nice amount of premium. And on this one, the way that I'm looking at it is my break even on the downside end of next week is 785.50. If Goldman were to get down there, I'm a buyer at that point anyway in the stock. So this way I'm playing it with really expensive options, collecting a credit, and we'll see what happens.
All right, we'll see what happens. But Rick, as you look at the technical setup here, what is it here?
Sure, mostly the trade would be looking for our lows of today to hold on. So kind of hoping that this would be a line in the sand at which the bulls would regroup and kind of send prices back up higher. 826 and 840 were some notable high points here. That's around where we saw prices see some slowdown and stopping here. But for now, we have solidified more toward the downside. We had a downside breakout from our a downward sloping channel type shape in white there. We had notable fluctuations here. You could argue that we had this general range between about 870 probably around 960. That's where price typically topped out more. We did have those highs just shy of 985, but that was our range for a while. So now we're below that point. So look for that area, and particularly 870, to be a notable resistance point that the bulls would want to retake. So now when we see our moving average, in this case, we have kind of nice different examples of our moving averages for all our charts here. Now we're seeing one that's more in decline. So our faster moving averages are starting to overtake our slower ones. Particularly today, you can see our teal 21-day crossing below our gold 63-day. Not exactly the greatest trading signals in and of themselves, but an easy visual cue to see which way the trend is going and the way things are progressing here. Look for potential support here at our long-term 251-day EMA in orange. 769 is where that one comes in. That's our yearly EMA. RSI showing a pretty consistent downward slide. We did see some bearish divergence here despite RSI going into that overbought area. For now, we are on the verge of slipping into that oversold area though. So a move below 30, a close below that level on the RSI would be noteworthy here. That would be potentially regarded as a sign of further weakness to come in a trending market. Now when we also see the important volume nodes, we are coming up right to the most important one of all, between about 770 to 800. Our point of control, our thick red line there, sticks out at 782. So this would be
I think we just hit my resistance level.
For, the bulls to hold on to. They would want to solidify there and get a bounce back to the upside. Hopefully they would be targeting this area here between about 900 and 950 roughly.
All right, and we are trading above that yearly EMA that you highlighted right now at 810.79, but down slightly just on the day here for Goldman Sachs. Scott, we want to thank you for being with us.
That would have been a good keeper.
For bringing those picks and trades for us. Scott Bauer, CEO of Prosper Trading Academy. And of course, thanks to Rick Educator, lead market technician, for always breaking down the technicals for us. Coming up next, we are going to spotlight oil and how the Middle East is responding to the conflict. Stay with us.
Man.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network. Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Marley Caden, live at our Chicago headquarters. It's time to spotlight oil production in the Middle East. Joining us now, Ben Emmons, the Chief Investment Officer and founder at FedWatch Advisors, to take a closer look at oil. Ben, great to have you with us today. You know, we saw oil spike almost as high as 120. We're still sitting pretty firmly right around that 100 level, which we haven't seen since the outbreak of the Russia-Ukraine conflict in 2022. I'd love to just start with your thoughts on this action that we're seeing in oil.
Yeah, absolutely. I mean, it was quite extraordinary last night because, you know, it went actually almost straight up. You know, it opened at something like 105 to $105, and that just right to 120, almost like that in no time. So I think what happened there was what we call a short squeeze. Too many short positions in options and futures that drove those people to close those shorts. I think this
guy's funny
the
looking.
price action is a bit subsiding now around that $100 per barrel because these positions have sort of washed out. I think really was driven by that people are fearing that the production in the Gulf is going to start shutting down even more than what it is right now, and that would lead to a major, let's say, supply crunch. And as much as G7 wants to try to add some reserves, if they do that, I think the market's very jittering right now. That's why we're staying around $100 per barrel.
And Ben, there was something really interesting during the rally that we saw that is atypical, or at least I think it's atypical. We saw crude and Brent trading at basically the same price, and then that almost never happens. What does that tell you about the market right now?
That is, like I say, full risk off in the oil market. I think that on the one hand, it was the WTI, which always trades a little bit at a discount to the Brent for the specific reasons. But in WTI, there were the big short positions, and whereas in Brent that was not. So I think that was one reason. But the other reason was just, as I said, like a complete meltdown of sentiment that people just see. It doesn't matter, you know, whether Brent or WTI trade $1, $2, $3 for one another. It might as well be the same because we're dealing with shutdown of production everywhere in the Gulf. And that's all reflected in both oil prices and affecting everything. So I think that's really the reason why that happens. But it's extraordinary. It doesn't really happen like you said.
And as we look at the pricing, you know, spot prices were trading, you know, about $20 above where futures were. That's a very wide premium, at least the widest that I could see in the last 10 years at least. You know, is that what is that signaling to you about what traders believe as to the duration, the potential duration of this supply shock?
Yeah, that spread, that $20, I think that hasn't happened since the 70s. So I think the market is definitely trading a supply crunch that may be as severe as the 70s. That's really extraordinary because whatever you trade on spot, the futures reflect where they ultimately will settle in the future sometime, and that's very supply driven. So you can tell like the immediate delivery will be like there's just no delivery of oil, right? And therefore there's that $20 premium. So there's a very, very overly tightening market, and that's amazing because we were initially talking about an oversupply market, and now we're getting to undersupply market. At least that's what that premium suggests. So we'll stay that way, we'll see, because I think if the G7 does start adding some reserves to the oil markets, that may ease off a bit, but it is very tense, so it's definitely a stress factor.
And Ben, obviously this is an ongoing situation, ever changing with the price action that we've seen. You sent over some notes over the weekend in advance of our conversation where you said that you estimated roughly between 2 and 3 million barrels per day going offline. Then you were kind enough to send some updated notes with the changes we saw over the last 24 hours. Now you're estimating that number to be about 5 million barrels a day. How big of a potential disruption is that for the global supply, and how disruptive would that be overall for the energy markets if we do actually get to that 5 million barrels a day?
Yeah, it would be major disruption because that's sort of I would say like a doom scenario, that's a huge amount of oil just offline daily, and some people estimate that could even grow to 10 million. Although that represents 6% of total annual production, it's very centered in the Gulf, and it's where most of the oil flows take place, right? The Strait itself represents 22% of the oil market flowing through, so the 5 million is a huge amount. And as you think of it, but if the G7 were to apply all their reserves to make up the shortfall daily, they'll be running out in 240 days. So it's not even as much time. So I think that number tells us we're really here on the time crunch to try to resolve this conflict. And actually what it really tells me is that we're not really in control of this unless we get some sort of Armageddon outcome that would take total control of Iran and all the attacks stop. That seems to be a pretty daunting outcome, to be honest. I'm not sure that happens. So 5 million could become even more, for that matter, in terms of the supply disruption.
And Ben, there's so many different components here in terms of the logistics and the storage and the disruption with the Strait of Hormuz and the pricing of the oil itself. But what is if you had to pick one to focus in on, what would be the single indicator that you would watch most closely to tell you if this oil shock is going to stabilize or if it becomes a much greater global economic problem?
Yeah, I do think you want to think about the flow of oil coming through the strait. I think that's one major indicator. Meaning, if you see some restoration of ships making it through, and you can kind of measure it that way, that will give us a sense of that the oil is finding itself out there in the world again, right? Instead of being clogged in the Gulf and not going anywhere, and then it runs out of storage. So I think we want to keep watching the strait. And there's some talks about there are some ships able to sail through with different flags and doing it in a very dangerous situation where it's happening. So if we see more examples, I think that's the watch. I think if that changes, if you see more ships coming through, then the oil risk will start to diminish, and people start to price in a bit lower these premiums that we talked about, and we get a little bit less disruption. But nonetheless, what's happened over the past week, though, including this weekend, is in itself the oil shock that we're dealing with, which is the largest since the 70s, I think. So it will impact the global economy, especially countries that are net importers of energy, like China, like other Asian countries, even in Europe. And you can tell from the stock markets and the bond markets they're underperforming the U.S., who fortunately has enough oil as we speak.
Yeah, Ben, my last guest, highlighting that we may be seeing the biggest rise in oil and then the biggest fall in oil prices in terms of a daily chart that we've seen ever, all in the same 24-hour period potentially today. But we appreciate you being with us to take a closer look at oil action in the Middle East and what metrics are most important right now to keep an eye on. Ben Emmons, the Chief Investment Officer and founder over at FedWatch Advisor. Thanks again for being with us today. Coming up with Disruptors, we'll be taking a look at Micron after a pair of price target hikes ahead of earnings. That's next.
Her name is Marley, yes. Schwab morning watch list. Where do you get that at? Huh?
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
Stay connected.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Oh.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more.
What?
First of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Marley Caden here in our Chicago headquarters. Let's head out to the New York Stock Exchange for a check on the markets. Welcoming Nicole Petalides, host of Opening Bell and the Watch List here on Schwab Network. Nicole, great to see you on this Monday morning. You know, we're firmly 2 hours into trading now. What's catching your eye so far this morning?
Without a doubt, you know it's the commodity story, and oil in particular, which surged above $119 a barrel for West Texas, getting close to $100 a barrel. We have not seen these levels since 2022, and that has pressured stocks enormously overnight and sort of spooked the market. You also saw the VIX moving in the 30 handle, right? We also haven't seen that since last April. And last week, obviously, there were a lot of jitters on the heels of what's been going on with the geopolitical conflicts in the Middle East and Iran. And so last week was a tough week for stocks. It was our worst week since April as well. And it's worth noting that our jobs report was somewhat weak. So now this week we're looking forward. We're waiting for CPI and PCE and the consumer sentiment and other, you know, pieces of information and earnings, but you've got to bring that oil story down, and it has already somewhat happened. You have a G7 meeting coming up. You have folks talking about releasing some of strategic reserves. You also had maybe a bit of a short squeeze on oil in West Texas in particular, not Brent, and so that also may have brought it down. Right now, you know, we're seeing more like $96 a barrel, still a noted amount and level per barrel, because a week ago we were below 70, right? So this is a big move. It will affect gas prices. It could be an inflationary piece to our economy, but it does seem at this point most folks on Wall Street think it will be somewhat short-lived and that things will change in the summer, and then, you know, strategically they'll set up for midterm elections and sort of navigate things a little differently on the back half. Marley?
All right, and I want to take a closer look at this surprising deal from Novo Nordisk and Hims and Hers. We've talked together about the ongoing litigation that they had up until now and some of the discourse between the two companies and accusing of selling dupes and copycats and that being potentially illegal now that there's no longer a shortage. But then a surprise today, a significant boost for Hims as they're announcing a partnership.
Yeah, I mean, I almost couldn't believe it myself, because as you noted, there's been a lot of animosity and legal ramifications that have been put out there from Novo to Hims and Hers. Hims and Hers is surging today. It's amazing because now they're back on. It's sort of like this story of we're better together with Novo Nordisk and also Hims and Hers. There was a time where Novo came in, said you're doing the copycats. We don't want you to offer our drugs, particularly at lower prices, or have compounded GLP-1s. They moved with legal fire for that. And now the CEO said, look, we're dropping all of our current court proceedings. Of course, we reserve the right to bring them back, but we don't see that happening. In fact, and as you see, Hims and Hers up 37%. It was up, 40, 50%. Had been down 50% when the whole thing blew up, right? Remember that in February, but now we're back. And both of these stocks have really been at 52-week lows. I'll tell you, Hims and Hers is down 50% in 6 months, and Novo Nordisk is down 50% in 1 year. So maybe it's a story of better together. And the new deal here is that Hims & Hers will be allowed to offer Novo's products, and we're talking about Ozempic and also Wegovy, and these will be in the pills and the injectable forms, and that'll be a rollout and will be all at once. But at the same time, Hims & Hers agrees to a couple of things. One, they won't be offering discounts and such. They'll be somewhat competitive in pricing to other online sales, and also that they won't be advertising that we have compounded GLP-1s. That's probably something more like Zepbound, Eli Lilly Zepbound. So it looks like they're back to their romance here to try and give a boost to the sales and the story. And so for right now, it seems to be good news for the companies. Marley?
Yeah, certainly seeing a nice boost, up about almost 38% for Hims & Hers today. Novo Nordisk trading almost 2.5% higher. Nicole, we appreciate you breaking down that story for us. That's Nicole Petalides, and now it's time for our disruptors. George Stillis, our senior markets correspondent, here with today's company. We're talking about Micron getting a pair of upgrades ahead of earnings today. You know, George, can you take us through these notes and if they've got new price targets involved?
Yeah, so I mean, we know Micron, we've talked about this one before in terms of the huge demand for high bandwidth memory and data centers. In fact, the big catalyst going into last year, at the end of last year, was really OpenAI really securing about 40% of total high bandwidth memory from the three major manufacturers, Micron, SK Hynix, and Samsung out of Korea. And that's essentially why, because of those two companies, why the Korean market has been on a tear over the last 6 months or so. Nonetheless, if you look at the demand for high bandwidth memory, it's tremendous. There's a huge backlog. Supplies are really tight. And in fact, Micron has actually discontinued manufacturing memory that goes into PCs and, of course, mobile devices. They're really focusing on where the margins are and pricing power. That's essentially why some of the analysts like Susquehanna and Citi today, both of those names upgraded the prices, $525 for Susquehanna from $345, and Citi actually increased their target to $430 from $385. They actually see tremendous pricing power. In fact, if you look at the DRAM prices on average between 140 and 170% this last year compared to the previous year. And the effective backlog for high bandwidth memory is so tremendous that it's going to take some time. Some estimates have growth in the 30 to 40% range in sales for these businesses all the way into 2028. So that's really a huge catalyst for Micron alongside the other two major global suppliers. And effectively, this backlog and supply constraint is most likely going to continue through 2028.
And George, you know, as we look at Micron here in advance of their earnings, they are trading higher on both of these notes today. We're waiting for their earnings, of course, on the 18th. But as you look at the setup, you know, year to date, they've been performing really well. They're up more than 31%, you know, in the last year. Certainly, I think it's north of 300%. One of the few companies not being dragged down with the overall markets here. How do you look to trade this name with this move to the upside, its performance year to date, and the earnings event coming into play?
Yeah, what you'll notice is the stock is actually in the past few weeks or so pulled back alongside the market. We don't know what's going to happen. I mean, we're having a good rebound today. So nonetheless, volatility in the market is still very high. Anytime there's volatility above 20, I'll sell premium. And that's what we're going to do it again today. If you look at Micron, there's a rising 20-week moving average that's nesting around the $335 level. Going into earnings on the 18th, anything can happen. So what I'm going to do is I'm going to take advantage of the high volatility. And I'm basically going to sell a March with 11 days to expiration, $350 put. And altogether, you can earn about $15 a share or $1,500 a contract. So in essence, by selling this put, you basically will earn between now and expiration in 11 days about a 4.3% yield to strike in 11 days. So if you annualize that, that's quite good. And again, it gives us some flexibility in case oil starts to continue to spike again. In the near term, we'll probably see some additional pullback in the semis and the markets. And at the same time, if you look at that break-even level, it's around that 335, which is, again, right like I said earlier, is nesting around that 20-week moving average. So again, if the premium starts to erode prior to earnings, you could certainly look at exiting this trade prior to earnings. But if you're feeling pretty brazen and you want to hold it through earnings, you certainly could, because this expiration is 2 days after earnings coming up on the 18th.
All right, and right now we're looking at Micron trading higher on the backs of both of those nodes from Susquehanna and Citi, trading at 375 this morning, up 1.25% despite the broader markets being down pretty significantly. George, we appreciate the example trade and also taking us through both of those notes on Micron today. Coming up next, we've got our 360 round. We'll be highlighting crypto amid the global conflict, what it could mean for Bitcoin prices, Ether, and more. That's next.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. It's time now for our 360 round to discuss crypto. Bitcoin down more than 20% in 2026, hit a new 52-week low last month. Joining us to discuss some of this action today, Andy Baer, Managing Director of Asset Management at GSR, and Samir Kurbaj, the CIO over at Hashdex. Thanks for both being with us. I'm just taking a look at Bitcoin prices right now. We are more than 2% higher, but still in that 68, 69,000 range that we were able to break out of and now find ourselves back in there. It's been such a ride watching Bitcoin lately. We were below 65,000. We got ourselves back up above 70. Now we're kind of back in that range. Samir, let me start with you here. Does this kind of volatility reinforce the idea that Bitcoin is becoming a macro asset that reacts to global events?
Marley, Andy, it's great to see you. Bitcoin is a global asset, and what we've been seeing, especially in the last few weeks or so, is a lot of volatility in crypto prices. We expect, especially when missiles fly, right? We expect to see volatility in risk assets, and Bitcoin is not different from that. So I think Bitcoin has been trading very close to, in general, like tech stocks, anticipating the move since the market is 24/7 and doesn't close. And we expect to see, more volatility in coming days as, the outcomes of this current conflict are still unknown.
And Andy, Samir just made a good point that we see the action in Bitcoin in advance of the markets because it trades 24/7, but we oftentimes see the sell-off happen because of its 24/7 trade-off, and at times it has seemingly absorbed some of the shock before the traditional markets have opened. What are your thoughts about that dynamic, and if we'll see that become more the norm or more common as we've seen this uptick in institutional participation in crypto?
It looks like we're going to lose the last sacred thing, which is weekends, right? That you'll have these macro assets that are trading in good markets with good liquidity and weekends and overnight in such a way that, as you say, can absorb shocks. But even still, think about the last month or the last kind of 5 weeks. Holding a range between 63,000 and 70,000 for Bitcoin is actually kind of steady, right? And even if it did absorb some of those shocks over the weekends, it usually has kind of pulsed back. The market is still kind of trying to absorb a lot of the liquidity events that happened last fall and in the beginning of February of this year, and have been pretty stable since then, with Ether around 2,000 and Bitcoin in the high 60s. So I like the resilience actually that the market is showing at this point, unlike gold and oil, which are really trading at premiums right now. Crypto's kind of trading at a support level. So yes, I think it's done a good job of absorbing and is just looking for a reason to go higher at this point.
And Samir, I want to talk to you about this digital gold narrative. I spent a lot of the last year calling Bitcoin and crypto, Bitcoin particularly, the digital gold. And In the sell-off we saw at the beginning of the year, that stopped. We aren't saying that as much, but it's coming back into the conversation now. What are your thoughts on if this tension that we're seeing and the geopolitical risks in the Middle East, is that reinforcing this narrative of digital gold, or is it challenging the narrative of it being a digital gold?
Yeah, so this narrative of Bitcoin being a digital gold can be very confusing, especially if you expect Bitcoin to trade very closely with gold. And in fact, if you look at the correlations, Bitcoin has been trading closer to a NASDAQ 100 than with gold, so showing higher correlations with tech stocks than to gold. And I think this is part of the whole investment thesis on Bitcoin. So the thesis that we have on Bitcoin is that it is an emerging digital store of value. So it has a lot of characteristics of a good store of value, but it's still not being adopted, especially from the central bank standpoint. It's not being adopted as a store of value. So Bitcoin right now is not on the investment policy of central banks. That's why when central banks start buying gold and gold starts marking those higher prices, Bitcoin is not reacting to it because it's not the same buyer. So we expect to see this behavior of Bitcoin behaving both on the short term as a risk asset and on the long term as a reserve asset. So it's a very interesting case. It's a very interesting asset to look at, especially when the demand for non-sovereign store of value is growing exponentially, like we've seen in the last few months.
And Andy, you've mentioned that this next Bitcoin rally could look different than we've seen in the past. I know there's been a lot of conversation about the Clarity Act and this regulation coming to pass. Is that going to be the catalyst we need to see that move to the upside?
Yeah, I think so. You know, in the second and third quarter of 2025, we had a really tremendous rally that had good breadth, and the breadth was based on the fact that we were expecting the Genius Act to be passed, which it did on July 18th. So you had a tremendous rally that was more led by Ether than Bitcoin, and it brought the rest of the market into a very excited state. Then we had our drawdown in the fourth quarter. So now there is enough going on with the slow money, with integration of financial markets, that you would be pretty surprised to see a Bitcoin-only rally here. Even if you just look at the top three assets, Bitcoin and the top two layer one blockchains, Ethereum and Solana, right there you kind of have a package of what you could expect to react to the next time that there's a rally and the rally gets some purchase.
Well, we appreciate you both being with us to highlight Bitcoin and crypto prices. Andy Baer, Managing Director of Asset Management at GSR, and Samir Kirbaj, CIO of Hashdex. Also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store. You can also tune in 24/7 on schwabnetwork.com. Stay with us. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. It is noon Eastern here at the New York Stock Exchange, and stocks remain under pressure, though off the lows of the session amid a rise in crude oil prices. Let's get right into a check of your scorecard as we hit the lunch hour on Wall Street. You are looking at the S&P 500 lower, but it's lower by just 0.5% as we see some fight back from the bulls. Information technology leading the sectors in terms of gains, so we still have some that are solidly in the red. Energy and consumer staples on the plus side right now. The Dow is lower. It is off by 0.8%, but again, we are off the lows of the session. NASDAQ 100 is really fighting off the mat here. NASDAQ 100 only off by 0.1% right now. Russell 2000 is down more than 1%, but again, coming off of those lows that we saw earlier in the session. This comes amid crude oil prices, which are now not at $100 a barrel. Earlier they were. Crude oil still higher right now, but pulling back from that $100 barrel level. Here's the roadmap for today's show. We'll look at example option strategies for Boeing. Plus, we're heading to the general store with a team from Lightfolio bringing new sentiment data on Casey's General Stores. And HPE is also on our radar today ahead of its earnings, which come after the bell. Now that we've got the roadmap for today's trading action, it's time to bring in my co-host. You've got Tom White in our Chicago studio and Joe Mazzola, head trading and derivative strategist Charles Schwab. Kevin Hincks has the day off. All right, this was originally a rough day for Wall Street with oil spiking above $100 a barrel. They're off that roughly $120 level this weekend. Then you had the G7. They held a meeting this morning about next steps. The group says they are not there yet in terms of releasing emergency oil reserves. And listen, maybe they read the room before we did. Tom, your thoughts?
Yeah, I think if you take a look at the rebound that we're seeing off of the session lows, it's due to the fact that crude oil has been back under $100 a barrel. We're sitting about 95, 96 bucks a barrel. That's still elevated at this point. We're still seeing volatility levels rally, but this is a nice reprieve. Now you got to remember, and we've been talking about this for the last week, is that the influence that oil is going to have over the risk on assets, whether it's equity market, whether it's the bond market, whether it's the VIX and volatility at this point, that's going to probably continue because there isn't any surrender on the board. There's no real traffic going through the Strait of Hormuz at this point. So yeah, it's all going to be relying on it, but it's probably nice to see that we're more than 1% off the lows as far as the S&P 500 futures. From earlier this morning and overnight, and then crude oil, which touched above 119 a barrel. That was the highest level since mid-2022 after Russia invaded Ukraine. So we're starting to see some signs. But you mentioned the G7. They had a meeting this morning. They concluded that. They're going to talk again tomorrow. We've seen production cuts across the board from a lot of the Middle Eastern countries, and that's also putting a strain. But contained right now with the pullback. But as we know, anything can happen going into the close or for the rest of the week.
It's true. The day is still young. Joe, your thoughts when you look broad strokes across the market?
Yeah, I mean, last night when the futures opened down with 1.5%, I think they pushed all the way down to down 2%. Crude traded up to 119, as Tommy said, as you know, it's one of those. All right, buckle up. It's going to be one of those days, and it's interesting to kind of see, you know, how technology's taking the lead in kind of pulling us out of the lows. You know, Tommy mentioned this idea about 2022. That's the highest level that we saw since 2022. I think, you know, if you make a comparison between oil prices now versus oil prices then, you can make the statement that or make the case that we're becoming a little bit, the world's becoming a little bit less dependent upon oil. We've been switched to EVs, and then there's strategic reserves been filled. I think one thing to think about, though, in terms of the consumer, and I think this is a really important point, something to be watching as we look at consumer confidence, as we look at retail sales, all of this stuff over the next couple weeks, because, I mean, there's a good chance that this carries forward over the next few weeks, if not longer. One of the big things to take into consideration is, remember in 2022, people were getting stimulus checks. And so there was more disposable income coming into the households at that time than where we're at now. And so I do worry in terms of kind of what this could do for GDP, for spending, and for disposable incomes as a whole, if it carries on too long. Hopefully this is something that ends rather quickly, but if you're reading the tea leaves, it doesn't seem like that's the base case right now.
Oh my goodness, Joe, I forgot about that. I mean, I remember that there were stimulus checks, but we're just several years gone from that, but I forgot about that, and we already know that households have been spending down the extra savings. Plus, there's data recently that shows that households have been dipping into 401ks at a higher rate. So something certainly to keep on our radar. Another thing to keep on our radar, the gyrations that we're seeing in airline stocks, cruise liners as well. You got the travel sector losses. We know that there's concern about the fuel costs and then how those will impact profits. We still got United down 3%, though it's off the lows of today's session. Earlier it was down more than 6%. Delta's down, but only like less than 2% right now. American under pressure, Carnival, Royal Caribbean, all of those, and Norwegian all under pressure. For Delta, American, and Royal, they've dropped double digits since things began. Tom, your thoughts when you look across that sector?
Yeah, it's going to go right to margins. Jet fuel prices, the cruise lines are down, travel industry stocks are down due to the fact that, hey, maybe, with this shock in oil prices that's going to negatively impact these sectors. Also, what it's going to do to the consumer. I mean, Joe kind of mentioned this, that, yeah, we were getting stimulus checks back in 2022, but at the same time, crude oil prices and gas prices are coming from really low levels that we just saw a week and a half, 2 weeks ago. The national average was at lows that we haven't seen for years, which is great, right? It's a great base to come off of. Now I think you start thinking about the concerns about the consumer, right? Are the airlines going to be able to manage this? As far as their costs, their input costs. And then you start looking at the consumer. Are we going to go into some type of stagflation shock effect here at this point? Due to the fact that, hey, if this doesn't get resolved, this conflict with Iran doesn't get resolved within 2, 3, maybe 6 months or something like that, does that really negatively impact the consumer if crude oil prices are above $90 a barrel or maybe even $100 a barrel? So there's a lot of questions out there. We're coming from a position of strength as far as jobs data, wages going higher, the price of fuel that was really low prior to going into this conflict. So there's a lot of minutia here, but the longer it gets extended, guys, I think that's when you're going to have to start throwing up those red flags if they start coming into play where, hey, if we start seeing any stagflationary pressure where, hey, inflation's going up because crude oil is going up, but then again, consumer spending's going down because oil prices are going up, and maybe those job losses start to accumulate even more or start to ramp up even more. We saw that negative 92,000 that we saw last Friday. If that becomes a trend, that's I think some concerning things on the in the near term, at least anyway.
Yeah, Joe, that begs the question, is the spring break maybe on still, but I don't know about the summer travel season. Your thoughts, Joe, what do you think about the airlines and the cruise liners?
I've got a high school senior who's already talking about her spring break trip, and it scares me, so I'll just pretend like I didn't hear that one. Here's the other thing to think about too, guys. It's not just cruises and airlines, it's plastics, it's fertilizer, it's food, it's everything that, you know, energy touches to a certain extent. I mean, it's so ubiquitous in, you know, within our society that, you know, energy just touches everything, that it's hard to imagine it not being steeply inflationary if it just continues to drag on for a while. And you know, I look at that and I see kind of what the betting markets are looking at in terms of how long this is going to last, and then, you know, what that could mean for the Fed and any type of a pivot. I don't see a base case for a raise right now, but I sure the heck don't see any cuts here probably until late July, even the fall. But, you know, that might even be off the table. So markets are going to have to digest this. Even though it seems like we've seen a lot of volatility the last couple of days, when you hear that, markets have been pretty sanguine in terms of, you know, their response to this. So I do wonder, you know, at what point do markets, you know, look at this and say, okay, this is going to be a little longer than we expected. It could be a little bit more damaging to the economy than we expected. And at what point do they kind of give it up? And you know, my kind of line in the sand that I've been looking at is maybe around that 200-day moving average, or it's 65, 60. We didn't get there. I'm not saying that we're going to get there, but that's something to pay attention to. We've already, you know, taken out, or at least touched, taken out, but we touched the October lows that we saw. So, you know, it's a market that it's a bit skittish right now. It's trying to figure out, just because of all the headline risk and the volatility, you know, where it's going to stop and then rally back from. Today, look, I like the print. I like the fact that we're seeing some strength today. But, you know, one thing that I would be cautious on is if you do start to see rally, you start to see that VIX get back down around 20 or so, might not be a bad idea to do a little bit of portfolio hedging should this last longer than we initially thought.
Okay, so we got the heat map up. We're seeing some green on the board. Let's dive into the state of the chips trade. Shares of SanDisk rallying 8% right now. Micron is gaining some ground after some increasing analyst conviction. You got Susquehanna boosting its outlook on the sector. I mean, that's a huge move in SanDisk, especially in the light of some of the weakness that we see today. Tom, your thoughts?
Yeah, that's a bright spot here. The Philly Semiconductor Index, the SOX, is up over 1% today. And then you look at the reversals that we're seeing in NVIDIA in that space. AVGO has been positive most of the day. You mentioned some of those memory chip makers, whether it's SanDisk, whether it's Western Digital, STX, having good days. And then the semi-equipment makers, AMAT, Lam Research, KLAC, having good days today. Even AMD and Intel having pretty good days. So the impact of the conflict in the Middle East, what type of negative impact is it going to have on the chip sector? Well, I think the market's telling you it's not going to be as much as maybe other sectors within the S&P 500. You look at financials under pressure today. You look at consumer discretionary still under pressure today, even though we're off of session lows in a lot of those stocks. So those are the concerns, I think. And I think it's probably a positive, the fact that we're not just seeing massive selling across the board in all the different sectors within the S&P 500 at this point. That's going to probably be a positive takeaway for that. Now, we've only got 2 sectors within that S&P 500 out of the 11 that are positive, and that's information technology up 0.5%, and then also energy, not surprising, with crude oil up. But yeah, a lot of pain still going on in some of these sectors that are going to be negatively impacted by crude oil above 96. But hey, this is good. Where some flows are going into tech and some chips and some areas that have been beaten down recently, and maybe unjustifiably at this point.
Joe, your thoughts on the state of the chips trade?
Goes to show the power of the market cap weighted index, right? When you have 2 sectors up and you're pushing back towards relatively close to unchanged, kind of given the range that we were in. Big companies can have bigger prints, a big thumbprints on the market. That's kind of what we're seeing with NVIDIA as it snapped back, and you mentioned some of the other memory chip makers. I want to expand upon a point that Tom made earlier. It was the idea of, you know, where is the money coming out of if it's going into, you know, these names? Well, if you look at some of the, and excuse my eyes, but I wanted to look down and just get these numbers right. If you look at some of the sectors and percentage of the stocks above their 50-day moving average, I mean, financials, 9%. 9% of the companies in the financial index are above their 50-day moving average. Materials, which was a leader about 2 or 3 weeks ago, has moved from about 85% down to 27%. And then discretionary, Tom mentioned that earlier, discretionary, they weren't nearly as high as materials a couple weeks ago, but that's already all the way down to 23%. So, you know, is it a rotation back into maybe big tech? I don't know if you call that a flight to quality, flight to safety, but to a certain extent, you know, big tech's going to be a little bit more insulated from energy prices. I think, you know, what hits big tech is just the overall market pullback, right? Because of the fact that it is a market cap leaders, and that to a certain extent, when you get that pullback, a lot of times they sell the higher PE names, and that's, you know, that falls into those categories. But it's interesting just to kind of see the rotation go back and forth based upon geopolitics and kind of how investors are playing that right now.
Joe, I want to get a quick thought from you on this big rally that we're seeing at HIMSS. That stock is up more than 40% right now after Novo Nordisk said it's actually teaming up with the telehealth platform. This has been a wild one to me because I know it feels like an on-again, off-again relationship with these two. Your thoughts?
Yeah, I mean, last year they had a relationship, right? They were dating. And then, you know, Novo ended that relationship, and they said that HIMSS was basically marketing their product to be as effective as Wegovy. So they ended it. They sued them. That stock cratered from, that stock being HIMSS, cratered from 70 all the way down to, you know, sub $20. And it's got a nice snapback today, a 40% rally back today, as that partnership looks like it might be back in play. You know, and just looking at the options market, one thing that's really interesting is you're seeing calls over puts 3-to-1. There seems to be a belief that HIMSS is now, you know, really back in the marketplace and could be formidable, not necessarily for Novo because of the partnership, it could be that way for Lilly. So we'll see kind of what happens with that. But I mean, this was a stock that was left for dead, just because of the fact that one of the reasons people had been buying it was because of this idea that they would have, you know, kind of exclusive rights to sell the GLP drugs from their partnership with Novo. To see it come back, I think that's why you're seeing investors jump back into it now. Where it goes, we don't know. But like I said, a pullback from 70 to sub 20 to where we're at right now shows that there's some interest.
Like well, they're on again now. It feels like one of those reality shows we're watching with those rocky relationships. All right, we'll see. Hopefully it works out for them. We've got bull versus bear coming up. The guys will get their example trades put together for Boeing. Taking a step back today after that big gain on Friday. We'll have more fast market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Boom, boom, boom.
Sometimes, you could have done better. The same goes for where you invest. Level up and invest smarter with Schwab.
Very good. Very good commercial.
Welcome back to Fast Market here on Schwab Network. Shares of Boeing are pulling back today after a run-up on Friday. On Friday, the stock jumped more than 4% after reports that China may place a massive order for hundreds of its jets around President Trump's upcoming visit to Beijing later this month. The report suggests Chinese airlines could order as many as 500 to 600 aircraft. A deal would be a major win for Boeing as it tries to close the gap with rival Airbus. Now, China has mostly held back on large Boeing purchases since 2017 amid trade tensions, making any new order a potentially significant shift. Investors are also watching for a boost from defense orders, which could provide another tailwind for the company. All right, time now for the tug-of-war on Boeing. For that, let's welcome back in our co-hosts Tom White and Joe Mazzola. It is bull versus bear time. So before we get to your example trades, we have to talk about your thoughts on Boeing. Joe, let's make our Kevin proud, because he's a big fan of Boeing. What's your thought?
I'm not going to make him proud on this one. It's not that they don't believe in the long-term vision or prospect of the company. It's really more of a, Diana, kind of a downside hedge if you own the shares and you're concerned about, some of the volatility from the market. I'm looking at, this in terms of, okay, the stock's pulled back. It's kind of sitting at it's like a confluence of where the 50 and the 100-day and the 200-day all meet. It's really interesting, really, how they all line up. It's right around that 218 level, and with the stock currently trading around 230 or so, it's not that far for a pullback at that level, because if it does kind of breach that support, you could definitely see this thing start to pull back, kind of given the rally that it's had. Now, got great fundamental news in terms of, you mentioned the Chinese deal for the 500 aircrafts, another 100 of the Dreamliners, I believe, as well. So, this is something that can get the company ramped back up. It also, in terms of a defense contract, Trump recently approached Boeing and other defense companies to say, hey, we need to ramp up production. And so, that should benefit them as well, too. So this isn't really a negative look at the company as a whole. It's more of how can you maybe cushion some of the downside volatility should Boeing be impacted by what's happening in the overall market.
And Tom, your thoughts?
This would be definitely a positive take. Now, remember, just last year was the first time that Boeing took in more orders than Airbus over the last several years. So that was a benefit. They ramped up production on their 737 line up to 42 a month. That's a benefit. Free cash flow looking this year to be between 1 and 3 billion. That's really how the stock is moving, right? With the expectations that free cash flow is going to continue to grow. That's the story that investors need to see. The stocks pulled back pretty significantly, about 12% from those 2-year highs that we saw in January. Not surprising on the back of a lot of this news. But then you look at their backlog, over 6,000 planes that they've got in their backlog.
Incredible.
And that's going to be beneficial to them. Also, they've kind of righted the ship on their 787s and the 777s, also competing better with Airbus. Kelly Ortberg, the CEO, has done a pretty good job as far as turning the company around after that debacle that they were going through in 2024 and early stages of 2025. So there's a lot of positives to look at for this company in this duopoly of building planes where, there might be a near-term disruption due to the conflict in the Middle East, but they've still got a big backlog of orders, and they're fixing a lot of the manufacturing. And don't forget the defense side of their business. They met with President Trump on Friday also, where he wants quadruple the amount of output from these companies, and Boeing's right in that mix too.
Okay, let's get into the example trades. We'll start out with yours, Joe. Joe, what's your approach today?
Yeah, like I said, it's a little bit more kind of a downside cushion should the stock pull back. It's a broken wing butterfly buying the 215 strike in the April 17th expiration. So you buy one of those, you sell two of the 200 strike, and you buy one of the 190 put. So what it is, it's $15 wide for the first put vertical, $10 wide for the second put vertical. You put those together and you got a butterfly. So always think of a butterfly like that. It's a combination of two verticals. Either it's a put vertical or a call vertical. In this example, it's a put vertical or a put butterfly. The way this thing works is, you're paying, I would say, anywhere between $230 to $250 right now for this. So let's say you paid it at $230, that's $230 is what's at risk, that's debit that you're paying. It expands in value and maximizes when you get to that short strike, the 200 strike. At this point, that would be the difference between those the $15 or the 215 and 200 minus the 230 that you paid. So the max is about $1,270 on this spread. And even if it drops down below that 190 level, since you got a $15 wide put spread that you're long versus the $10 wide put spread that you're short, it still, maintains some of that gain on the downside. So, who could benefit from a trade like this? Well, like I said, part of it for me was I was kind of looking at the technicals, and I said, hey,
break out on the SPY
level where you're seeing all these different moving averages converge there. If it breaks through there, that could initiate some selling pressures from the program.
Boing.
And if that happens, well, I want to be long that at the money strike, which is basically the 215 strike there. I want to be long at the money. I want to be short where I think it might be going. The first stop would probably be somewhere around 200. And that would work well for this type of spread. Anything below that, like I said, would still allow this thing to make some money, but not the same as what you would at that 200 strike.
Yeah, low entry point price for some downside exposure here on this. You can see that from this unbalanced put butterfly that anything below that break even at 212.70 is going to be potential profitability on here. Even if it does fall out of bed and go below the 190 strike, as Joe mentioned, more than a double in profitability below the 190. But the area you want it to kind of sit in is at or near that 200 strike. But let's break Joe's trade down. In the April 17th monthly option, so you've got just over a month in this position. Buy one of the 215 puts, sell two of the 200 strike puts. That's where you want it to go, and then buy one of the 190 puts. Paying roughly about a 230 debit, as Joe mentioned. There's your risk, $230 per spread. That break even at 212.70. So you need a downside move to get below that break even. We're sitting about 224 in the stock right now. You're going to need some movement. You've got over 5 weeks in this position, though, for that to happen. And with any butterfly, they start to expand a lot going into or as you get closer to expiration on this type of trade. So good look at a low-cost entry point way to get some downside exposure in Boeing, but moderated downside, right? So even maybe you don't think it's going to go to below 190, but you can still be profitable. You just want it to kind of go drip down towards at or near 200, but anything below that break even is going to be profitability. Joe, I went a little bit more aggressive, like a lot more risk because it's a cash secured put, with the thought that if the stock does continue to fall, maybe maybe an investor would be willing to buy the shares at a lower entry point price.
Yeah.
I went out to the March 27th weekly cycle here, Joe. So just about 2.5 weeks to expiration on this one. Now the price is going to be changed on it just because the stock has moved off of those lows. Selling the March 27th at 215 strike put out of the money by about $9-10 to the downside here. Earlier it was trading 450 credit, probably trading just under $4 right now, but the credit you collect is what you can potentially profit on this one. So if you collect 450 credit, hey, you can make $450. But if the stock does fall below the 215 level, Joe, it takes your break even down to 210.50 to the downside. So you got a big cushion to the downside. I think the key on this one, Joe, is that, like I mentioned, you got a lot of risk. You got over $21,000 in risk if the stock were to somehow go to zero. So keep that in mind. But this is one of those strategies is, hey, if it does fall, I've got the capital necessary if I get assigned on this to buy the stock at that break even of just over $210 a share.
think one of the keys to this trade, which is similar to mine, is that both of us are looking at that 215 strike as a possible inflection point, right? You're looking at it as an area where maybe investors will start stepping back in to buy to support the stock at that level. I'm looking at it as, hey, if this thing breaks at that level, this could start pushing back down. Maybe not all the way to the November lows where we're around 170 or 180, but we could be making at least a move down towards that. So either way, both of us are looking at 215 as almost a very critical level in the stock. Not that far away from that, $9-10 right now. But what's interesting about your trade as opposed to mine, mine's a debit, yours a credit. You're getting paid money to take the risk, and I'm paying money to kind of mitigate some of that downside. So two different ways to kind of look at this, but like I said, one of the things that I think is very critical for both trades is the 215 strike is involved.
Yep, and there's your bull bear debate there, Diane. A little bit more aggressive, got a lot of capital at risk on mine, and Joe's is a lower cost entry point for his bearish put butterfly.
Okay, good framing, guys. We've got cash checks coming up. Casey's General Stores, it reports earnings after the close today. The team from Lightfolio will be along with new sentiment data. Stay right here on Schwab Network. Fast Market will be back after this break.
Hi, I'm Alex.
I'm Jane. And I'm his mom.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market on the Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our Cash Check segment. For that, we want to bring in our next guest, and that is Andy Swan, co-founder of Lightfolio, taking a look at Casey's General Stores today. It reports earnings after the close, and I saw a headline that calls it a rural retail fortress. How does that headline compare to your recent analysis, Andy?
Yeah, I think it's really accurate. Casey's is it's kind of an incredible company to dive into. They really target small towns. I think 70+% of their stores are in towns of 20,000 people or less, and they've got a real stranglehold on that. They've really perfected the model. When we look at how Casey's is doing versus peers, very well. Web traffic, which you really wouldn't think of for a gas station / convenience store, but they're really starting to pick up the mobile ordering, online ordering of pizza and so on. That traffic is up 18% year over year. Really solid growth. The stock has rallied to incredible levels here, and I think that
a lot of problem with these stores today is they're just dirty. I mean, they're just dirty. Just go next time you go into a convenience store or McDonald's or whatever, fast food, or just look. Even a grocery store. God, man, don't people clean anymore? I think if they cleaned them up, business would be great in a lot of places. But I don't go to convenience stores just to buy gas and a Powerball ticket. That's fact, Jack.
On their watch list for pullbacks as entry points.
Well, I have bought a couple
the story that
convenient coffees up here lately. I kind of like them.
I mean, I live in the Midwest, and yeah, I've driven by these things going, what the heck is that gas station selling pizza? It's the fifth biggest pizza chain out there. And then I went into it a couple times on taking my son back to college, and I go, I kind of get it because it's in a town of 1,200 or 12,000 people, and everybody's kind of hanging out there by these tables and chairs, eating pizza and talking and getting gas. I get it, but nearly 3,000 outlets at this point. The stocks rallied to near all-time highs, just below there. I mean, the valuation's getting
It's
a little
expensive
stretched here, but at the same time, it seems to be working. It's like mini Buc-ee's in the Midwest.
That's exactly right. That's a perfect comparison of mini Buc-ee's. It's in all these communities. I think you're right on valuation. Look, last quarter, the company beat earnings and the stock fell off 5%. I think that's, kind of one of those signs where, maybe valuation's gotten a little stretched. It becomes very difficult to get over the very high bar that Wall Street has set. So even though this is a great company that it's executing at a really high level in a very underserved niche and doing so very profitably, the word is out, and it's difficult for them to continue, beating expectations to the point that Wall Street buys the stock post earnings. So long term, we love it. Short term, probably stretched and risk is to the downside.
Okay, so you say it's stretch. I'm curious to know. So even though I'm from the Midwest, I'm not as familiar with Casey's outside of knowing the name of it and knowing kind of theoretically what it does. Is it strong because it's kind of really the only thing going in town where it's located, Andy?
No.
Yeah, they've really perfected the model. They've perfected how to create a kind of a community center around a gas station. In fact, a lot of people refer to Casey's as a kitchen that happens to sell gas. And so when you think about, in a larger city, you might have the coffee shop, or you might have, a deli that a lot of people congregate in and spend some time and spend their money and are a little less price sensitive. That's what Casey's is in these communities.
You think so?
It's kind of weird to think about, for a lot of us to think about hanging out at a gas station, but Casey's has done a phenomenal job of putting these, in the center of the community where people can congregate. They sell pizza that people really like, and that gives them pricing
around here, homeless people maybe,
and what they sell inside the store. So they're able to maintain some pretty high profit margins at each one of these, 2,900, 3,000 locations. So really good model that has room to grow for sure.
You look at this second chart that you guys up.
Man, you really flowered that one up.
Stock price. It kind of tells that story.
Woo!
Would you guys be sellers here? Like,
oh boy,
just due to the fact that
shit's getting deep.
Last quarter, but then immediately started moving higher, and we're still above those levels. So it seems like there's that big divergence there.
Yeah, there is, and that's despite 18-19% year-over-year growth. But the stock has just rallied so much that it puts most of the risk to the downside here into earnings. I think we could see a repeat of what we saw last quarter, where the company puts out really good numbers, they put out a really good story. Perhaps the stock sells off kind of a relief, the opposite of a rally, a relief. And then that could be an opportunity again for longer term investors to pick up some shares. That's the way we see this playing out. Casey's great American company, that is serving underserved communities really, really well and making a profit while doing it. Pretty good story, and one I'm gonna have to personally investigate a little more, Tom. I think you've got the right idea. We've got to start stopping into these places and seeing what all the buzz is about.
Yeah.
What they call the channel checks. All right, Andy, we'll leave it there. That's Andy Swan, co-founder of Likefolio, with a look at Casey's and compared to others. So for the trading perspective on all things Casey's General Stores, Tom, you have experience. You've gone to this. You got some insights from the Likefolio team. Maybe I need to stop in when I'm traveling to one of my son's soccer tournaments. But final thoughts before your example trade.
Well, don't stop in for the pizza, Diane. It's just mediocre. I was sitting there getting fired up like, hey, I'm finally stopping into Casey's. The pizza, I've heard it's really good. Well, that's kind of unfair. I live in Chicago, so it's unfair. But yeah, if you take a look at this stock, it's up 217% from, I mean, this stock was trading $202 3 years ago, trading $642. It's been a spectacular rise over the last, basically year, 12 months up 61%. So it has pulled back nearly 7% from those all-time highs, but I mean, it's the hidden gem, I guess. But as Andy mentioned, some of their data may be reflective that, hey, run too far too fast. So I looked at a strategy that kind of sets up with that type of mentality where I give myself maybe a little bit of cushion to the upside before I start getting hurt on this neutral to bearish short call vertical. I went out to the March 20th weekly options. They don't, or monthly options. They don't have weekly options here. So you've got basically 11 days till expiration on this one. I'm going to sell the out of the money 670 strike call, and then against it buy the 690 strike call. Show a short $20 wide neutral to bearish call vertical. You're going to collect roughly, I've got 480 credit on it. That's where it was trading earlier. Trading closer to $6 right now because the market is almost flat on the day right now. So every stock has basically rallied. So the credit you can collect on this is going to be basically what you can profit. So if you collect the $6 credit, you can make $600 with $1,400 in risk. You collect 480, that's what you can make, 480 bucks with about $500 or $1,520 in risk on that trade. So the $20 width of this short call vertical minus the credit you collect is going to be your risk on this type of trade. Now, if I collect just around $5 on that thing, it's going to take my break even up to 675 thereabouts, maybe just below that if I only collect 480. Wide bid-ask spread, so keep that in mind when using price discovery to kind of get this. But the idea here is you're selling it out of the money call vertical.
AVGO up
even if I'm wrong,
$15.
if the stock goes higher but remains below about 675, you can be profitable on this type of strategy. The probability that that 670 strike will be out of the money at expiration about 68%. So you got a better probability of success. But the stock has moved up. So, if you need to look at different strikes on something like that or move your strikes. But price discovery probably warranted on this $20 wide short call vertical. That kind of sets up with Likefolio's data here. Now, you want that stock to remain below that 675 level on this one, but I think one of the keys is, especially on a high price stock like this, you're still risk-defying on this type of position, Diane.
All right, good stuff. We have got the breakdown coming up. We're taking a look at HPE ahead of its earnings. Those also come after the bell. We'll have more fast market after this break.
It's oil.
the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab,
Google, nice reversal.
Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live.
Well, they're coming back strong. Jimmy called the 200.
schwab.com/coaching.
Didn't he, Randy?
Start learning today.
Randy, are you in here? Just a yes or no answer. Yes. Jimmy did call it. Yes. SPY just made a new high. SPY just made a new high. They said it couldn't be done, and I told them it could be.
Right now, so not even at $95 a barrel. Keep in mind, earlier in the session, we saw prices above $100 a barrel. Overnight, we saw them approaching $120 a barrel. So we've seen some moderating of the pace, the velocity of the upswing in crude oil prices. Meantime, HPE Enterprise set to report its quarterly results after the closing bell. Analysts are expecting HPE to post earnings of 59 cents per share on an adjusted basis. Investors will look for growth in HPE's AI segment amid the artificial intelligence infrastructure build-out. Now, shares are down double digits so far this year, still up year over year by about 40%. With that, it's time for the breakdown. For that, we want to welcome in George Sillis, Senior Markets Correspondent, taking a closer look at HPE. All right, we've got earnings in front of us, George. Talk us through expectations.
Well, I think the expectations for the quarter are quite high. If you look at the EPS numbers, 59 cents, that's 21% higher than last year. Then revenues are also at 9.32 billion, expected to be higher by 19%. So if you look at historically speaking, revenues are generally in the high single digits, earnings in the low teens, and I think this is a sort of a pivot quarter for HPE. They're really focused on integrating infrastructure from the standpoint of data centers and, of course, their cloud connectivity services platforms. I think if you look at the last month or so, there was a little bit of a drawdown, about 10% of the stock, and that's to be expected considering some of the other software service-based companies like IBM were getting punished associated with all the threats anticipated by companies like Anthropic and ChatGPT. So there's already some price action that's been lower in the past 30 days relative to these earnings. I think the other thing to keep in mind is I did notice that they essentially had sales last year around 33 billion, but their net income was a loss of 60 million. They did take about $1.6 billion charge off last year. Market capitalization right now around 28 billion. They do have about $24 billion in debt and $5 billion in cash. So I think this is maybe a situation where we're seeing high CapEx levels in the past 4 quarters may start to manifest in a better earnings profile for the business, and I think that's why the numbers for EPS are expected to be higher by 21% on the sales, like I said, around 19% higher.
And so I know one of the challenges they had been facing is the cost of memory chips, right? And then if you could refresh my memory, because I don't recall how it performed in the last quarter, if it was a beat or not. So talk us through that performance in the previous quarter and how the market may be looking at it as it relates to memory chip costs.
Well, I think even if you look at last quarter, the performance post earnings was actually quite positive. So I think the expectations, again, for this quarter are a little bit different in the sense that the EPS numbers are expected to be quite a bit higher than they have in the past 4 quarters. And the other thing is, like I said, there was a high CapEx expense in the last year. They did take some impairment charges on assets they wrote down as part of the Juniper acquisition. So that's also going on. Again, if you look at the organic growth for the business versus inorganic, they're going to be reporting combined unit growth for the quarter. And so I think, going into this quarter, the expectations are quite high, but they may end up demonstrating a good manifestation of synergies from the Juniper acquisition this particular quarter. One of the things about the stock that I noticed as well is if you look at the sales last year at 33 billion, market capitalization's 28 billion. So it's
Very
less
nice.
than one-time sales plus, and over $2.30 in earnings for the full fiscal year expected. It's only trading on 9 times forward earnings. So, 15 times earnings is generally fair value for a stock, especially those that are growing in the high single digits for sales, and earnings for Hewlett-Packard are growing in the low double digits. So one would say maybe the valuation looks compelling here, but you have to consider there could be some issues with EPS. This is a business that integrates hardware with software, and we know that the hardware space has been challenged because of the shortage in memory and the expensive memory, because even the analysts that cover Micron, they keep upgrading the stock. And in fact, one of the analysts, Susquehanna, talked about how prices rose 170% for high bandwidth memory in the last year. So that's going to impact, again, companies like Hewlett-Packard and all the data center infrastructure names.
So that would impact their margins, obviously. So there could potentially be some margin pressure there for HPE. So let me ask you this, George. What's the catalyst that investors may need to see to kind of shift how performance has been so far this year?
Well, I think there's a few things going on at Hewlett-Packard. I mean, the partnerships they have with AMD and NVIDIA, so they're not necessarily choosing any particular, GPU or CPU company. I think the other thing is Hewlett-Packard is a well-established name in the public sector. They secured about a $950 million contract from the DoD, and this is based upon, refurbishing old technology. So I think that might be a catalyst as well for Hewlett-Packard. But I do think at the end of the day, the underpinning catalyst may be the valuation. The synergies from the Juniper acquisition will probably manifest in the next year. And like I said, it's trading at less than 1 time sales and less than 10 times earnings. So both of those value metrics look compelling. But there may be, again, that small issue with margin compression associated with high bandwidth memory expenses.
All right, thank you, George. That is George Sillis, our senior markets correspondent. Appreciate the breakdown there. Let's get Tom back in here for example trade purposes. So, Tom, you've got the example trade in HPE. Any thoughts before you jump into that?
Yeah, George makes a good point about the pricing. That's why we've seen Apple shares pull back and some other names in the space where they need this high bandwidth memory, or they need memory chips, whether it's a legacy NAND or the DRAM. Or the solid state ones that Western Digital has also. So with those pricing going up, what's going to do to gross margins? Well, if you look at, George mentioned it, the valuation on HPE is really
very strong.
The gross margins are only 30%. There's room for that to grow. The acquisition of Juniper last quarter, 150% year over year growth out of the networking side of their business. So maybe that can offset some of it. If you look at it on a technical basis, the stock has kind of bottomed out here around the $20 level for the last 3 or 4 months.
HPE.
So I looked at that, and then I also looked at the dividend yield. If that continues to get paid out, it's a dividend yield of nearly 2.7% on this stock. So it's a low-price stock, $21 stock here. So I looked at a covered call strategy that's neutral to bullish. It takes advantage of creating yield by selling an out-of-the-money call and creating yield by owning the shares and collecting that potential dividend every quarter on here. So I went out to the March monthly option. So for every 100 shares of stock you buy, you can sell an upside call. And in this case, I used the March 20th monthly, the 22 strike calls. You're going to pay roughly about a $20.45 debit for this covered call strategy. It's currently where it's trading. So you're buying the shares at a discount. You've got a lot of risk because you're buying the shares, right? You got risk of about $2,045 on this particular trade per contract, but that's because you own the shares, right? And as you get closer to expiration over the next 11 days, you'll be able to roll or adjust that short call repeatedly. That's the whole cycle or idea behind a covered call, that, hey, if the stock goes up and it goes through the 22 level, you might get your shares taken away. Well, it's still going to be a profit on that particular position, but the idea here is maybe the stock goes up a little bit towards 21, 22, and then you can start rolling, collecting credits on those short calls that you sell against your long stock position. That decreases your break even on this one, which is basically the debit you pay, $20.45 is your break even. But then it also starts to increase your potential profitability on this type of position on a covered call strategy on this one. Now, you've got to rely on that dividend getting paid, maybe some consolidation in the stock. What you don't want to happen on this type of strategy is you don't want the stock to kind of go a lot lower, down below that $20 a share level, because that's when you start losing value on that potential roll on that 22 strike, where you maybe have to roll it from the 22 strike to the 21. But the idea here is creating credits on adjustments, on potential adjustments, to increase potential profitability on this type of covered call strategy, Diane.
All right, good stuff there. HPE, those shares higher ahead of its earnings, and that's the example trade there. We've got mixed markets, so we've got some fight back happening off the back of crude oil prices moderating right now. President Trump just posting on Truth Social moments ago, important meetings, phone calls taking place today. We've got the NASDAQ 100 popping higher here, a little bit higher, but the S&P 500, Dow, and Russell 2000 still lower at the moment. That's going to do it for us today on Fast Market. I'm Diane King-Hall alongside Tom White. Our thanks again to Joe Mazzola. Download the Schwab Network app. It's available in the App Store, and tune in 24/7 on schwabnetwork.com. Stick around. You've got Next Gen Investing with Jenny Horn and Alex Coffey up next.
RITM, yeah.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Hey, Bob. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Live insights, actionable data, and market-moving analysis. Schwab Network connects the headlines to the why in real time. Watch free 24/7 at schwabnetwork.com.
At each and every angle, the whole picture, everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Her and pumping Taiwan this
Investing.
morning.
I'm Jenny Horn, and for the first time in about 30 days, alongside
Jenny
Alex
Horny.
Colby back from sabbatical, I am so glad to intro the show with us both today, Alex. You were definitely very much missed, but a lot, of course, has happened over the last month or so. I mean, we have major turbulence right now in the oil market.
Alex is back.
Conflict in the Middle East, which I would say is definitely
They
the
didn't miss
dominant
him.
theme of some of today's overall weakness. Although we've come back a bit here in real time.
Yeah, I'll be honest. I mean, I think I made an attempt
You're gonna be honest?
a way to not be as engaged with the marketplace as we would be on a regular basis. But some of the stuff was hard to avoid. I mean, you logged on social media, you saw the software is going to be replaced by AI narrative like 2 or 3 weeks ago. Of course, last week, dominated by geopolitical headlines, particularly the war between U.S., Israel, and Iran. And then also, of course, the jobs data on Friday. It was hard to miss some of these big events, but you guys crammed about as many big things as you could into that 4-week period. But it's good to be back, and it's good to see the market stabilizing too. Tons of weakness overnight, certainly led by the strength and rally that you're seeing in reaction in oil. That's subsided tremendously. Currently, the active month futures for oil, which are the April for WTI, are only up 4%. I say only because at one point last night they were pushing $120 a barrel. So very different picture at 94.5, coming down from 120. Then when you gap up, open at 98, and you're trading up to 120, you don't know where that's going to stop. So I said this at the beginning of the day with Diane. This week is largely going to be determined by that oil trade. I don't think I'm alone in saying that. I think that's generally the consensus right now. But there's a lot of things unmarket related, non-market related that are driving that oil price. And the timetable of how long oil is going to remain this way, it's up in the air.
Yeah, and I will say, I feel like the time frame and right now some of the uncertainties regarding like the supply chain basically taking a hit and what that is going to mean, of course, for the rest of this year's growth story, inflation story, Fed story. It does all work hand in hand, but definitely was a busy month, at least to take some time off.
Well, and to tie that in though, if you look back a month ago when, I'm about to go away, this wasn't in the conversation.
Right.
You're talking about oil at $60 a barrel or going into the 50s. That's a much different conversation if you're a macro strategist or you're making a CapEx decision at a company. Well, now with oil almost double that, or at one point almost double that, 50% higher, let's say now, those conversations are way different. And it wasn't really foreseeable without some sort of black swan like situation. That's kind of what we've gotten. And so it is truly a supply shock, but it's a market shock because it wasn't in the models.
Yeah, and that's also such a good point. And I think it's such a good reminder of why we frame 2026 and we have all these ideas of what the narrative will be. And obviously that could be rewritten. I mean, just in a matter of 24 hours. I mean, given the news cycle right now, it does feel like it is on a day-by-day basis. And we're so quick to say we were in this rotation period. But I will say, to the market's credit and to our big tech's credit today, a lot of the strength or rebound, more so recovery of names like Nvidia have really also led to some of the overall market easing a bit off session lows here. But as we always do on Next Gen Investing, we will focus on more of the individual stock stories shaping today's market. We'll kick things off with a few movers to keep on your Monday radar. We'll be charting and trading then Delta Airlines and Royal Caribbean, with travel stocks seeing some steep declines today as oil prices, of course, add to concern over the global tourism trends. For FOMO, we are looking at the huge move to the upside today in Hims and Hers following its dispute with Novo Nordisk, perhaps coming to a resolution.
Joby
We'll
rings.
close out the show with under 30. Brown-Forman shares with a bit of pressure today after an analyst downgrade, but more significantly, some reports of an investigation over alleged securities fraud. So no real theme. I will say we were actually pretty earnings heavy until like now this week. Now we're in a bit of a dry spell, but I do think there's definitely been a lot of course, stock-specific stories that have seen huge outsized moves, and some of these earnings moves have been, I mean, like off the charts, but obviously in either direction, which is sort of our theme today, I guess.
Which is also that rotation you're talking about. It's not like this subtle rotation. It's pretty dramatic when it's happening. But there are still some earnings. You'll get Oracle this week, Adobe this week, some retailers that are maybe, underreported on, Dollar General, some of those type of names. And then you get some economic data at the end of the week. But still, I think geopolitics, particularly oil, are driving the ship. But let's get into some of these stories because some of them are still market impactful, especially for those who are invested in these names in particular. Speaking of Live Nation, our first one here, news of a settlement breaking this morning. I think we're going to get more details as the day rolls on, but Politico has quite a few of them, at least, that they're reporting on. What did you make of this story?
Okay, so first of all, we've been able to hang on to a real outsized move today to the upside. So that's, I think, definitely shows at least the market's feeling about this story. But reports we did get that Live Nation is close to settling a federal antitrust lawsuit that accused the company of illegally monopolizing the live music industry that would stop short of a divestiture of their Ticketmaster subsidiary, which is this is per Bloomberg reports from over the weekend. But the settlement's discussions have really intensified since the trial kicked off in early March, and a final agreement, of course, could still be coming in the final days, but the exact timing does still remain in flux. So the Justice Department's 2024 lawsuit did initially seek to break up the company by forcing that sale of Ticketmaster. It does seem like, at least per the DOJ settlement and per this Political report, that right now that they will have to, pay a certain fee, and that right now details of how they will move forward on a state-by-state basis, though, is what's going to be decided later. So I do think this is interesting because, again, the U.S. District Judge who's presiding over this case would also be basically needing to analyze whether the Justice Department settlement is in public interest. But again, you could still see this go on a state-by-state basis, and that's why it's not entirely over yet. Yes, we do know that they, of course, avoided the DOJ settlement breakup, but so that's the sigh of relief today. But reading more about like the legalities of this, it doesn't seem like we are entirely in the clear quite yet.
Well, it does seem like some of the, I guess, things that they had to give up to make this settlement work that have been leaked out. Something like a $200 million financial penalty in damages to the different participating states, which is like some 40 or so different AGs. Some different exclusivity contracts being curtailed a bit, so something like venues being capped maybe at a 4-year exclusivity for Ticketmaster. Also being required to maybe allocate some of those tickets at those venues to some of their rival platforms. Some of those platforms like the SeatGeek, the Eventbrite, being able to perhaps actually list tickets directly on Ticketmaster is something that was in those reports as well. And then I think consumers, most importantly, wanted to see what was going to happen with those fees, because that was the big question mark. Numbers I saw perhaps being capped in the 15% range, 50% of the ticket price. So we'll see if those are ultimately the details that are reported. This is what Politico had in their report as some of the settlement terms that are expected to be released.
Yeah, and clearly, I feel like this is definitely, it's also based like bipartisan support of the Biden administration, the Trump administration. It's something that's been ongoing for quite some time. So I think today you're really seeing a sigh of relief that we will not again see that divestiture of Ticketmaster. But again, from understanding like the political jargon and some of the legal jargon, it does seem like we are not entirely in the clear yet. But at least today, again, sigh of relief, no doubt. Our next name today, also a name of strength, GE Vernova, which has been I mean, one of the most steady, resilient performers over the last year or so. And I know that we're only up, I mean, at this point now, about 23% on the year. But again, still a name that's only pulled back about 8.6% from highs. And so fairly
she said
strong
that.
uptrend that
But
remains
again,
relatively intact, despite, again, we've pulled back substantially. But Wolf Research downgrading, or what we're seeing right now is Redbird, downgrading shares, upgrading shares to buy from sell, highlighting the fact that this is a power and utilities demand and margin story in both of their new equipment and services, which they do believe are now far stronger than expected. And so, I mean, as far as the AI narrative is concerned, this name is such a great sort of niche pocket in that world. I mean, bullish analysts have continued to highlight the surging demand for gas turbines, AI-driven power infrastructure, and expanding margins across the power and electrification businesses. More cautious voices, though, because I was trying to get a wide variety of analyst notes as of late, do argue that valuation is stretched after these sharp gains and expectations for multi-year growth are now very high. And so anything that's performed as well as GE Vernova, I feel like you could make that same more skeptical argument.
I was just fascinated by the conviction from this analyst. Not only did they just say, hey, I was wrong with what I had before, my sell rating and my $560 price target, which was like near street low, I'm going to flip it over. I'm going straight to buy, and I have a new street high price target at 1,100. So really extreme in terms of the moves that you're seeing here. But yeah, this Rothschilds & Co. Redburn analyst, Simon Toyne.
Count me in there.
Street high now, $1,100 a share.
$1,100 a share. And prior to that,
we're going to get a reversal here.
Price target's around 900, but this was, I mean, a far cry even ahead of what the previous high had been. So definitely a bullish call today, and price that matches that up 3.6% in those shares.
And let's look to intraday. I mean, I know the market has turned around a lot, and that's a big part of this story. But look at the intraday swing. In the pre-market overnight, the stock got to $750 a share. It traded up to $825.99 just about a half hour ago. So really, really impressive turnaround intraday. And one has to think that this analyst note helped that story just a little bit.
Definitely helps you that 80% of analysts do have a buy or buy-leaning rating right now. So there's definitely a lot of love to have with GE Vernova. And actually, our next name, I know is not necessarily the strongest performer today, but Verizon, also with an upgrade at Scotiabank to outperform from sector perform with a price target that was $54.50 a share, up from $50.25 a share. Following a meeting with management, they did note that Verizon's momentum in both subscriber loading and cost improvement does look strong, as well as, I mean, they expect further cost reductions now in 2027 and 2028.
Verizon.
But they know that price cuts combined with lower churn in wireless and growth in broadband position Verizon to be better as far as their revenue growth is concerned. And so they do view still shares.
I'm watching the 6740
so I was actually reading a really interesting article over the weekend about how telecoms have seen such a strong start to the year. And I mean,
watching the 6740 calls right here. 3 black crows on the 5-minute with a hammer. $3.80. It's the 6740s. SPX calls scalping the lotto. The strike is 67.40 at 370. And then come a word, an discouraging word, that the skies were not cloudy all day. Home on the range. Come on, baby. I'm back to entry price here, huh? With a deal and the antelope played. Tight stop it is. Crowd's going wild here at the sports arena as Jim sings Home on the Range. with Jim Neighbors. Home on the range. Head and shoulders and reverse spine in 1 minute. I don't know. Okay. Jim's going to tight stop on this because he doesn't quite trust it. We're waiting for a continuation breakout, please. 5-minute time frame. $3.70. Yeah. 67.40s. Three contracts. Yes. So I'm up $90 now, Jim. You ever thought about selling? $4 a contract. $4.10. $4.30. Uh-oh. Something's going on. No. Oh, God, they're going up. He's got to change it to the 1 minute. He can't take it anymore. Oh, God. 1 minute, I don't know if I would have took it. Oh. I'm not sure if I'd have took it on the 1 minute. But we'll see. I definitely would have took it down there at 670. The crowd's going wild here at this. He's down $30, Jim. You're down $90, $120. Have you ever thought about selling? No, not yet. Not here. I can't. This is where I would have jumped in on the 1 minute. Right here at $3.60 or 50 cents. $3.50. I'd be in this trade right now. On the 1 minute. So he's paper trading at $3.50. And he's in at $3.70. Damn. Ain't working. Still holding support, so I can't get out of it. Now it's not. Come on. Don't give up yet, Jimmy. See, now I'm definitely bearish. Because I got a whole body below my support line. But this candle's not over with yet, so I can't really say. Diane King Hall. Joby went off. I don't know why I had it there. Unless it was his previous high. That's all I can think of. Come on now. NVIDIA is getting close to the 200. And Meta. SPX got a ways to go. $6,700. 66.98.43. We got the orb at 67. Not a big money day for me today. I'm a spy. Well, we're getting close to support on the SPY. 66864.
Recovered as there was some kind of bottled up demand. But looking at this now, you've got a couple things going on. One, you've got a kind of whipsaw of the 50 and the 200 period moving averages right about where the price of the stock was a couple of days ago. So there's kind of back and forth
Whipsaw.
there. You've got the 50 above the 200 at the moment, and that would suggest that maybe we're ripe for another death cross. That probably isn't the best scenario in this particular case, but it's not as bad as it sounds. Now, the other thing to think about here, it broke that diagonal uptrend line that was in place right about the $300.
It's not as bad as it sounds.
Down, especially today with that long tail or shadow on today's candle, kind of a big hammer candle down near that horizontal support at the 254 mark. And it's got a pretty strong recovery on that on the day. RSI really hasn't started to turn up yet, but neither is it penetrating down into that lower reversal zone. So there's still some momentum, the potential for a bounce here. Now, the other things to consider here, I've also got that purple line on here that's still heating oil in this particular case. Now, not that cruise lines and cruise ships use refined product, a more refined product like heating oil or jet fuel. They typically fuel based on what's called bunker fuel, which is really heavy, thick, grummy, kind of crude oil type stuff. But this is a close proxy for that. As those prices go up, that's going to be a drag on revenue. And the other thing to think about here in a larger sense is that
get ready for the reversal.
Ensure
Give it a shot.
voyages, because of the cost, and this is different than a tanker, but those insurance costs are going to get spread around to the cruise lines as well. And so that's going to be a drag on a name like Royal Caribbean. Purely from a technical standpoint, bounce up off of 254 with a RSI possible bounce here as well. Maybe a little bit bullish in this case, Jenny.
Okay, and I am curious from, of course, being a technical expert, how you go about navigating the volatility. And I think Greg called out the tie, frankly, that we're seeing, to the oil and energy markets right now. But how do you go about assessing technical trends when every day it does seem like there's a new headline, a new wave of volatility, and all price seems to be rewritten on, again, a day-to-day basis? I guess that's somewhat the case for every market day, but this market right now does seem a bit more unruly. And so how do you go about navigating then when price does seem to be, again, a day-to-day basis?
SPX.
You see volatility play itself out on an individual name like this is you're going to see
67.25
larger candles, because that's going to reflect.
Okay, here we go again. The let me see. We're at the 200. $67.25's at $4. We're in 410 right now. Hold, baby. You know what to do. Hey, hey, for the monkeys. I'm got in at $4. Time around. We need to read some. Come on. Come on, baby, turn around. Do you have anything to do with you now? Okay, we're squeezing between the 200 and the 9. The 9 is above the 200, which still gives me a bullish impression. So we will see. As we start to move up, I have my first finger on the mouse trigger there to when we break out. Where's the target? I'm going to say the target will be $670. Do you understand? But we got to hold this spot. It's very important. No, God, no, not again. Ugh. Fuck. This is bullshit. He's trying his best. 625s. $4.10. Jim, you're up $20. Have you ever thought about selling and going to McDonald's? No, I can't. I don't eat at McDonald's. But once a year, is it true that you make hamburgers at your own house? Yes, it is. Come on. Come on. Damn it. No, okay. Right here, just like that, I'm down $100. This has got to stop. See, I still ain't got my whole body under there, so I can't sell it. Just like that, I'm back to even. Didn't even think about buying two of them. I don't think I could have at $350, but who knows? Now I have a body under my support line, and I didn't want to see that. Okay. Barry, stop out. We don't. See, I got a body under here, so I got to be real careful. Okay. Take a big swig of water. Oh, yeah. That. This is going to be it. Oh. Uh-oh. Almost. This is a tricky one. God darn it. Well, you're down $140, Jim. Come on. Huh. Well, it's not my day today at all. I figured we'd hold that there 200 off that opening right there. It would be a good spot, good pivot point. If it was bullish, if the market was still bullish, and being right off the orb. So I had like 3 different reasons to stay in it. Right now I'm down $220. Have you ever thought about selling, James? No. No. I can't. I'll be right back with water and a clear attitude. Oak. No. Damn. Pure redness. Definitely weak now. You never can tell. It's a tricky day. $67.25 at 250. Oh. Are we going to get a V? And the crowd's going wild, waiting.
Market you would avoid investment in? You talked about, buying the oil at 120 if you were one of the people doing that overnight, probably regretting that. Is there any parts of the energy sector that you'd avoid?
I think the big thing to avoid at this point is for an individual investor is trying to get in.
We got big long snake.
On a speculative basis and reacting to whatever news story it is. You're going to hear news stories on Carg Island. You're going to hear news stories of ships being targeted. All of this is just going to create some volatility.
And we did break
but if
out.
You're expecting sustained oil prices north of $100 and making your investment decisions on that. You're probably making a mistake. Again, this is not a supply issue, it's a transportation one, and those get solved in a reasonable period of time. So the thing for investors to do is avoid overreacting to what is ostensibly a short-term set of circumstances.
Okay, and I like that. I feel like there's so much doom and gloom right now in the headlines. I like to hear that it could be perhaps an overreaction, because that's a much better stance than saying
it always is an overreaction, baby.
So appreciating really great commentary to kick off our week. Jordan Pence, Chief Investment Officer at Pence Capital Management. Now coming up next,
$3.06 for the SPY.
Today to the downside in Brown-Forman, following
$2.65 for the
reports the company is
SPX.
being investigated for alleged securities fraud. Stick around, we'll be right back.
Come on.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech Check, Options Corner, Futures Focus, Technical Analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
You gotta give it a little bit of time.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage.
It's always the hardest part. So they do it.
Technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust.
Trust.
Watch list, 2 p.m.
Trust.
Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time for Under 30, and we're talking about the move to the downside today in Brown-Forman, as we're seeing some analyst news that is not so favorable, but also some news that we could be facing a potential lawsuit here over securities fraud. So joining us now is George Tillis, Senior Markets Correspondent for the network. And George, I'm curious to your thoughts over how much of today's move is tied to this investigation. Obviously, it's just one firm alleging these allegations, but also not helping that we're also seeing a downgrade at the same time.
Yeah, that's a good question, Jenny. I think, I'm looking at the longer-term trend for Brown-Forman. The last 5 years, the stock is down about 65%. The last 52 weeks, down 35%. So there's already some fundamental pressure going on with the business. For those who don't know, this is essentially a liquor company, the parent company of Jack Daniels, which is their predominant brand.
Oh, yeah.
I think if you look at their business, it's been struggling quite a bit. They posted sales year over year for the last 4 quarters.
Yeah, I've heard of them.
8%. They're expecting sales to be in the low, to be down, excuse me, in the mid-single digits going forward. I think a couple things are going on. There's this aspect of inflation really encroaching on the ability for people to purchase premium liquors. The cannabis market is also encroaching on the business overall. And, I think there's a lot of things going on with, personal taste and preferences, like weight loss drugs have reduced total alcohol consumption. So all of these factors are creating a situation where sales have been down. And that's the bottom line, essentially, for stock price going down. So if you see sales go down, the price will go down. Bernstein, they actually reduced the price target to 29.37.5 because they still see now not only a demand issue, but also an expense issue associated with procuring and bringing whiskey to market. Tariffs really have hurt the liquor business as well. My point is that there's all these mixed factors that are causing the stock to sell. Now, to answer the question too about securities fraud, it's a very broad term associated with, if the stock is down, major institutional investors or individual investors get mad. And so they want to point the finger at executives, so they bring forth claims that, the company's executives made misleading statements, they didn't anticipate or provide good guidance associated with really what the core business was doing in terms of expenses higher than expected, as well as sales in decline. But again, these things are, litigation-based matters, which I think is adding to some of the price pressure. But nonetheless, my point is that the stock was already down significantly. And, today, what you'll notice too is discretionary names like Amazon, Tesla, those are two big names, are down a lot relative to the overall markets. And I think that's putting pressure on some of these names like Brown-Forman, even maybe Constellation, which have failed in the last few years to really offset declining sales to a large degree.
Yeah, George, I believe the
Getting
primary
better.
law firm looking into him is the Portnoy law firm. I think I saw, and the allegation is that back on June 5th of 2025, when they released their earnings, there was
Let's
a
go.
7% decline in sales and a 45% drop in operating
Especially if we
income.
break the 200
And
or the
allegation basically
100.
being, hey, those are pretty significant price or performance misses. You didn't give us any indication that that was possible leading up to this. And you probably had a pretty good idea things were trending that way. So I'm not sure what ultimately that impact will be, but you can understand the point being made by those who are making the allegations.
Well, yeah, and I can understand their point, but, at the same time, this litigation is very gray. And so going forward, I don't know how this will help shareholders. Maybe, they'll end up in some compensation for them. I can't say because
Need to
again,
break the wall, that's for sure,
Just look at those numbers.
George.
You've got 45% decline in EPS, 7% decline in sales. So, I talk about, strong trends, positive trends, or when EPS are greater than sales by at least 1.5 to 2 times. You just described, Alex, earnings growth relative to sales at 4 times the decline in sales. So that's why the stock is down. A lot of factors involved, and it's a really unfortunate situation for all shareholders. But, litigation aside, the core business is struggling. This is just adding pressure to, I think, the shares. But the analysts are looking at the core business, which is still expected to continue to decline relative to higher expenses and declining sales.
Yeah, and I think also, a good call out the fact that we're seeing, global alcohol consumption also be, on a huge multi-year decline at this point. So it's not necessarily one thing. It is a broader industry trend, but unfortunately for shareholders, it has not been the easiest of waters to navigate in the last several months. But appreciate it, George Chillis, for all that breakdown today on of course, Brown-Forman, which is down about 2.7% on the session. That'll do it for us for Next Gen Investing for this Monday. We have the watch list coming up next.
Schwab Bank Investor Checking. the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis,
Which makes no sense, George.
Trade ideas, minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing of houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Good afternoon. Welcome to the Watch List. I'm Nicole Petalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. And I'm so glad you're with us because obviously we'll follow all the big stories. We're going to follow oil, the market sell-off, and what could happen next, okay? A lot of volatility. The VIX is down below 30 finally. You can have that. Okay, here's in the lineup. The Aptera Motors co-CEO will join us to discuss the company's solar-powered electric vehicles and the market for solar EVs. What's that like going forward? Our own Joe Mazzola is standing by and will give us a closer look at the mindset of the retail investor. We'll have a look at the latest Schwab Trader Activity Index. And our panel ready to discuss all things oil. You know, West Texas spiked above $119 overnight. Right now, oil's at 94 bucks. A week ago, it was less than 70. What can we expect next? In the meantime,
I expect you to bounce.
We sold off in a big way in the morning, and we've made a big comeback, I could say, here. Certainly when we saw all the major averages down over 1%, 1.1%, and now that we've halved that, at least for the S&P, we're down 0.5%, losing 35 points at 6,700 pretty much. The NASDAQ is down 0.2% at 24,598. That as well was down over 1% this morning. So look at that, nearly a full comeback. The Dow Jones Industrial Average down 1%.
down 456 points, and the Russell, those small caps, down 1.1%. Oil and gold are mixed. Oil's at 94.36. We did just discuss that. And 51.05 a troy ounce for gold, down 53 bucks. And the VIX, which had been above 30, is now at 27.64. So the fear index is coming down. The 10-year bond yield went up to 4.2% at one point in the last 24 hours. Now 4.13. So what can we expect next? The dollar's been strong in this 99 level, and the Bitcoin trade 68,740. George Silla, senior markets correspondent, with me now. And, you know, I like to give the perspective, George, because if I just say we're at 4.13 on the 10-year, they don't know. You know, like, did you see 4.2 with your own eyes kind of thing? You know, we expect this volatility now. That's sort of what we're in at the moment, right?
Yeah.
For everything.
Yeah, I mean, that's what we have to expect. I mean, no one can say when this conflict will end or whether it will de-escalate from here or continue to escalate. So you have to be mindful of that. Even though the VIX is trading below 30 again, it's still relatively elevated in the high 20s. Crude oil, really amazing stuff. I mean, yesterday in the futures markets, over $120. It was really a psychological threshold, let's call it. And with the Strait of Hormuz restricted, it's creating production problems because you've got some major suppliers that have cut back production at a time when there's a global shortage right now of crude oil and even refined products, you know, with the UAE and Kuwait cutting production just because they can't ship the product off their shores through the Strait of Hormuz, which controls approximately 20% of total global traffic for crude oil and products. So with that said, again, nice pullback because the administration is looking very closely at, looking at, getting prices lower as this conflict continues to escalate. And unfortunately, this last weekend, too, a lot of the strikes were hitting some Iranian facilities, which, again, created an exacerbated move in the pre-markets and, of course, in the overnight sessions. But it's good to see that investors are taking risk. When the crude oil market started to subdue a bit, the penchant for risk-taking right now is really concentrated in where the growth really was in the past year, and that's in the semiconductor space. You'll notice like NVIDIA, Broadcom, Micron, SanDisk, the usual suspects in the memory and storage space are higher, but also as a group, the energy stocks are down. One would say maybe that's a good sign to say that perhaps crude oil has peaked, but it's too early to tell.
It's too early to tell, as you make the point. They're, cutting production because they have nowhere to store it. And they can't move it, as you said, through the Strait of Hormuz. So it's not a production problem, it's a storage problem more than anything. I mean, the demand is there, but they have nowhere to ship this out and send it or store it for the moment. And so we also had, I think you may have read about this too, but there were a lot of options plays out in oil over the last 24 hours too. It was interesting because it looked like people were a little more long on Brent, and they were shorting West Texas. So I do think that there was some volatility caused by some of the action in the options market, in commodities in particular. Other sectors, before I get to HP Enterprise, any other sectors standing out?
Yeah, like I said, I think the technology sector is looking interesting. It's slightly higher right now, just fractionally about 0.3%. But within that sector, we're seeing last week's winners fall down, and that's the software names like Salesforce, Palo Alto. So it looks like there was sort of an intra-sector rotation or dispersion going back into tech hardware and semis versus software. The other thing you got to keep in mind is discretionary stocks, as well as, again, looking at financials, also relatively weak. Those are the two worst sectors out there today. And again, the yield curves in the bond market is relatively volatile right now because the market is trying to anticipate whether or not, energy price shocks will be inflationary or stagflationary for that matter. But at the very least, we are seeing a little bit of a relief pullback in the 10 years you mentioned, Nicole, and that's creating some less apprehension, let's call it, to take some risk in the market.
Yeah, and look, I'm looking forward to some of the economic prints, and we'll get CPI and PCE and some housing data, GDP, JOLTS, just to name, and consumer sentiment. We have a big week to sort of digest, particularly after last week's jobs report, which is not so great. Let's talk about HPS
There we go.
too, because we also have on our list.
That's what Jimmy needed.
Yeah, I mean, we have to consider, also news associated with that are company specific. We've got some big names like Hewlett Packard today, Oracle tomorrow. If you look at Hewlett Packard, I mean, this is a legacy IT infrastructure, products and services company. They're participating in the mega trends that are secular in nature with data centers and cloud connectivity. Their intelligent networking products, but also Hewlett Packard had to absorb the Juniper acquisition last year. They took about $1.4 billion in asset acquisition charges. So maybe this year they'll start to show that manifestation, positive manifestation of the Juniper acquisition. In fact, if you look at the quarter they're about to report, estimates for EPS are expected to be quite high, about 21% higher at 59 cents. And sales also at around $9.32 billion, higher by 19%. So they're going to be talking about probably the DoD, which increased their backlog.
Now we just got to break the 200.
Products and services to modernize the DoD's infrastructure. But at the same time, I think the company will probably give us some insights on the acquisition, as well as how that'll improve margins going forward. But this is a quarter. I mean, just these numbers are quite high relative to this.
1 second, big red candle.
So going into this quarter, there's a lot riding on the numbers.
Okay, George, it's great to see you. George Sillis, thank you. Good big picture look there. The Dow right now is down 415 points. Let's bring in John Bryant, Chief Equity Strategist and Economist at Zacks Investment Research. What are some of the conversations you've been having over the last 24 hours? There's certainly some nervousness in the market. Some people have put some cash on the sidelines. Maybe they're sort of skimming a little bit, taking some off. But no one says I'm out or anything like that. Most seem to feel it's a blip.
Well, Nicole, we've been through
policy
uncertainty now with this administration for over a year. So I think it's just being priced in. We now have this constant stream of news that's policy related. This is just another version of that. The other thing I think about, Nicole, is 3% of U.S. spending is oil and gas related in the United States. And we're also a net producer and exporter of oil and gas. And the third point is, even at $100, $150 a barrel, we're going to take the broad CPI, which the Fed does not care about, up 0.2%, which is not dramatic. So the other thing to be aware of is the real salient event is probably 6 months from now when downstream suppliers get hit with the oil shock from the raw materials that are made from oil and gas. So, and that's wait and see stuff, and that gets back to my first point, which is economic policy uncertainty is the standard for this administration, so it gets washed out.
Understood. I mean, how are you going to play some of these sell-offs? Do you see opportunities?
Yeah, I mean, George pointed out already, as your screen pointed out today, the tech sector is doing relatively well being relative. And that tells you everything on a down market day, that there's still buying activity on the revenue growth and the profit growth and the earnings growth that's out there, which is tech. I mean, if you take, first quarter 2026 earnings, they're 12%, but they're only 5% if you take out tech. So, the lion's share of this market is still tech, and there's going to be people in the face of this oil shock rule start nibbling all these names that get beaten up in the AI scare and outside that AI scare. So, it still remains a tech-driven market in the United States, at least. And I think, people are going to still, hold their noses and buy these names.
What kind of names in the defensive sector do you think can outperform or navigate through sort of war headlines? I mean, I won't even say a tough economy because we don't know what the economy is or the labor picture, but I know we're getting some war headlines. So what kind of defense stocks can make it through there?
Well, look, I think you got to stay with the chip names that are playing the supply-constrained environment of the AI business. I mean, Taiwan Semi is a name that's number one on our list right now. Again, Taiwan and Korea, the stock market's been hit hard by this oil and gas thing. They're going to get hit hard, but you got to buy stuff, where the wall world is rising and pick these names up. So, I think you got to stay with major names like Taiwan Semi or other names in the tech space that have, created big spaces. Seagate would be a name that I would like. NVIDIA, even if it gets a pullback, which is doubtful, I would like. So again, try to stay with the picks and shovels theme for now until otherwise noted. But also, I think, Nicole, we should also just keep people on tech ETFs and, on broad mutual funds that track ETFs and have a lot of assets under management, and not try to play any specific name per se. Because, that's the other solution here, is diversification is going to mean a lot in a market like this. With this much noise, stay diversified, stay with broad exposure to tech, and pick up the large cap names or the small cap ones.
We were talking a lot about, what happens next with oil. And, right now we're at $92. We had almost been at 120. A week ago, we were below 70. Where do you think we could be headed in the next week? Higher? Lower?
Nicole, it's worth looking at a WTI chart, reminding ourselves that we were above $100, $150 a share for like 3 years, from 2011 to 2014. We've simply forgotten about it. So the first thing to know is this level prices that you're showing on the screen, 92.50. We've been here before, and that was 12 years ago. So remind yourself that there's a resilience that's already baked into the U.S. economy from that experience. And that was a much more extended experience than anybody's anticipated here, which is only 6 months. The other thing is, I think, if we do get a pickup, Nicole, why stop at 150? 200 is certainly in the game here, particularly if you get a protracted conflict in the Middle East where all these groups stop talking to each other and they keep on fighting in the Straits of Hormuz past 6 months. Which is,
Whoa.
It
John,
can happen.
Hold it there, 150 to 200. What kind of time
Break
frame
it.
are we talking about?
We got to break the 200.
150 to 200? What kind of time frame are you talking about?
I'm looking at 6 months to 12 months, but not far past that, Nicole. I mean, it's very easy. We got $20 a barrel in a day, so we can get to 150 by next week. I mean, under the kinds of leverage that are being played out in oil futures markets, we can get there within a couple of weeks. But I would guess, given the people out shorting this market and a lot of the news, management that's going to go on for OPEC and our own administration, that it could go back down again. But 6 to 12 months, 150 to 200, no problem for a market like this.
All right, let's say you're on the public relations team of the administration. Do you really want high energy prices going into midterm elections? You're going to bring those back down. You're going to bring those back down. So if you go to 150 or 200, like you're saying, you got to bring them back down before the elections, no?
Yeah, well, this is the problem with this situation. This is not Venezuela. This is not Mexico. This is not even OPEC. This is Iran, and you killed the leader of Iran. So there is an amount of asymmetry to the price performance here that they cannot manage. And then, in fact, the counterparts that can manage it, the Iranians, are going to manage for high prices. Because if they want a different Trump that's easier to deal with, they would like a Democratic majority in the House to deal with. So the problem here is the president has handed over a lot of leverage to the Iranians here, and they don't have any incentive to hand it back. And that's totally different than all the other things he's done in the last year.
We'll have to wait and see. John Blank, thank you very much. Zacks Investment Research. John, thanks. Coming up, Options Corner, and Tom White is standing by. He will highlight unusual options activity from the day and how investors are looking to trade on recent news of Apple, which did get a price target cut today, Walmart, and Royal Caribbean. You know all those names. Those cruise lines have all been down with oil surging today. It's up off the lows. It's down 0.5%. We'll be right back.
Doon, 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 doon. IWM looking good. I'm at 310. I'm kind of green right now, but let's see if we can break it.
Whether you're an experienced investor or just getting started,
330, baby.
Charles Schwab offers a webcast that's right for you. Are you
50.
a long-term investor? Our investing webcast series breaks down different investing styles.
I almost get out here.
Growth, value, income.
In my
Best of all,
case.
you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com. Welcome
Now
back
we're
to the
talking
Watch
360.
List for Options Corner. We analyze unusual options trades we are seeing throughout the day. Real Trades, and Tom White, host of Fast Market here on Schwab Network, is with me, taking a look at this market. Before we get to some of the names you know here, let's first get a market thought. I know you've been watching the options trades on crude and oil surging and pulling back, stocks selling off, coming back off those lows. I mean, it's been a wild ride.
Yeah, and you just look at the oil market. It's been dictating what's going on in the equity market, and now we're seeing this massive slide in crude oil where it's barely positive after hitting nearly $120 a barrel. Now, it's not to say that we're out of the woods by any stretch of the imagination, but if traffic starts to go through the Strait of Hormuz again, Iran, opens that back up to, traffic, because remember, they're losing money on a daily basis to help them fund anything that they're doing at this point. People, you've got to remember that hey, they're not selling any old crude oil either, and they need that. They rely on crude for over 90% of their economy at this point. So if that starts to open up, what does that do? Well, it'll probably bring crude oil prices down quicker. We're probably going to see a little bit of stabilization in the equity market at this point, but I don't think we're out of the woods by any stretch of the imagination, because anything can happen. But it is nice to see that crude has pulled back pretty significantly here today.
Okay, well said, and so we'll continue to watch that. I mean, what an incredible move, right? It was nearly $120. I think it was $119.48, and now at 92. And less than 70 last week. I mean, it really is unbelievable. But, if you've been on Wall Street a long time, you're used to seeing some crazy moves. This one happens to be one that goes down in history for crude, at least. Let's talk about what's going on with Apple. You have a bearish trade you found.
Yeah, stocks pulled back, probably about 10% from those all-time highs in December. The super cycle may be over at this point. I think one of the concerns, there was a note on Citigroup today. They keep a buy rating on the stock, $315 price target, but they did say that memory chip prices are going to have to start to have a negative impact on sales. Now, as they come out with new products, they came out with a new iPad last week, a new MacBook Pro, some new chips that they're going to be using during their event on Wednesday.
Whoa, 450?
The next step is what type of new iPhone 18, pricing is going to be prevalent, because remember, they didn't really raise prices during the iPhone 17. We saw the super cycle with nice sales there. Will they have to raise prices for the iPhone 18, and will that stunt growth, right?
Baby.
Because finally we saw a resurgence in iPhone sales last quarter. So that's a concern. China shipments starting to fall a little bit from record levels that we saw at the end of 2025. Also a concern here for this stock, but did see some put buyers in here, and this was out in the March 20th monthly options, a 260 strike puts. Trader bought over 8,000 of those, paid an average debit of about $8.85. So the break
out
even
at 450,
251.15 over the next week and a half. That's about 2% below the current share price. So on a percentage basis, not that big of a pullback needed on this one. But yeah, some put buyers here in Apple with the expectations we're going to see some weakness over the next 11 days.
Okay, so we'll watch for that. I mean, it's all these guests who come on and talk about the Mag 7.
It's a variety, some like this one or that one. I mean, there's a lot of talk about Apple and agentic AI. So we will see. By the way, we were talking about the options market and oil, and it's funny because an article came out about Jim Bianco, who we know well, and he said that while right now we saw that the bet was for WTI to be to the upside, right, and which is exactly, well, the contract is up at the moment, but that, you know, people were shorting oil, but for next year that they have it lower. So, well, they're expecting it to be down from the levels next year in 2027 for those April contracts. So we will see. In the meantime, can we get to Walmart, where you found a bullish trade?
Yeah, this was one of the big winners in 2025. Still up about 10% so far this year, but has pulled back nearly 8% from those recent all-time highs. And this is based on the fact of, you know, increasing sales. They're beating their competitors. They're using AI and technology to increase their gross margins, which we all know in retail are pretty razor thin. But they've actually been able to grow their gross margins on most of their grocery products and all their other products that they sell. The tariff impact, if that goes away completely, that would be a benefit for Walmart. They did just announce a new $30 billion share repurchase program after they beat on earnings. They came in a little bit light on guidance. That's why we saw the stock pull back a little bit on that one. And that note that came out last week that OpenAI is scaling back its plan to introduce shopping directly inside of ChatGPT, that's being viewed as a positive for these retailers, including Walmart and others in this space. So maybe that'll help send the stock a little bit higher. But we did see some bullish activity in here, and this was out in the March 27th weekly options, so about 18 days to expiration. Trader bought over 3,500 of the March 27th weekly, the 130 strike calls. Paid an average debit of just about $1.03 on those, so the break even where this trader starts to profit is above 131.03 over the next 2.5 weeks. That's only about 6.5% above the current share price in Walmart. So some optimism on this name that's pulled back pretty significantly from those recent all-time highs, Nicole.
Right, and last but not least, let's take a look at Royal Caribbean. I mean, the idea here was that everybody was so excited to get a, you know, future booking and all that, but we know that oil prices are sort of hitting transports across the board. What do we think about some of these cruise stocks and Royal Caribbean in particular?
Well, I mean, we talked about oil at the kickoff of this segment, and thankfully oil did reverse because RCL was down over 8% at its session lows today, and it continues to fall off only about 11% so far this month now. On the rebound that we're seeing, it's still negative territory, but getting a reprieve. All the cruise lines, some of the airlines from intraday lows that we saw this morning in those names. Stock's still off about 25% from those all-time highs that we had in August for Royal Caribbean. Remember, they've got the best balance sheet out of all the cruise lines. Also, occupancy averaged almost 110% in 2025, and those good numbers continue, but the impact of higher fuel prices is going to negatively impact all these cruise lines because that's one of the biggest cost bases that they have besides employees is going to be fuel moving forward. So a lot of volatility recently, and I think this trader expects some more. And this was out in the April monthly options that expired about 39 days. The trader bought 8,000. The April 260 strike puts, paid an average debit, pretty hefty, $21.85 debit for each one of these puts. So the break even where this trader starts to profit below 238.15 over the next basically 6 weeks or so. That's about 13% below the current share price in RCL. Put volume about double normal daily average volume that we've seen over the last 5 trading sessions in there. So yeah, somebody's probably speculating to the downside. I wouldn't expect this to be a hedge because they're paying so much for each one of these puts. But a bearish look here in RCL.
And you know what I think about, and you and I have had this conversation, you know, these cruise lines have a lot of flexibility. They can, you know, have more or less shrimp or lilos or, I don't know, lays, whatever. They have a lot of leeway, right, on what they offer on a cruise, etc. But the areas where they have less leeway could be labor. Maybe you could have some fewer workers. But the one that you really can't really, manipulate in any way unless you're hedging and buying ahead of time, et cetera, and you have a contract, is oil. I mean, it costs what it costs to make that ship go. And so, that's what it is. All right, Tom White. Nice to see you. Thank you, Tom. All right, coming up, we'll dive into the current state of the auto industry. The co-CEO of Aptera Motors will join us. Think about solar, too, and EVs. We'll be right back.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the Watch List. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. I have a few movers for you right now. I'm sure you've been watching Hims and Hers, and this name is rallying. It's been trading higher. Right now, it's up about 39%. Had been up probably closer to 50 at one point. Novo Nordisk partnership. Well, it's back on, right? We're better together. Part of an agreement, Hims and Hers will now offer Ozempic and Wegovy injections and pills on its platform later this month. Novo Nordisk also dropped that lawsuit against Hims and Hers as part of this deal. GE Vernova, well, that's moving higher today after Redburn double upgrades the stock to a buy from a sell. The price target, $1,100. It's currently trading at $812. The analyst now expects sharp upgrades to guidance for both Siemens Energy and GE Vernova at the end of this year and into 2027. GE Vernova shares are up more than 25% this year. All right, let's welcome in our next guest, special guest, and that is Chris Anthony, co-CEO Aptera Motors. Thank you so much for being with us. And I think about the completion of the vehicle that you've had on the assembly line, and I know that there are orders, 50,000 of them. People are lining up for Aptera. Tell us more about the company and what it is that you're doing there.
Aptera is really trying to design the most efficient transportation. So focused on first principles engineering when it comes to aerodynamics, lightweighting the vehicle. And when you make a vehicle just for efficiency, you end up with something that looks very, very different, but something that gets extraordinary efficiency. The vehicle behind me gets around 350 miles per gallon equivalent.
So it's a 350 miles per gallon equivalent. This is a solar electric vehicle, is it not? Why now?
Yeah, when you use such little energy per mile, then you can add solar power to the equation, and this vehicle actually produces over 40 miles a day of free power in the summer. So, in a world where geopolitics has made energy more scarce, more volatile, this free transportation powered by the sun is something that we think the world really needs right now.
And what about these orders? I saw 50,000 reservations. Who's ordering? Where are the orders coming from?
Yeah, we have over $2 billion in reservations for the vehicle. They come mostly from North America, about 85%, but we have orders from over 141 different countries. So really a global footprint once we start shipping. And I'm sitting on the manufacturing line right now, and we just rolled out our first production vehicle off of our validation line, and we're looking to hopefully deliver the first units by the end of this year.
And so the North America story, which is about 85% of that 2 billion of future orders, I mean, are you likely to see more, are you seeing more orders coming from, let's say, the Sunbelt states versus Michigan, for example?
Yeah, the Smile States are where people will get the most yield from their solar production, obviously. But even in dreary places like New York and Seattle, you still get about 8,500 miles a year of free power. So that's power that you can use every day. You wake up, your vehicle's fully charged, and you just drive it.
So, how big is this car? Is this going on a parkway or a highway, or is it more for town?
It's actually larger than it may appear in pictures. It's as wide as a regular pickup truck, a Ford F-150 pickup truck, and it's as long as a Prius. So it's got lots of useful space in the back. You can actually camp in the back of the Aptera. We've got a tent that goes over the rear. And it's really cool to think that you could drive a couple hundred miles to your favorite camping spot. You could camp for a week, and you could actually come home with more power in your Aptera than you left with. It's really the first vehicle that produces its own fuel.
And I was thinking also about how you compete with the other electric vehicles. I mean, I think that this one's different because you have solar, and that's a added benefit. You don't have to plug in to get that 40 miles from solar, assuming you have a nice sunny environment. How do you compete against other electric vehicles when we know a lot of our big companies here at home have said they're backing off on EV production a bit. It's a little less of what people want lately. What's going to be different about Aptera's, vehicle?
Well, even with electric vehicles today, that power has to come from somewhere. The great thing about the Aptera is it's grid independent. You don't have to stop at the gas pump. You just leave the Aptera outside and it charges itself. We really are creating a whole new vehicle category, a vehicle category of vehicles that fuel themselves. And, in that regard, there really is no competition for us. We're the only solar mobility player. And this is the only thing that exists that you can just leave outside and let it charge and use it for all your daily driving needs without having to worry about a plug or a gas pump.
So you made one, right? You made one and it came off the belt. Is that where we're at right now? And it's very exciting that it did exactly that, right? Is that where we're at?
Well, we've gone through 4 different kind of prototype development cycles. Some of the vehicles behind me are some of those earlier development vehicles. And now we've started our production line. So the first vehicle has rolled off of our validation line. That's really how do we balance the line? How do we learn about how the parts actually hit the vehicle on the floor? How do we manage our inventory? And we'll be stepping through that process for the next 3 or 4 months, learning about the manufacturability of the vehicle, and then hoping to scale up for full manufacturing by the end of the year and delivering to a customer and then scaling in 2027.
So I want to ask you about chips and parts and things like that. But, the margin on the vehicle, are you going to clear a profitability margin on the vehicle based on the price that you will charge for this vehicle? Or not yet?
Yeah, long term, we hope to price the Aptera for a 400-mile range edition at about $40,000. For a vehicle that produces its own fuel and you never have a fuel bill, we think that's a pretty great value. And long term, we think that could make us around 17 points of gross margin. And we want to be a happy and healthy company that can grow and not just deliver this vehicle, but other variants in the future that could handle package delivery and commercial applications and all sorts of things in the future.
And how do you, get with all of these big guys to sort of work with them? I don't know. Do you need to work with any of the big car distributors or any of the other
It closed in public offering a month ago.
Separate from everyone.
Well, the great thing about the EV industry today is they've really paved the way for direct distribution. So, of the almost 50,000 orders we have, all of those have come to us through our website. We expect to deliver those straight to the customer, so we don't have to have this large brick and mortar base to start from that other vehicle manufacturers would have to do.
I see a great photo of everybody on the team there. The first Aptera off the validation assembly line, and the whole gang is there, and it looks great. And congratulations to you and the team. I wonder also about the labor picture and the parts and the chips. These could be the wild cards. What kind of chips do you need? Are you going to have the supply? Labor, is it going to cost you an enormous amount or just right? Can you answer some of those questions?
We have an amazing team here in San Diego. A lot of people have been drawn to this project because it really is bleeding edge engineering, much more like designing a Formula One car or spacecraft than a traditional automotive. So we've got amazing engineers here that have worked their butts off to deliver this first vehicle. But we do have a global supply chain, and we have supply chain partners in Asia, in Europe, all over North America, and they're coming together to produce subsystems that get shipped to Carlsbad, California here. And we're really just a light assembly factory here. So, there's only about 136 sub-assemblies that go on the vehicle. We have a 14-station assembly line. So about 10 parts per station get put on by 2 technicians. And it's really just a couple bolts or connectors, and then it moves on to the next station in about 12 minutes. So we can get about 40 vehicles a day per shift out of this factory, which could be 80 vehicles a day once we move to 2 shifts, which is around 20,000 vehicles a year just for this facility. But we hope to have a facility in Northern California, Texas, Australia, all over the world eventually.
That answered all my questions. How many cars? Where are the next factories? Northern California, Texas, Australia. Okay. Chris, it's great to chat with you. I look forward to hearing more about this and seeing
Keep this
you
on watch.
the streets soon.
SEV.
Co-CEO Aptera Motors, SEV is the ticker symbol. Down today.
Sounds kind of neat, but
coming up, have you been buying, selling? What do we need to know? Guess what? Joe was standing by from Charles Schwab and looking at the mindset of the retail investor. He joins us with Schwab's stocks report.
Ladies and gentlemen,
what he was doing over the last month of February.
From 220, they went to 640, 660, probably higher. Probably went to $7 or $8. Am I correct? Say yes or no. Love and raise me. Da 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 da. SMCI keeps bouncing off that 29.90. SMCI. Time to go get some more water. I'll be right back. If anybody have a problem with that, please contact Shelley West. Resistances just don't hold. It's been one hell of a day. The resistance just don't hold. in that last trade at $4 and it dipped to $1.95. I had it at $2.20. Sold it at $4.50. And it went to $7. Whoa. Okay. Well, shit. You know, that really hurts. I sit there talking about it. We were down here and I said, oh, I know exactly what I said. I know exactly what I said right here. Let me see. Oh gosh. Did I just see that thing break out again? No. So I'm sitting here and we're breaking out. So we got us a snake here. We're getting ready to break out. And this is the hardest part. Trying to identify the bottom of a trade and then getting in it and waiting. It's the hardest part. So I was already stuck in this trade when we hit the 200 and I added on. And then bam, as we start to break out, I was starting to get a little bit more confident. But I knew we were going to pull back a little bit. I was down about $300 in the SPX. I was down about $300 in the SPX. And then I added on. And I played my song. It didn't take long. So it didn't take too long. And we had that little pullback. The 9 crossed to 21. And then it was smooth sailing all the way back up. But there's a couple times in there where it's just like knife in 1 minute. You go like, God, I just lost it. I'm back down. It was a sharp road down the hill. Then I counted to 3 and we broke the snake. Yeah, so we got one of them, 2 bits, freebie, boom, pull back. So we got 15 minutes to power hour. I have a feeling the days are getting shorter. Okay. There's another one I wanted to look at here. I want to look at Mikey's little stock. Mikey, the guy that's pumped this for 4 years. Hey, Mikey. Mikey! You know when you see shit like this? Yeah, that's horrible. Bronstein, Gorwitz, and Grossman, LLC urges AMC Entertainment Holdings investors to act class action filed allegedly investors harm. Too bad, OAMC, you're in trouble. This is how I'd play AMC. If I was a well-wisher, I'd buy 20,000 contracts or 20,000 shares, and I would sit on it and put a sell for about $2. So when it pops, it'll automatically sell. Not even worry about it. That's how I'd trade this right now. I'd almost want to trade it just to show you. Goldman Sachs. Oh God, that thing's so damn expensive. This is ridiculous. I feel like shorting it. Three years ago, I was $289. 2.5 years later, I became almost $1,000. I was up almost 300% in 2 years. 300% in 2 years. Woo! Okay. Damn. Oracle. Is Oracle gonna get a second chance? Is Oracle gonna get a second chance? Oh man, Oracle. I think Oracle's gonna get a second chance. I really do. I really do. It's sitting on the 200 SMA on the weekly time frame. Don't that sound lame? So that definitely looks good. If you want my opinion, and I'd set an alert to get into the trade right at, to the penny, right at 141.86. 87. That's what I'd do. I'll call that off the 200 SMA. It might not even go back there. I'm liking Oracle. He likes Oracle. So, next... NVIDIA's on the rebound, and Amazon. So Amazon is at the 100 on the weekly time frame, head and shoulders. Been consolidating with higher lows for the last month. That's Amazon. Bulls believe everything Elon says. Who in the hell is this? Tesla, 20% crash may be just the beginning as... Golly. Oh, they're really critics now. They want this market pulled back. NVIDIA's $4 trillion empire rests on a country 98% dependent on the Strait of Hormuz. Really? If that's the case, then we just need to go ahead and take over Iran. We have 5 minutes before power hour, and that last trade made my day a little bit better. I've had 3 stops today, 3 red trades. We're going to the SPY. See, this thing really needs to pull back. It does. I mean, if I had enough balls, I'd short this to 20 bucks at least. If I was man enough, if I had balls, I'd take the trade, baby. enough and I had the balls, I'd take the trade, baby. Slam me in a wall when the SPY drops to 650. Whoa. So if I had enough balls, I'd take this down here, 645, 650, easily. I set my alert. Hope you don't got a problem with that. Let's see what else I got down here hiding. Target down 221. PA&W Kroger is back up again, 74 bucks. And we got Home Depot. Now here's one that should be springtime stock. Oh my God, this, ladies and gentlemen, I know you can't see in the mess, but Home Depot is found some place to rest. That's the 200 EMA and SMA on the weekly time frame. The last 4 times we've stopped here, we've had enough time to drink a beer and bounce off this 200 EMA and SMA for a whole year. Let's take this thing for a ride. I'm sure we can take this one here for a ride. Yes. My God, can't you see it? Can't you see it? Oh my gosh. Now I got to figure out how I'm going to trade this. I figure I'll go out about 6 months, maybe 3. $200 EMA and SMA. Oh, yeah, there we go. Well, we got a problem here. It's a major problem. Yeah, let's do this. One bus. Two bits. Freebie. And Forbes. That sounds pretty interesting. It's going to be a spring sale. Oh, that's HD. HM. Human error. Oh, you're in spy puts? You're down a lot. What the hell? What are you doing? You mind spy puts? I ain't in spy puts. Let's get a correction for this guy's erection. He needs to make some money on some puts. Let's get a correction to help this guy's erection. He wants to make some money on his puts. That should help. He says, I can't have an erection. I'm a female. Oh, I just took that alert off. Well, that's way down there too. That's $30. There's times when I wish I was a female. I would never have to throw any bail. There's times when I wish I was a female. There's a time when I wish I was a female. I'd fool every male. I'd fool every male. Transsexual month was last month. Sorry about that. This is lizard month. Iguana. Okay, well, Jimmy likes Home Depot. Oh, I was going to look at some options here. I would say 3 months out. April 17th. And no comprehendo. May 15th, no comprehendo. Well, that kind of spoiled all that fun. March, no comprehendo. I'd be interested in wanting to get into this thing. So April 17th. They're so damn expensive. So we're at a double bottom now. Triple bottom, quad bottom. Below the 200. We break that. We got a 1, 2, 3. We got a triple top down here. Jimmy waits. Jimmy waits for the triple top. And I'll set the alert. The alert's been set on the SPY. And we're going to go to the SPX. And we've bounced off to 63 with the head and shoulders. 667755. 667766 is the VWAP on the /ES. Oh God, look at it go. Okay. He's acting a little crazy. Looks like it wants to break out. Hello, Silver Bullet. I'm not as crazy as I sound. Looks like we're having the breakout. We've got one more pedestal to break here, and that's the 50. SBUX I haven't seen in a bit. SBUX. Ooh, gosh. I think Starbucks has bounced up, hasn't it? Oh, yes. Well, there's your pivot point. Somewhere right in here, somewhere right in there. I like there better than here. Right there. So we're going to tag that up. Right there. Set alert for 9660. Washboardjim's trading alert for Starbucks at 96.75. And I'm going to call it a pivot point. Pivot point. P-I-V-O-T, P-I-V-O. Okay, let me try this again. 1 and 2 and a 1, 2, 3. P-I-V-O-T, P-O-I-N-T, P-I-V-O-T, pivot point is its name. Oh, bam. Okay. Alert's been set for 96.75 on Starbucks for a swing into spring. Wolf Research down. Whoa. Wolf Research downgrades Starbucks to pure perform. Beyond Meat reiterates breakfast sandwich at Starbucks. Oh, well. That'll boost it. Fake meat with fake coffee. This is big news. Today we will be giving away sausage wieners with your mocha coffee. After hearing the countless fans across the UK asking for the return of their favorite plant-based morning staple, we are thrilled to announce that Beyond Meat breakfast sandwich will officially back at Starbucks. Oh, that is interesting. Starbucks went woke. I mean, fake meat went woke. It makes sense. After hearing some countless fans across the UK, asking for the return of their favorite plant-based morning staple. We are thrilled to announce that Beyond Meat breakfast sandwich is officially back at Starbucks in UK. It beats a Big Mac for dinner. Yeah, it's fake meat. It's fake meat. Oh. Always clean. May I help you? Yes. Hello. Is this an intel agency looking for talent? You heard me on YouTube singing about fake meat? Oh. I'm sorry, but I'll be busy that night. I'll be what? Flown to New York? Heck yeah. Bye-bye. Okay. Just another fan. Have a lot of problems. Okay, well, that's fake meat for you. Looks like we're having a breakout over here on tech stocks. Oh my God, what's going on here? NVIDIA, all of them. TSM, Google, PLTR. What's going on here? God, look at it. I'm not sure how he does it, but his name's Washboardjim. You could see him live on YouTube. He sings a song and all of a sudden the stocks start running. Oh God. What's going on here? Do we have any news? Mr. T? Well, things just got real interested. I said we were ready for a big win. I said it. Oh, this is... I don't know what to say. I'm in this amid GF efforts, steaming surging crude oil prices. I can't find no news. I can't find no news that's making this market run. I can't find no news that's making this market run. We just had 3 white soldiers on the SPX. I can't figure out what's making this market run. There's no news coming out. That's no doubt. That's no doubt. What the hell's going on here, man? Aerospace Commander General says missiles with warheads lighter than 1 ton what? Trump open to Kameli being killed if he doesn't Cede to U.S. demands. Damn. Trump? Come on. Jeez. I can't find nothing. Short on oil? War could be over soon, huh? War. Who needs war? What are we fighting for? War.
He's got a lot of tailwinds that can help this market go. So we think it's very temporary, and you're right. And watch, I'm looking at these markets live, just like you are, that are moving very green. And if you would have...
I believe in God, Senator Don, keeping old Castro down. So when it came my time to go...
Hey, Jim. Well, and not only that, Jim, but I was the winner of the Songs You Can't Play for Mama contest down here. And, well, I can't play that on the radio. You know, it is a song I'm prepared to play for you later. Here. This is a song called Parade. It's a song that was my father's favorite song of mine, and he told me it was the best song I ever wrote. So I lost my father this year in April. He was sort of the foundation of our campsite. So I'll send this out to my father.
Saturday morning, went downtown. People laughing, walking around. I drove up the avenue, trying not to think of you and how I wish you just stayed. And I was feeling like the only guy without a reason to have a parade. I kept on driving, I kept on thinking, looking for a reason to not start drinking. I stopped the car and popped the trunk, I rifled through a pile of junk that's been there since the 12th grade. And I was feeling like the only guy without a reason to have a parade. Well, there's a breakfast at the middle school, but I ain't going there. At church, a wedding party's throwing rice into the air. I follow trucks with motorboats going to the lake. I watch them pull their fleshy goats behind them in their wake. Here comes a fire retro baseball team. We're number one, all the children scream, and their freshly laundered uniforms have me wishing for a thunderstorm. I know my grandma seemed betrayed, that I was feeling like the only guy without a reason. Feeling like the little team all out of season. Feeling like the only guy without a reason to have a parade. Here comes the marching band marching along. They're stepping, they're playing, they're humming that song. They're wearing silly strap-on hats, monkey suits, plastic spats, the baton twirler sachet. I was feeling like the only guy without a reason. I was feeling like a little league team gone out of season. Feeling like the only guy without a reason to have a parade.
Thank you very much. Him and I used to jam together years ago. Del Paso Lacqua. And we'll keep moving up. NVIDIA's Tesla's at 400. We got NVIDIA just hitting the yellow line at 181.94. Amazon turned around. Everything's turned around, man. I'm scared. Jim said we were gonna bounce off the 200 EMA SMA last night. Ain't that right, Randy? Ain't that right? I said, look at the 200 EMA and SMA on the weekly and daily time frame. Said we're about to bounce. Ain't that right? God darn, 150 contracts. Woo! God darn, man. Hey, on a breakout like this, you want a 50% pullback on the Fibonacci, or take it off the 9 and scalp it. But I think we'll come back and hit the 21 on the SPY. Alex Coffee's back. Alex, would you like to sit down and have some coffee with me? Alex, would you like to have sit down and have some coffee with me? Alex Coffee. I thought it was just a joke, but it's not. Your name is actually Alex Coffee. Oh gosh. I might try to walk the United States just playing my guitar as my last deed of death. Starbucks, $100. Starbucks $100. Beyond Meat breakfast sandwich at Starbucks. I think I might have one. I think it's a good idea. I mean, I hate to bring politics into it, but once you go woke, you go broke. AMD new high. We just broke 202.89. Or we did hit 202.89. What to do now? This is power. We got, 26 minutes left? Are you serious? Something ain't right. Tesla's back to 400. Continued direct communication. Well, I think I'll go get me a hot tea going, or a hot cider. Let's see what this chick has to say over here. Oh, this guy.
That the war could end soon. The markets.
This guy's
like what
funny.
they're hearing. What do you make of it?
Well, Sam, it's right on schedule. This morning, we always write a morning capsule. Before the market opened, when everything was down, the headline of our morning capsule was, Trump positioned to declare victory. So we expected that to come today, tomorrow, somewhere in here. So it's right on schedule. I mean, that's how President Trump works.
All right, so where does this leave the case for markets then? I mean, you know, it just goes to show how sensitive they really are.
There's something scary about this dude.
Situation. I mean, earlier this morning we were dealing with lines out of Iran that you must be very careful passing through the Strait of Hormuz, and then of course everyone's waiting for this G7 meeting now on coordinated oil release as well. They're apparently going to be meeting in the morning. What do we make of this? I mean, it just feels like things can sort of turn depending on what sort of development or Trump Truth Social or line we get out of the Middle East.
Well, it's all in President Trump's hands, but you know, it's not all clear. I'll tell you exactly what we did. So we, on the Friday, the war started on Saturday, the Friday before, we were very fortunate, you know, we were very algorithmically driven with our models. So our systems gave a signal to raise cash and raise hedges, meaning it's not, we never do all in, all out, you know, it's gradual. So we raised a fair amount of cash and hedges before the war started, and today we're deploying some of that cash and some of the hedges, some of those hedges we're buying But some of the cash that we raised is still not being deployed, and some of the hedges we set up just before the war started are still in place because the uncertainty is there. You know, once the war starts, it's not all in President Trump's control. We don't know what happens. We do not know how Iranians are ultimately going to react. They have a new leader. Just like President Trump has a need to declare victory, the new leader, I think, is a hardliner and in Iran, and he may have a need to show that he's a strong person, and he just did not, bow to President Trump. So we don't know how it's all going to work out. So I'll be a little bit cautious while buying today. But we're still holding more cash and more hedges now than we did before the war started.
Okay, so it's hard to tell if we're in the all clear yet, but obviously markets are rebounding. If you're holding on to cash, what is the catalyst then to deploy some of that and where?
Well, so we're all consumed with the war right now, but we have other issues. We have still the private credit issue. We still have the issue of the jobs report that we got that was very, very negative. Oil may settle down, which I think will pull back, but may hang in there a few dollars more than where it was before the war started. So the next inflation numbers may not be as good. So unless there's a news that becomes all clear somehow, I think after deploying cash today, we'll be a little bit careful before deploying more cash. The oil release from reserves, which everybody's talking about, is great. But historically, when we see, it doesn't make a whole lot of difference. When President Biden did that, he was trying to lower the oil prices, or gas prices for consumers. And in the end, it ended up like 19 cents difference in gas prices. So it's not a whole lot. So we'll have to see.
Biden, don't compare Trump to
Besides the
Biden.
war, we need to look at economic view, what AI is doing, how jobs are going to do. So got to be tactical somewhat.
And how are jobs and AI doing in your mind, Nigam? Because even before we had this latest
This
energy
guy's
shock,
trippy looking.
obviously the market was freaking out about this disruption fear in a lot of the SaaS companies. We were also dealing with data that had been suggesting that the jobs market was indeed holding up. There had been some resiliency, and everybody seemed to be cheering that until Friday when we got that jobs report. Now, it remains to be seen. Look, it's just one print if we are in the all clear, or whether that is a trend yet. But how do you invest with an economic backdrop like that still remains uncertain, and then a lot of questions and uncertainties around the AI trade?
Right. So when it comes to jobs, I see a lot of projections. Some people say it's not going to make any difference, and there was an article that got a lot of publicity that we're going to lose like 50% plus jobs. We don't see that. I think we're going to see anywhere from 6 to 15% job losses because of AI, but then we will gain part of it, part of those jobs. So in the near term, which I'm talking about next year or so, we're going to lose maybe 5 to 10% of jobs. I think that's what we're looking at. So we're not looking at a huge thing. And so then it's going to come down to the question is, what do those people do? What's unemployment rate is going to go higher? How much? We got Kevin Walsh coming in. He probably will cut interest rates to counter that. And then that will be supportive of the stock market. Again, I think our most likely scenario is that we're going to be range bound in the stock market. And so we need to be opportunistic. Essentially, when there are dips, we buy them, and then, when the risk rise, like just the day before the Iran war, several things came together, right? Several things came together. One was the bloc deciding to cut half of its jobs, so we knew that was going to create a negative sentiment. They're looking at the CPI number that week, looking at their own risk, and some other factors, technical factors. That's how we were able to give a signal right before the war to raise cash. And today it was fairly simple. As I said earlier, this morning when the market was down, our headline of our note to our members was President Trump positioned to declare victory, because President Trump is looking at midterm election, which is not that far. He's very sensitive to gas prices. He's trying to bring oil prices lower. He's also very sensitive to the stock market. And in all fairness, he has not achieved all of his goals, but if you look at it carefully, his main goal was to weaken Iran, which he has done. So, he may say, well, we can continue this conflict, but there's not a whole lot to be gained, so might as well declare the victory and focus on election. What do the governments do always before the election? They do everything they can to win election. And then also we have tax refunds here. Tax refunds here this year are bigger than prior years because of the big beautiful bill. So that's going to bring up consumer sales, retail sales over the next month or two. So there are positive things, but I think the backdrop of geopolitics, what has happened here, is going to kind of stay with us. So that kind of most likely scenario puts us range bound. So how do you invest? Well, long-term strategic positions, we stay with them, and then we do some dynamic hedging and dynamic allocation to short-term trades like we're doing, and take advantage of those to add to our returns. So that's what we're going to do.
Okay, well, for now, the reports of Trump's comments, there seems to be some sort of relief valve for these markets. Nigam, always appreciate your thoughts. Thanks so much for joining us. We have to wrap it up there. We've completely run out of time, but we'll catch you next time. Nigam Arora, founder of the Aurora Report. Coming up, more on the Middle East. We will find out why our next guest says Iran has an incentive to prolong the war. We'll discuss that next. Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. I'm Sam Barnes alongside Alex Coffey to continue our focus on the Middle East and this conflict.
Oh yeah, I was going to do my
David Wu,
tea.
founder of David Wu Unbound and the author of The Merry-Go-Round Broke Down. David, always nice to see you. So the market's staging a nice rebound off the back of these Trump comments saying the war could end soon. What do you make of it?
I would fade it actually. I think I think that sentence doesn't have that much meaning. I think Trump probably figured out last week when he said that he would accept nothing than an unconditional surrender. That worried the oil market, drove up oil prices. Now he's trying to manage down oil price by talking about the war is getting basically very advanced. I think at this point, what it shows you is that Trump is deeply concerned about the oil price. Okay. Now we also know that I have no doubt the Iranians believe that high oil price is Trump's single greatest vulnerability. So the more Trump is going to sound concerned about oil price, the longer I think the Iranians believe are going to hold out in thinking that they've got Trump exactly what they want, because they believe that Trump will not be able to sustain a situation for more than 3 weeks when oil prices anywhere close to $100 a barrel. If they can hold out for 3 weeks and then still survive, then they can declare victory.
David, one of the things in markets, oftentimes the volatility of the situation, the movement of the prices is almost as much of the story as the actual price level. If you were to be told, hey, oil's going to trade between 85 and 100 for the next couple months, is that a better story than just any volatility, anything's on the table? Would you lock that in now?
I would say, I think that's a very good question, Alex. I haven't, I've been long oil since '60, so obviously I've just down 30% today, okay, from the high. But this is the way I look at this. Right now, whatever is trading, let's just call it 85, 90, is no man's land. It's not sustainable. Either this war is going to end for whatever reason, and then we're going to trade all the way back down to 60, or that this thing is not going to end. In my view, we're going to be trading back to 120 and maybe even higher. Because the reality is this, okay? So far oil price is up, whatever, 30, 40%, okay, from the low, which is consistent with the idea of the market pricing in the 2 to 3 million barrels per day of lost production, which is more or less how much Iran produces, by the way. So from that point of view, the market is not even really seriously pricing any kind of serious disruption to traffic through the Strait of Hormuz and so on and so forth. So what I'm saying is that either if this war is still going on for another week and if things are not getting resolved, then you're going to have to assume that Saudi oil exports, Iraqi oil exports, Kuwaiti oil exports, all going to be basically falling. And then you're going to have a serious shortage. So as I said, oil prices to me either should be much lower or much higher. And right now, in my view, I think Trump is not about to tackle because there's too much writing on this war for his legacy. I think he's not going to tackle. So my assumption right now is that oil price trades higher from here. And then you want to take advantage of the sell-off in the last hour to basically buy into it.
And David, you have held top FX roles at some of the biggest banks. I'm just wondering what you make of that dollar strength in the face of these higher oil prices, what it tells you right now. Some have pointed out to me that maybe it's about, some degree or relative immunity versus the rest of the world's vulnerability. What do you make of it?
I think that's part of it, but I think a bigger part of the story, Sam, is simply, positioning. I mean, just think about this. We went into last week the war. The market was very short the dollar, so the dollar did very well. The market was very long emerging market equities, and emerging market equities got destroyed. The market was short Bitcoin, and Bitcoin basically bounced. So the market was long steepener, so guess what? The curve flattened. So I think, over the past week, I would say much of the price action has been driven by unwinding of crowded positioning before the war. And I think now at this point, positioning is much cleaner. And at this point, it's going to come down to whether you think that the war is going to be here to stay or not. In my view right now, I'm still remaining of the view that, I'm not saying the war is going to last for 3 months, but I think the war is going to be messier than people think it is. And I think it's going to get uglier before it ends.
Okay, so David, for those who didn't see this coming, who weren't scooping up oil at $60 a barrel a month ago, oil at $120 wasn't even on the radar. It certainly wasn't in the models for many different funds and institutional investors and retail investors. It probably wasn't on the brain for many. Things are different now. And to your point, maybe it reverts, maybe there's a quick resolution, maybe it's a little bit messier. As you look at the lasting impact, regardless, we just had an oil price shock hit the market.
Yep.
Lasting or not,
How does it impact the growth story throughout 2026 now?
I think that's a very good question. I think what's interesting to me
Definitely a
is that
buy
in the
signal
past
this
week,
morning.
the market has been pricing this war as an inflation shock as opposed to a growth shock. To the extent that, as you know, rates are higher, but stocks are more or less unchanged from before the war. And what it's telling you is that, well, people think, oh, high oil price means inflation is going to be higher, the Fed is going to be more hawkish than otherwise, but, you know, we don't think it's going to matter too much for growth. This where the stock market is actually holding up remarkably well. And to me, there is something seriously wrong with that essentially that direction of thinking about the market that is an inflation shock. I think there is no doubt if oil prices were to stay anywhere close to $100 a barrel for more than a month, this is going to become a negative growth shock. I mean, in fact, actually, I would argue the Fed is going to be cutting rates as opposed to be hiking rates. So I think from that point of view, again, I think what this all shows you, the fact that the market is treating this thing as an inflation shock as opposed to a growth shock, is because the market believes that actually this war is going to be very short-lived, and this is because Trump is going to toggle, or that Iranians are going to blink first. But either way, I think these two outcomes are probably the least likely outcome in my view, at least in the very short term. And this is also the reason why I don't buy Trump's sort of trying to talk the oil market down today.
Okay. David, always appreciate your thoughts. Thanks so much for joining us today. We've completely run out of time. That was David Wu there, founder of David Wu Unbound. It's time now for Overlooked
I like
Stocks.
David Wu.
We're joined by George Sillis, a senior markets correspondent, to help us get across. We're covering Jefferies today. George,
David
talk us
Wu.
through what we've seen here, because I've seen that there's been a downgrade here. Obviously, we were already dealing with some of the concerns around private credit. Just talk us through the details of this one and the reaction we're seeing in the stock.
Yeah.
Yeah, I think this is interesting. I mean, first off, if you look at the general financial sector, it's down quite a bit this year. Actually started at the beginning of the year. And this is really a function of the concerns around private credit, which there's no really such thing as private credit. It's really tied into, you know, the balance sheet connections between assets and liabilities in the financial sector. So this whole concern, which is more endogenous in nature versus oil and war, which is more exogenous, I think it's still concerning. And if you look at Jefferies, which is a legacy investment in capital bank and a capital markets bank firm, you know, they provide M&A services, debt and equity underwriting, and corporate lending. This stock is down quite a bit in the last year or year to date. It's down about 40%. Now, some of the rationale behind it may be specific to just from Jefferies. And if you look at Morgan Stanley, they did downgrade the stock. They did move their rating down an equal weight from an overweight. The price target now is the street low at 49 versus 78. So this is about a $10, higher level than what we're at right now. And they're actually looking at the risk return of Jefferies as a firm right now as very balanced, considering the challenges this company is facing, but are specific. Western Alliance Bank is actually filed a lawsuit against Jefferies, claiming a breach of contract and frankly just fraud related to the underwriting of a corporate loan associated with a now defunct First Brand Corp, which was an auto parts supplier going back to 2025. So this whole lawsuit and the concerns about this this loan are really structured around the opaque nature of some of these private credit, asset and liability structures. And I think this is why, again, the financials in this short-term period in the last 3 months have performed rather poorly. Jefferies not excluded. So, the call from Morgan Stanley, they're looking at this as sort of a short-lived, decline in the stock, and as an opportunity, considering the investment banking aspects of their business is quite robust, which may offset some of the concerns around the lending and underwriting components of their business.
George, real quick, I know this isn't unique to the financial space, but I mean, it felt like these companies were climbing up like a very, very, I guess, inclined hill. Took forever to get to the levels they were, and then they just jumped off the cliff once they got up there. What's to say that the risk is just too great for investors who are looking at how quickly the picture can change?
Well, look, I'm just going to look at the top-down view. If you just look across the sectors today, the financials are near the bottom still, irrespective of how this market has rebounded significantly. So obviously the energy sector is lowest today because of the rebound in oil moving down or snapback. So I do suggest there are still some lingering concerns associated with the private credit markets, because really it's not necessarily public debt that's a concern at the federal level. I know a lot of folks focus on that, but it really comes down to the level of private credit or level of private debt relative to GDP. That's really a concern, because typically speaking, in major pullbacks and recessions, private credit as a ratio of GDP gets quite large. Right now we are quite large, and there's a lot of concerns about the buy now pay later markets, which are still very opaque. But nonetheless, again, you can't unlink private credit from regulatory commercial banks. They're all linked together in their balance sheets. And from my perspective, this sector is weak, particularly for a reason, because I think there's a lot of lingering concerns around it. But I could be wrong. It could be just nothing, or it could be something that just goes by the wayside.
George, always appreciate it. Thanks so much for getting us across Jefferies today, the overlooked stock for this segment. Really appreciate it. We'll catch you next time. We are nearing the end of the market session here, and what a session it has been, particularly in the last hour. So we will bring in Jeff Pierce to discuss this wild trading day and look at HPE's earnings on the other side of the bell. We'll be back.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so sometimes Next. Try it again. You could have done better. Please. Same goes for where you invest. Ding, ding, ding. Level up and invest smarter with Schwab.
HR, this place is incredible.
Okay.
That's where I get all your office supplies.
Okay, well,
Your call close?
it was definitely a slow day, not much done today. Trades I took at first, I just couldn't get it right. I decided to pause and then take a couple special setups, and that's it. So I'm getting out of here. Really appreciate everybody, and have a great day. Whoa.